That's the broad band we're looking at. But if the Nifty needs to swing around, there's going to be a big boy, ITC, that's gone into this, into budget day just yesterday. You saw a good pop out there. And that's always a stock in focus. Mangalam, please tell us, what do we expect out there?
Well, the ITC stock, if you have to, summarize the budget into just one stock, it has to be ITC. And absolutely. Why is that? Because if you look at the ITC range over the last many budgets, right from 2020, even if you go back all the way up to 2018, on a daily basis, the swings that we see on ITC are more than 5%, 10%, at times 11% as well. So that is the one stock to watch out for and has a fair weight on the index as well. Any tax increase leading to sub 10% of overall price impact would be a positive for ITC, because that will not harm volumes as much, and that will not harm, the illegal, the legal cigarette industry, because any more than that, the illegal cigarette industry continues to thrive. Add to that, you have any measures coming in on the dividend front, maybe ITC has a play out there. You have any measures coming in from the consumption front, ITC has a play out there. You have any measures coming in from tourism or urban consumption, ITC has a, foot in the door out there. You look at rural, ITC has a foot in the door out there. So if you had to, make a microcosm of the budget, it has to be ITC. That's the one stock I'll be most definitely looking at.
Well, and rest assured, Mangalam will be on top of that. We'll be telling you the impact of any kind of tweaks with regard to the duties out there. But, Mangalam and me have gone on for a goodish bit. Let's spice things up. Audience wants to hear what's on Hormuz's radar today. Hormuz, tell us, there are going to be a few stocks reacting to various news piece. Take it away.
Guys, and yes, it's a big day, and of course you keep an eye out on the usual suspects, right? The defense names, railway names, capital goods names, but of course can't not ignore earnings, and there'll be plenty of earnings reactions in today's session. It'll start off with IndusInd Bank, where the numbers of the profitability was down 39% from last year. The NII operating profit was also lower. Asset quality saw a marginal deterioration from the previous quarter, so we'll keep an eye out on that. ONGC reported numbers as well. You can see that on most parameters, the numbers were higher than expectations, but on a quarter-on-quarter basis, they were fairly okay. And Bandhan Bank, the numbers, of course, you keep an eye out for. The two numbers that you should watch out for is the slippage number, which was higher on a quarter-on-quarter basis, and the write-offs figure that has seen a significant jump compared to the previous quarter as well. Now, Vishal Mega Mart, first number released after listing. It's a recent listing, of course. The revenue growth of 19% was lower than the historical band, which is 24 to 26. And the also management said that there is subdued demand conditions within the consumer industry. And you see that in results of DMart as well. And the same store sales growth also stood at around 10.5% for the quarter. And there are some top level exits that have come in aside of the earnings. They'll watch out for Hero MotoCorp. Of course, they come out with auto sales numbers today, but CEO Niranjan Gupta has decided to step down. Vikram Kasbekar has also will also be the acting CEO from the 1st of May. And also watch out for Z Entertainment, because its acting CHRO, Dheeraj Jaggi, has also quit, citing personal reasons. And lastly, keep an eye out for Tata Power, where the company has signed an MOU with Rajasthan discoms, various discoms, to accelerate the rooftop solar adoption. So there are plenty of stocks to watch out for. It's a big day that's in the offing. Back to you guys.
All right, Hormuz, thanks a lot for that. Just before we, prep up for the big day, once again, tell you what's happening in the budget, get on top of that as well. Nigel, I was quite intrigued by the color of your tie and your pocket square. It's pink. What does it signify?
Well, Prime Minister said, right, the budget is going to have something to offer for ladies, for women. So that's one reason. The other factor is maybe the economy gets back into the pink of health. So that's the reason for pink. But what about you? What's with the color?
The green. Market wants to be in the green. That's what the budget wants. And you want, sustainability. At the same time, you also want the dollars to come back. What is the dollar called? The greenback. That explains the green and the pink. With that, we wrap up on this edition of Budget Breakfast. You stay tuned to CNBC TV18 for the continued comprehensive coverage of Budget 2025. It's CNBC TV18, your budget headquarters.
Quarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Sir, with your permission, I rise to lay on the table a copy in English and Hindi of the economic.
For the 8th consecutive time, Finance Minister Nirmala Sitharaman will rise to present the Union budget in a few hours from now. India's GDP growth is near a 2-year low. Can the budget unleash measures to fire up the growth engines?
It's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth.
The new boss at Mint Street has unveiled measures to boost liquidity after the deficit hit a 15-year high. With monetary easing expected to begin this month, will the finance minister announce fiscal measures to bolster growth?
System liquidity is still tight and there is deficit.
The system needs more is liquidity. Liquidity is very low at this point, as you know, negative, 2.5 lakh or so.
Artificial intelligence has taken stock markets by storm.
How do we make AI all pervasive?
Powered by AI. AI first.
Artificial intelligence.
Ready for AI. AI is providing some cushion to that.
But as the correction set in, investors are largely hoping for a status quo on taxes to stem the current downtrend. Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV18 Motilal Oswal Budget Headquarters.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters. We are here and it's just 3.5 hours to go before Finance Minister Nirmala Sitharaman presents her 8th budget. Team CNBC TV18 is out in full form. We're revved up and charged up, ready to go to get you that live coverage. I'm Surabhi Upadhyay. With me, as you can see, Lata Venkatesh and Prashant Nair. Good morning to both of you.
Morning.
Hi, all of you. Well, this is the first full budget of the new NDA government, and they have had enough time to formulate a 4-year growth roadmap for the first time. The key question in the market's mind would be, can the FM stimulate the slowing economy and yet bring down the fiscal deficit? Secondly, will she persist with the emphasis on capex, or will she concede a little more space to welfare expenses? And finally, is there some relief for the middle class, which is beginning to feel overtaxed?
No, absolutely. We all are, aren't we? Good morning, guys.
Good morning.
And by the way, before I start, I want to say that today's a Saturday, 1st of February, we see the budget. And we don't have foreigners at play. So, I mean, just
that feel big. Like that. I forgot it was Saturday. Good you brought it up, Prashant.
Well, the stakes are high, as Surabhi and Lata said, for the markets as well. After a spectacular rally till September on the back of copious domestic liquidity, the indices have lost over 10%. Will the budget be able to turn the sentiment around? Because the mood is somber out there, despite the rally we've had from Monday's lows. Private sector, will it take the lead from the government as far as capital expenditure is concerned? Can the government really sort of, push the private sector to do that? The budget, will it do something for mass consumption sector? Or will it be able to give a clear fillip to China +1 opportunity? These are the big sectors and the issues that the market is clearly and squarely focused on.
Absolutely. So lots to talk about. Let me then welcome in our editors first to lay down the agenda. We have Shireen, who will lay out the political setup. Lata, of course, will talk about the big budget numbers. Prashant will unravel the market expectations and the market setup. I will talk about the tax expectations that not just industry, but the Aam Aadmi also has on the tax front. And Reema will get us all the key stocks to watch. Shireen, let's kickstart with you.
In a few hours from now, Finance Minister Nirmala Sitharaman will rise in Parliament to present her 8th consecutive budget. It is going to be another record-breaking budget for the Finance Minister. The focus this time around, if you heard what the Prime Minister had to say at the start of the Parliament session, MGM, Mahila, the renewed focus on women, Garib, and Madhyam Varg, i.e. the middle class. That seems to be the pitch of the government this time around. But the big question, the consumption conundrum, does this signal the fact that the government will act and provide some relief in terms of taxpayers? That's the big hope. That's the big ask. Will the government deliver? The chief economic advisor certainly seems to believe that the consumption problem is not a structural, serious problem at this point in time. And he believes it's the private sector that needs to do more to actually rev up demand by way of wages and employment. So that's going to be the big one. Will they deliver on the tax relief expectation, at least in the 10 to 25 lakh bracket? Next up, the other C, the capex chase. Will the pace of growth be tempered? Once again, industry is going in with expectations of a 20%, 25% growth in capex. Remember, 11.11 lakh crore rupees was the capex that was budgeted in the last budget. Actual spending, and the numbers have just come out overnight, 6.85 lakh crore. So there is a big gap, and that was on account of the elections and so on and so forth. That also impacted growth. So we will have to wait to see whether there is going to continue to be that heavy lifting by the government on capex. Again, the economic survey signaling that the baton has to now move to the private sector. And that brings me to the private push. The private sector needs to pick up the baton on investments. That's been the government's nudge. That has been the government's pitch. Remember, the economic survey saying that, look, corporate profitability is at a 15-year high. You're swimming in profits. Do more to create jobs. Do more as far as wage growth is concerned. That's the message. We'll have to wait to see how that translates into policy prescription. Make in India 2.0. Will they bring back the concessional tax scheme that was phased out only last year in 2024 with a 15% tax rate or an 18% tax rate for new manufacturing units? That's the big question, and that's the big hope. New PLI schemes, perhaps at least as far as the component sector is concerned, for the electronic space. This has been an ask, and this is something we know on record from Ashwini Vaishnav that the government is working on. Will it come in the budget or outside of it is the big question. Unlocking untapped sectors, the low-hanging fruit, tourism, labor-intensive sectors like textile, apparel, job-creating sectors like footwear, furniture. Will these get the government's focus and attention is the question. Through the economic survey, deregulation, the word deregulation and regulation appeared 350 times in the 481-page economic survey. The government clearly may want to signal more ease of doing business at the central government level and also try and push for that at the state government's level. Will there be a framework that will be announced is the big question. And finally, fiscal consolidation. You know, there has been a lot that's been said. Why are you wedded and obsessed with this fiscal deficit number? Let there be a little bit of a slippage. But if history is anything to go by, in the last 10 years, the government, with the exception of the COVID years, has stayed course on the fiscal consolidation glide path, and the expectation is that they will not veer away this time around either. So it's a balancing act that the finance minister will have to deliver. Certainly more challenging situation, a more challenging growth environment. 6.3 to 6.8% is the growth assumption that the economic survey is going in with. What will she deliver on? What will she sacrifice? We will tell you right here on CNBC TV18.
The budget exercise begins with first ascertaining how much the economy will grow. That is the nominal GDP. The fiscal deficit is, after all, measured as a percentage of the nominal GDP. How much taxes will grow will also depend on how fast the economy grows. Now, a poll of economists showed that nominal GDP growth for FY26 will be assumed at 10.2 to 10.3%. This is still higher than the 9.7% for this year, which is revised lower from the July budget assumption of 10.5%. What will this mean in terms of actual GDP number? The current year, that's FY25 nominal GDP, has been calculated by the MOSPI, the Ministry of Statistics, at 324.1 trillion rupees, less than the 326.3 trillion rupees assumed in the July budget. A 10.3% growth over 324 trillion rupees works to about 357.2 trillion rupees. All economists expect the government will stick to fiscal discipline and bring down the fiscal deficit to 4.4 to 4.5% of GDP. This will be easier, some say, because they expect even the current year's fiscal deficit to be lower than the budget estimate of 4.9%. Now, a fiscal deficit of 4.4 to 4.5% of a GDP number of 357 trillion means actual deficit will be about 16 trillion rupees. 70% of this is borrowed from the market. That will be 14 trillion. The bond market is absolutely comfortable with that number. Now, deficit is revenue collection minus expenses. So what are the tax revenue and expenditure assumptions of the market? Gross tax revenues are seen growing just slightly faster than the nominal GDP at a pace of 10.7% to 42.2 trillion rupees. Within this, direct taxes are seen growing by 12% in FY26, slower than the 14% growth this year. Within direct taxes, corporate taxes are seen improving from this year's very poor showing. Income tax, which has been growing at a steaming over 20%, is seen mellowing down to a 15% growth in FY26, partly because many people are expecting tax cuts, and partly because capital gains and STT may not contribute that much in FY26. Now, on the non-tax revenue side, the single biggest number to watch is Reserve Bank dividend. In FY25, the Reserve Bank gave a generous 2.1 lakh crore rupees. Some economists have assumed the same number for FY26. Some are assuming less. But the Reserve Bank dividend can make a big difference to how much the government can spend. The expenditure side is interesting. Every economist agrees that the government won't be able to spend the 11.11 trillion rupees budgeted as capital expansion for FY25. Capex was budgeted to grow by 17% this year, but the actual growth will perhaps turn out to be, say, 6.5%. On this lower base, economists expect the government will budget a 10% higher capex in FY26 to touch 11.1 trillion rupees. The cutback in capex is also needed if the lower fiscal deficit target has to be met. Now, economists are divided on this issue. Some want or even expect the government to keep pressing the capex pedal. Others say the government will recognize the K-shaped recovery and increase revenue spending instead on incentives like, labor-intensive manufacturing, for employment subsidies that were announced in the last budget, credit for MSMEs, promoting rural housing programs like PM Awas Yojana, and a sustained focus on food supply chains. Many want that. Finally, the big macro factor to watch out for will be the shift from fiscal deficit to debt to GDP as a parameter, which means from the next year, we won't be able to watch out for a fiscal deficit number. Will there be some other guidance on debt to GDP goals? That will be one big question for which the market wants an answer.
As the economy has weakened over the last many quarters, the government in a long time faces a choice: boosting spending or continuing to consolidate the fisc. I must say markets clearly expect the fisc to dominate this time around as well. They should be okay though, markets that is, if capex growth stays in low double digits. What about stimulating weak consumption? Well, some sprinkling relief is expected via personal income taxation, but nothing major. Now, as far as markets go, they've rallied off the lows meaningfully, but the mood is still sufficiently somber so that even a potentially non-eventful budget should have limited impact. Now, the government has stuck to its fiscal deficit targets over the last many years, and the expectation is that in line with the laid down FRBM path, we will see a number of 4.5% being announced for FY26 as well. However, what the market would not like to see is another roadmap immediately in this budget to contract the deficit even more, hopefully providing itself some leeway to be able to spend. Now, this is the widespread expectation from the middle class and from the consumption sector. Some tax tweaks which puts more money in the hands of the consuming classes. As far as equity capital markets go, it's a no-brainer. Don't touch it. Don't touch capital market taxation unless it is to lower taxes. Some sectors in focus in the good olden days, you would have lots of expectations in specific sectors. Stocks would react in a big way to budget announcements, but that was all pre-GST. In terms of specifics, first and foremost, the push on infra, roads, capex continues. Power capex, something the market is focused on. A push for the PM Surya Ghar scheme would also be welcome. In terms of specific expectations, a basic customs duty on solar wafer is something to watch out for. Farmer-friendly schemes, and for the financial sector, measures to deepen bond markets to enable better access to funding in a generally difficult liquidity environment. I think that is a sectoral focus. Now, over the years, markets have learned to differentiate between asks and expectations. So while there are many asks, expectations are not particularly high. To boot, as I said earlier, markets are sufficiently light in terms of positioning, despite the recent rally from Monday's lows. This is a very good thing because in case the government chooses to stimulate, there is room on the upside.
The key tax-related asks or expectations from Budget 2025 can be divided into 5 broad pillars. The first, using tax policy to revive consumption. The Finance Minister may do this by sweetening the new income tax regime even further beyond the slab changes that were made in July 2024. One proposal is to link the nil or zero tax slab to inflation. This could keep the nil slab dynamic, offering relief that is in sync with the rising cost of living. No major change is expected in the old income tax regime. However, the hopes around a higher ATC limit and higher deductions on home loan interest, as well as health insurance premiums, continue. The second major expectation is boosting manufacturing. The key expectation here is that the finance minister brings back the concessional 15% rate of income tax for new manufacturing companies. This provision had expired on March 31st, 2024, and the expectation is that it may come back, but at a higher rate. India Inc. is also hoping for more incentives and deductions for R&D, as well as new plant and machinery capex undertaken by manufacturing firms. Expectation number 3, attracting investment. There's hope that the tax exemptions enjoyed by sovereign wealth funds and pension funds investing in India's infrastructure sector are extended. The market also awaits tax measures that can give a boost to GIFT City. One key ask here is to allow non-banking units operating in IFSC to issue overseas derivative instruments, or ODIs, having the same tax benefits as those issued by banks. Coming to point number 4, capital gains tax. Now, no major announcements are expected given the big overhaul of the capital gains regime that we saw in July 2024. However, market participants have been urging the finance minister to make public listings even sweeter by reducing the definition of long-term from 2 years to 1 year for unlisted shares that are being sold in the market via an IPO. The fifth and final expectation, reducing tax litigation. An overhaul of the complex TDS regime is widely anticipated. The tax world has requested multiple TCS and TDS rates be streamlined into 3 to 4 clear, broad categories. Finally, the finance minister had announced a review of the Income Tax Act in her July budget, and an update on this is expected today. While the review is unlikely to lead to any major changes in tax rates per se, it is expected to usher in an updated, more relevant and simpler version of the 1961 Act.
So the first set of stocks would be consumption boosters. With weakened growth impulses, the government may focus on reigniting demand. So rural recovery plays like an HUL, a Dabur, Colgate, Imami, two-wheeler makers like a Hero MotoCorp, Bajaj Auto could benefit. On the other hand, urban discretionary stocks like Zomato, Swiggy, Trent, Nykaa, these are all stocks that you need to watch because urban consumption has been softer than rural consumption. ITC is always in focus ahead of the budget. Now here, any tax increase which leads to a sub 10% price hike could be positive. From consumption, moving on to capex. Now here, if there's only a meaningful jump in the FY26 budgetary allocation, then infrastructure stocks will benefit. Whether it's an L&T or a Siemens, road and railway stocks like in J. Kumar Infra, NCC, RVNL, IRCON, and then your defense favorites like an HAL, BEL, BEML will benefit. Moving on, a key ask is a concessional 15% tax rate for new manufacturing units. That should be reinstated, or even if it comes at a higher tax rate of 18%. Then it's a green light for all companies looking to set up new capacity, whether it's EMS, solar modules, and others. But the stocks to watch, irrespective, will be the companies which help in putting up these plants. So whether it's an ABB, a Siemens, Honeywell, you need cable companies, right? So a Polycab, KEI, transformers like Voltam Transformers, and many others. Moving on now to steel. There is a clamor for a 25% safeguard duty on steel imports. If that comes through, it could be a boost for domestic players like a JSW Steel, a Tata Steel, SAIL. And finally, a potential game changer for the insurance sector because the finance minister could indicate that amendments to the Insurance Act, which includes increasing the FDI limit to 100% or introducing the composite insurance license, could happen in the budget session. And therefore, all insurance stocks could get excited. Well, that's all for this pre-budget stock watch.
Okay, thanks for that, Rima. Well, as always, CNBC TV18 brings you the best local and global market watchers, economists, corporate leaders, and tax experts. So let's tell you what is lined up for you over the next couple of hours. Catch the most authoritative analysis of Budget 2025 with the biggest and the most influential voices. Market veterans Ramdev Agarwal, Mahesh Nandurkar, Neelkant Mishra, Prashant Khemka will all be with us to give their take on what Finance Minister Nirmala Sitharaman has to offer. Stock markets have been very volatile in the run-up to the union budget, and our market masters, Nirmal Jain, Sunil Singhania, Nilesh Shah of Kotak AMC and Nilesh Shah of Envision Capital will tell us what D Street is expecting. The budget is likely to set the tone for the markets amid inflation and growth concerns. Vikash Kumar Jain, Sunil Kaul, Sandeep Bhatia and Hiren Ved will tell us the way forward. Our budget editors this year are Atana Chakrabarti, former Economic Affairs Secretary and Independent Director at HDFC Bank, and Distinguished Professor of Kautilya School, Ratin Roy. Also our editors, Nilesh Shah of Kotak AMC and tax expert Dinesh Kanaba. The key asks from Finance Minister Nirmala Sitharaman is to balance fiscal needs with structural reforms to support medium-term growth. And some of India's leading economists will map the macro layout for us. Industry's creme de la creme will tell us how balance sheets are looking and what's their wish list from the Finance Minister. From seeking lower individual taxes and higher capex for infrastructure to creating better employment opportunities. These have been some of the key asks from Nirmala Sitharaman. Tax, of course, is the other big factor to watch in this budget for the salaried class and for corporates in particular. We will be joined by top tax experts with their take on the tax angles in the budget. Voices from North Block will be with us. Chief Economic Advisor V. Ananta Nageswaran, DEA Secretary, the Finance Secretary, the Expenditure Secretary, Deepam Secretary will all be with us to join and talk about the economic impact of the FM's announcements. And a very special segment this year. We will ring the budget bell live from NSC. Stay tuned for a mega exclusive right from the NSC floor.
Well, that is an exhaustive lineup and, power-packed as they come. What can I say? And so, what to expect, really. Jahangir Aziz is now joining us. He's the head of emerging market economics research at JP Morgan. And we have Arvind Sanger, managing partner at Geosphere Capital Management, with us as well. Gentlemen, great to have both of you here. Important day for us. And, especially the context is, of course, slower growth in that sense. Arvind, and I must say, before I come to you, no FIIs today. I began by saying that. The reason I say that is because they've been sellers every day. So today they're on a holiday. So we can, I guess, deal with whatever comes our way from the budget. But Jahangir, you go first. What's your sense? Generally expectations are low, which is a good thing. But top of mind, what's your sense?
Look, it's probably going to be a deja vu budget, in the sense that they're going to stick to the consolidation path. The way in which the Indian budget is framed, I don't think they can even provide any counter-cyclical support. The last time we had any reasonable or measurable counter-cyclical support was probably back in 2009 at the global financial crisis, and a tad bit during the COVID 2020 years, because that's the structure of the budget. And consequently, I don't expect anything counter-cyclical. Indian budget have always been pro-cyclical and will likely be pro-cyclical. So in a good year, we will be spending a lot because the revenue is a lot. In a bad year like this year, revenues are going to be the growth in revenues will be lower, so the growth in expenditures is going to be lower, which is going to add to the growth slowdown. So I don't expect any reasonable any change in that, even though in the July budget did promise a new economic policy framework. So more or less, you have to look at what the budget does in the plumbing and maybe on the medium-term growth drivers. So that's what I've been looking for, whether they do much in the plumbing, rationalizing the tariff and the income tax. The tariff, rationalizing the tariff just might become a big deal. We'll see what happens tomorrow morning with the Mexico, Canada, and the China tariffs. So, that's where I'm looking for.
Yeah, but White House has already announced that the tariffs come into play on Saturday.
They've announced, then they've confirmed, then they've again confirmed, but it is still, we still don't know when it is coming. So that is the state of affairs. But Arvind, and that's the important variable as well, which we will know over the weekend. But your thoughts, if what Jahangir says plays out, from a market perspective, what's likely the sort of implication from here on? You know, the context for markets, very near term, is that emerging markets since Trump's inauguration have done better. They're up about 5% or so. Here in India, we're not. We're actually absolutely flat. Your thoughts?
Well, clearly, India has its own problems, and it's India's problem, as Jahangir has also alluded to, and you've talked about, is the economic growth is disappointing. And like Jahangir said, the budget is unlikely to do anything dramatic. So I think the most we can hope for is, at the margin, some positive news on simplifying some taxation, maybe linking it to inflation, some of the things you were talking about. But if I were to think of a dream budget, which I don't think we're going to get, it would be about massive privatization. It would be about significant tax benefits to take some of that money and incentivize more confidence in consumers and business, because that's what's missing. But we can keep wishing for a government infrastructure to keep driving the economy, but at the end of the day, you want the private sector and the consumer to drive the next leg of the growth. It can't just be the government keeps building infrastructure and nothing else works. But I think that I think we're probably going to get a budget which is not going to be harmful. I suspect there won't be any tax increases. But I don't think I'm expecting anything dramatic either. And I would say, look, one of the things that makes business people and investors more optimistic on the U.S. is significant cut in regulations, notwithstanding the tariffs. I'll be blunt, call it stupidity that Trump is kind of going down on in some directions. But assuming that that's not policy, then that is going to sustain. Then I think the deregulation part will be the more important one. And I don't think budget is the place where it gets announced, but I think some regulatory major moves and privatization would be part of that if that happened. But something on that front would be more meaningful in a world where you're facing competition for capital flows from other emerging markets, but also from the US, which has clearly, gotten a lot more attention.
Arvind, hi, morning to both of you gentlemen. Arvind, I was just hearing you make your points and I was like, wow, we've not heard this in a while, right? Dream budget and tax cuts and incentivizing the consuming class in the same sentence, right? Usually dream budgets are only about incentivizing manufacturing or industry. But I think this is the slight new in this budget as we discuss this today. Jahangir, I just want to go back and probe you a little further. On this whole fiscal deficit point, you think there'll be absolutely no departure at all? They'll keep gliding down the glide path, given the circumstances, given the clamor for some relief, given the Prime Minister invoking Goddess Lakshmi in his speech yesterday? You think absolutely nothing whatsoever? They'll remain in that limited room and announce, further reduction to the deficit?
Look, I think that's the way in which the framework is set up. The framework in India, you target the fiscal deficit, adding all asset purchases, RBI transfers, etc., because you're only worried about how much is the debt-creating part of the budget, right? And your real angst is, what it does to public sector debt. Now, there's a lot of appeal to that, right? It basically underscores that, you should not borrow a lot, you should have low debt, and you should live within your means. But if that's underlying your budget theory, then living within your means means that when incomes are high, I'm going to spend more. When incomes are low, I'm going to, not spend more. But that's exactly not what the government should be doing. In order for the government to have a proper counter-cyclical bias, which does not undermine the credibility of the budget, then the target should not be the overall fiscal deficit that is debt created. The target should be structural deficit, which is the deficit after you've taken account of what is the cyclical impact of the economy. But we don't do that. So I don't see how they can get away from not going down the path of going towards 4.4 maybe they won't go to 4.4. Maybe they'll go to 4.3 or 4.2. How will that matter in any material way to boosting the economy? I think that's where the problem is, because we are stuck in this quagmire that we have created for ourselves, by the way.
Okay. Well, I don't know. The CEA yesterday, when he was pointedly asked, will you advise boosting consumption? He nicely skipped it by saying that, yes, of course, we want an urban consumption boost. That's why I'm asking for deregulation. If they deregulate, industry will invest more, create more jobs, and that will create more urban consumption.
Through the employment
Very
route.
diplomatic answer. But, I wanted to ask you, Arvind, the rupee is fairly cheaper now compared to what it was 3 months ago. You're at 86.6, and I think it'll get cheaper on Monday, considering the way in which dollar has climbed. Plus, stocks have also fallen. Are we at an inflection point where India becomes attractive?
It's starting to get attractive from a valuation standpoint. I think the problem was that you were priced for perfection of growth, and valuations were expensive. You've had enough air come out of the bubble, certainly of the mid and small cap names, that things are starting to get to levels that are becoming interesting. I won't say that it's in a value territory, but I think it's in a reasonable mid-range territory. So I think to the extent that it's not going to get into value territory, it's time to start nibbling. And if the budget gives us, in contrast to what Jahangir says, if the government is a little more bold and willing to take anti-cyclical, not pro-cyclical steps to try to boost the economy, then I think it would be time to jump in with both feet. But if they keep going incremental, then I don't think there's a rush. But over time, I think the market is starting to look attractive and would be starting. We would be starting to nibble.
That's the loveliest words we've heard, Arvind. Thanks for that. Jahangir, the CEA's in the survey, the estimate is 6.3 to 6.8% GDP forecast for FY26. Would you call that realistic? Would you pitch at the lower end, higher end?
So, we are sort of towards 6 rather than in the upper end of 6.5 and 6.8.
Lower than the lower.
And, look, this is a very, very uncertain period, right? It is very hard to say that there are 2 engines of growth in India, right? One engine of growth is public investment, which, might slow down a bit, but will still chug along because, the revenues are there. And the other is services exports. There are no other engines of growth in India. Consumption has been growing exactly what has been the growth in real incomes. I don't see consumption growth moving beyond that. And, for consumption growth to go above real income growth, you actually are asking for a reduction in the saving rate of household sector. Do you really think that the Indian government is going to say, we need to reduce the saving rate of the household sector? No. I think not. So if those are the only 2 engines of growth you have, one of them can be safeguarded because it's very domestic, public investment. The other one is completely and totally open to what happens in the global economy. And as we've been talking about almost for 2 months now, the global economy is very, very uncertain. So it's very hard to say, sitting in February of 2025, one day before Trump's first tariff announcements, that how will 2025 look? And as Arvind said, and Arvind made an excellent point, that even though there's tariffs and immigration and all of that fears about reducing U.S. growth actually is getting offset by the fact that there is enormous amount of business confidence and animal spirits being built up simply on the promise of deregulation. And unfortunately, we don't have that in India.
Point taken.
Absolutely. And, points taken. And, we'll of course, continue to speak with both of you gentlemen through the course of the day and we'll get you more opinion as well. Jahangir and Arvind, thank you very much for joining us bright and early. I think it's late for you, but bright and early for us here on this important day. Thank you. Well, we'll take a very quick commercial break here. Up next, we connect with Vikash Kumar Jain of CLSA as we discuss budget expectations from the sell side here. A little later, some fundamental stock analysis with the market experts. Prakash will be with us and so will be Deepan. So that's what's coming up here over the next 30 minutes.
8th consecutive time, Finance Minister Nirmala Sitharaman will rise to present the union budget in a few hours from now. India's GDP growth is near a 2-year low. Can the budget unleash measures to fire up the growth engines?
It's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth.
The new boss at Mint Street has unveiled measures to boost liquidity after the deficit hit a 15-year high.
Welcome back to the special coverage. The countdown is on your screens. It's less than 3 hours to go. And here's a candid admission. Because this doesn't quite feel like the weekend here for us, I actually, Prashant, went to the Asian screens. I kept refreshing the screen saying, there has to be a tariff reaction. There has to be a tariff reaction. Then it struck me that no, it is Saturday. But having said that, it was big news, right? And US markets did react to it. They all saw it coming. It was well spoken about.
Yeah.
But when the event finally happens, there's still unease around it.
Yeah, there is unease and
Yeah.
there's anxiety about what will happen, what shape, what size, etc. But I just want to start with the good news. The good
Okay.
news is that there's no foreigners in the market today because it's a Saturday. They're out, right? And the reason it's good news only is because, I mean, it's just one day, but we're talking, we do this every day, so that it becomes important in that sense in the very near term. So no selling from FIIs largely because they're absent from the market.
Somehow I prefer if the reaction comes out.
Yeah.
I mean, bottling it, I don't know.
Yeah, we get partial reaction today. That's the thing. It's not,
But it is what it is for
verdict.
today. For near-term traders, I think that becomes important. So the point is, markets then have it's potentially possible that if there is no bad news, it is read as good news, and you have a decent kind of a move. Remember, from Monday's lows, last Monday's lows, the market is already up about 600 points on the Nifty. We've done that. Now, as we were discussing, the setup is a little anxious because Trump's tariff threats. But the point is, he goes on air every day. There's a press conference and he's sort of said, I'll do it. And then he'll say, I'll do it. He's confirmed it. Then he's again confirmed it. Now it has to sort of come through. So in a way, market is prepared, but it's not done till it is done. That's essentially the point in terms of what we will see. Will we see something this weekend? It's possible. China, Mexico, Canada, 25% on Mexico and Canada, and on China, 10%. Remember, there is an important difference I've been making for the last couple of weeks now. With regards to Mexico and Canada, it is largely with regards to that fentanyl issue. You stop the supply of fentanyl, and it's a threat to stop that supply. So it is still serious, but it's not structural. With China, it is different. It's not about supply of this or supply of that. It's trade imbalance, which is much harder to correct in that sense, and correct quickly. And that's, of course, more important for us as well and the rest of the world as compared to Mexico and Canada. Overnight, equities ended lower. S&P was down half. NASDAQ was down about a quarter. Dollar, by the way, moved up after we heard President Trump talking about these tariffs. So we're at about 108.4. And I suspect whenever this comes, maybe dollar goes up a little bit more, but it's already gone into it with about 0.75%, 1% kind of a move. You also had the core PCE number, which was in line, but the data which stood out from there is personal consumption, personal spending, which was super strong. And that kind of reinforces, the state of affairs in the US, which Arvind and Jahangir were talking about as well. Gold has made a new high, so watch out for the gold financiers near term. We hit 28.15, left off at just under 2800. Now, just to circle back and tie in the levels, these are all very near term. We've closed yesterday decisively above the 20-day moving average, which is a short-term level. We've ended near the 40-day exponential, which is 23,577. The close is 23,508, and that becomes the first number on the way up. Above this, the daily Bollinger Band for the upper level is 23,744. These are step-by-step levels which the market will have to conquer and take out. Nifty Bank resistance is at the 40-day exponential, which is at 50,018. We left off at 49,587, again, near-term levels. And here the daily upper Bollinger Band is 50,187. Support comes in at the hourly average for the Nifty Bank, which is 49,076. So that's the broad screen. I'd like to sort of emphasize again, with no FII, at least today, and if it's a do no damage kind of a budget, and maybe a little bit of sprinkling in terms of help for taxation, etc., I mean, the mood is, I think, sufficiently somber, as I've been saying, that the market may not do all that badly. We may even get a bit of a move higher. Surabhi.
Yeah, absolutely. And that's the positive. I don't want to be, the one to talk about the negative, but just have to mention that some of the bank earnings that came in yesterday after market hours, they're not too good. And even if you're looking at IndusInd Bank, yes, we know they've had an MFI issue, but guess what? The final numbers that are getting reported are really showing up the pain. Credit costs up 40 basis points. NIMs have fallen below 4%. There's a rise in the gross NPA level. So some of these banking numbers are sort of making...
You can see it in the comments coming from Delhi. No longer is it that the Reserve Bank was the one which was dampening the market. Yes, they slowed the market, but that was probably needed. The language has changed because the numbers, as you point out, some trouble.
Yeah, absolutely. In fact, we'll talk about this as we go along. But for now, let's welcome in our next guest. We have Vikash Kumar Jain, who is the India strategist and head of research at CLSA, joining in to discuss some of the big expectations that we have from the union budget. Vikash, thanks so much for joining in. Great to have you on. Big morning for everybody here. Now, balancing this whole issue of boosting the economy at the same time being within the fiscal framework, that perhaps is the biggest challenge. Do you think the government can pull it off? What are your main expectations?
I think what we need to focus on is what exactly is the number of... See, budget is typically a statement of intent given by the government. I would say it just tells you what are their key priorities. To me, the last budget was one of the first times when I started feeling that the number one priority of the government was discipline, to bring down fiscal deficit after the whole COVID-led excesses were over. If you might recall, the interim budget that they gave in February of 24 had a fiscal deficit of 5.1%, coming from 5.8% in FY24. They had targeted 5.1%. Then there was talks of excess dividends from RBI that happened around May. And when the budget for July, after the new government was sworn in, when that was given, about 50 bips of extra dividend, nearly, they're utilized almost 20 or half of it nearly to bring down fiscal deficit. So, and just mind you, FY24 fiscal deficit was 5.8. So 5.8 was promised to go down to 4.9%. Then the finance minister also made two very interesting statements in that budget. Number one, even at the outset, she promised that the next budget will have fiscal deficit of 4.5%. And secondly, she said that incrementally, our debt is debt of the government will rise at a lesser pace than the increase in GDP, which is the debt to GDP will fall. So I think all of that, to me, were clear hints that now the number one focus of the government is discipline, is to ensure that we keep our balance sheets tight.
Vikash, a point taken. You've spoken about the PSU and the Modi stock, so as to speak. Your view now, after the recent correction and how they are set up?
Incrementally, that was elevated expectations. There's been some correction. Instead of a 54% up move in the basket, we are down about 13% since elections. That was anyways our call. When we saw a government which was a more coalition-based, we started thinking of trying to be less focused on Modi stocks. I suspect that still expectations are elevated, given that capex versus those elevated expectations is, going to be lesser. So there could be further underperformance. So relatively, although one can be, now that some of those stocks have come up, one can pick and choose within the basket. But as a basket, I'd still not be too focused to push it. I think there will be a normalization of those expectations which got very elevated. It's been a slow process. That might continue for the next few months. And we get a better entry point into that basket, because I think the multi-year capex story, which will have the next leg of private capex picking up, is still with us. It's just that some of the times these stocks tend to run ahead of themselves at times.
Okay, got that, Vikash. Now, you emphasized discipline from the government. That's what impressed you. How about pushing for rural demand, welfare spend? Any possibility you expect in the budget?
Now, see, so we said that it's a tough trilemma to balance. The trilemma is, of course, the discipline aspect, then the capex aspect, and the weak consumption economy that we are having. Now, which way will they bend the expenditure? See, last time they for the first time started talking about schemes to push jobs and skilling. Now, if we see more of the same, that could be more consumption side. And if they do that, then capex numbers may grow even lesser than what we are talking about. So that's the part which is something which we'll keenly watch. That now we know that the room for expenditure is limited once you commit to the 4.5% fiscal deficit. Now, which way do you want to focus that expenditure? In our current assumptions, we still kept some bit of a advantage to capex, not really building in new consumption links. But that's something which we will have to watch out for. Incrementally, however, what we are seeing is a lot of the state government linked, recent state elections, the things that were done for the less economically, for the lower income strata in terms of pushing benefits, that will also start playing out during this year. I mean, all of those, that money will kind of go to their bank accounts, and I think all of that could lead to some improvement in affordable consumption, where expectations aren't that elevated. So on a relative basis, that's why we've started moving. We moved towards staples very recently as our favorite.
Okay, all right. Point taken, Vikash. What about any specific announcements to maybe increase FDI, maybe take the limits higher, or encourage capital flows, maybe even into the equity market? I don't know if anything can be done to keep some sort of a support base under the rupee.
See, I think that's something which now there are some of these times we get very focused on the budget, but more recently government has been making policies even outside of budget. So I do not know if that's something which they would want to deal only in the budget itself. Sure. I don't know if there is any tax related benefit, etc. It's very tough to guess, and honestly, given the tight situation of expenditure, I'm not really sure they want to give up on too much of revenues. In fact, I'm more worried that they could look at finding new avenues of revenues. Maybe it could be higher disinvestment or supply. So I think, I'm not sure if it will be specifically in the budget. That could be a thing that they deal even outside of budget as well.
All right, Vikash, got that. Thank you very much for sparing time on a Saturday morning, but I guess you had to anyway. Okay, now let's move to the most important bite that we have to hear. Chief Economic Advisor Anantha Nageshwaran made a big pitch for deregulation in the economic survey. He's asking the budget, get out of the way, allow businesses to focus on their core mission. He also said government must stop micromanaging economic activity. Let's listen to him. Who knows, that may be the basis of this budget.
Both don't have to be mutually exclusive, and deregulation or basically removing the fear of growth in our business enterprises has been an enduring issue over the years, and it's still, and while much has been done in the last 10 years or so, both in the union government level and in state governments, much more remains to be done, and that could itself also address the demand problem, because it can sort of stimulate a virtuous circle of economic activity, leading to greater hiring, compensation, and income growth, and therefore demand growth as well. Yes, there could be a capacity constraint with respect to spending on the part of the public sector. When I say public sector deliberately, I don't use the word union governments, use the words union government. I'm referring to the entire public sector, which includes state governments also. So therefore, there is a need for the private sector to look at the need for ramping up investment and its implications for demand, because ultimately, in an economy, it is the private sector that is mutually endogenous. Private sector consists of both households and enterprises. Public sector, fiscal policy, and external demand, foreign trade, both are exogenous to the system. So the private sector can actually do a lot to stimulate demand and thereby justify its own investments.
All right, that's the CEA outlining the thought process, and of course, a lot of the highlights that came in from the economic survey yesterday as well. But we have a trading market, which means we have stocks to look at, and there are lots of numbers, news flow that could be impacting individual scripts today. So we've got our teammates standing by with the stock list of the morning. Hi, guys. Good morning and a happy budget day to all of you. Let's start up with IndusInd Bank, Abhishek, because here the pain really seems to be showing up. I mean, on several parameters, including credit costs.
Well, the pain is actually lower than what the street estimated. So net interest margin, however, has come in at 23 quarter low of about 3.93% versus 4.08% in the previous quarter. Asset quality has been better than what analysts did fear. It's come in at gross NPA ratio of 2.25% versus 2.1% in the previous quarter. Slippages were at 2,200 crore, which is on the elevated side. However, it is lower than analysts estimate like Kotak Securities, who estimated slippages of 3,100 crores. Now, provision pool increased by 380 crores despite the fact that they utilized 200 crore of provisions for the MFI portfolio. However, that has strengthened the balance sheet. So, with respect to PNL versus ARPOL, the NI is below ARPOL. However, the PAT is ahead of ARPOL despite the strengthening of the balance sheet. Back to you.
Okay. Okay, got that. Thanks a lot, Abhishek. Vinny, Sun Pharma, how was it?
So Sun Pharma, yesterday we did have the numbers, a decent set of numbers that is coming from the company. But the key con call highlights that what we're going to highlight today. In terms of guidance, have lowered their R&D guidance to less than 7% of sales from earlier guidance of 7 to 8% for FY25. Specialty business, they said the prescription trends in the key brands of the company were doing well, and that was quite strong. So yes, that is some relief coming in on that front. US business, which was a bit of a miss this time, they highlighted that this time the US business was a miss because of laniodomide sales, which in Q3 FY25 were much lower versus last year, last quarter, and that is something that is leading to the decline in terms of growth of the company. Other than that, India formulation business, the sales in India formulation business also saw a growth of 13-14% during the quarter. All therapies performed well. These are the key highlights that have come in from Sun Pharma.
All right, Vinny, thank you very much for that. Well, one of the recent listings, Vishal Megamart, will also be in focus. It's an interesting one, widely owned, and lots of interest. Vinny, back to you.
Yes, so in terms of Vishal Megamart, first quarterly performance that they've reported after their listing, when you look at it, they've seen a revenue growth of 20%, which is much slower than the historic growth of 24 to 26%. Other than that, we are seeing that EBITDA margin is at around 16%, which is quite flattish. Profits have seen just a growth of 28%. Company is highlighting a bit of a subdued demand in terms of consumer trends. So we could expect a bit of a red coming in for Vishal Megamart today. SSSG growth stood at around 10.5%. Red is what we're expecting this time.
Got it.
Okay, so that's Vishal Megamart, a little slower than perhaps what they've done in the past. Got it, Vinny. What about the others? I think you were watching out for a bunch of other stocks, Aster, DM, and MedPlus.
Absolutely. So both of them reported their numbers post-market hours yesterday. Aster DM expecting red here, a weak set of numbers versus what the street was anticipating and estimating in terms of BBG estimates. Revenue growth also of the company is in single digits, high single digits of around 9%. But this is the lowest revenue growth that we've seen since March 2024, where they managed to see 20% growth so far. Matured hospitals saw good growth this time. Margins have been at 25% for the 9-month time period. Karnataka, Maharashtra cluster saw a 33% growth. Average length of stay days has come into 3.2 days versus 3.4 days previously when we look at it. But payer mix, insurance business is around 30% now. Keep an eye out on that. Overall numbers are a miss coming in versus what the street was expecting. So red there. Now MedPlus on the other hand has managed to see a good set of numbers this time in Q3. Better margins than what one was expecting. Improving in terms of revenue mix also that we're seeing coming in, where they're seeing an increase in terms of private label, which is continued to see an improvement, which is a higher margin business. So that is why we're expecting improvement in terms of margins going forward. And as of now also, margins have seen a sharp improvement versus last year, coming in at 8.45% versus 6.35%. So around a 200 basis point expansion in terms of margins versus last year. So expecting green here.
Okay, thanks for that green, because we are not going to definitely get it on Bandhan Bank. Isn't it, Abhishek? Bandhan, and you also have Equitas.
Both, Lata, they are seeing the MFI stress play out in their portfolio, and slippages are elevated for both of them. So for Bandhan Bank, 15 quarters in a row, the quarterly annualized slippage ratio is more than 3.4%. So this time, slippages are at 1,620 crore versus 1,110 crore in the previous quarter. Now they have written off 1,270 crore in this quarter, so that's helped the asset quality. Annualized slippage ratio is at 5.1% versus 3.5% in the previous quarter. Their provisions spiked up massively due to the massive write-off, 127% growth on a sequential basis. Weak AUM growth is at 13.85% YOY and about 1% sequentially. The net interest margin for them has come in at 8-quarter low. With reference to the P&L, both the NI and PAT is below Kotak Securities estimate. Equita Small Finance Bank, the slippages are elevated. MFI portfolio had an impact on growth as well, and the net interest margin has declined very sharply for them. AUM growth is at 15% YOY and about 3.5% sequentially. In this, the MFI portfolio has declined both YOY and quarter-on-quarter with respect to the growth rates. Slippages are elevated, 80 crore more than previous quarter, so 586 crore versus 506 crore in the previous quarter. Annualized slippage ratio is elevated at 6.3%. The write-offs are huge this time, 235 crore versus less than 40 crore last time. Net interest margin is at multi-quarter low of 7.4% versus 7.7% in the previous quarter. Their P&L, both the NI and PAT is below Motilal Oswal estimate. Back to you.
All right, Abhishek, thank you very much for that. So lots of numbers. Well, one more. ONGC should be in focus. Vivek is here with that one. Vivek, morning.
Well, good morning. ONGC is in focus. Let's look at the numbers on top down. So first up, revenue slightly lower on a year-on-year basis, down 0.5%, coming in at 33,717. The poll was close to 31,700 crores. So good top-line strength seen from the company, better than what the street was anticipating. The core EBITDA coming in at 18,968 crore versus the poll of 17,686 crore. Now, remember, this is an operational beat from ONGC. However, there was a significantly lower other income that the company saw in this particular quarter. Other income just around 1,811 crore versus 4,766 crore, which actually led to the profitability missing the poll. The profitability at close to 8,240 crore versus our poll of close to 9,500 crore. Now, when you're talking about crude realizations, it proved to be a drag in this particular quarter, but strong production is something that aided the performance this time around. So expect ONGC to see some green on the screen today.
Oh, God. Vivek, we can't let you go. You also have IRB Infra and Inox Wind numbers for us?
That's right. IRB Infra, well, multiple adjustments that the company has done this time around. They've gone ahead and changed the way in which they look at the income of the private InvIT. So first, let's have a look at the order book. Order book this time around at 31,500 crore. Revenues higher by close to 3% on a year-on-year basis, 2,025 crore. Operationally, it's a slightly subdued quarter. EBITDA higher by 13%, margins at 48.6%. Profitability, very, very large, optically over 6,000 crore, but multiple one-offs that we just described. Number one, they've changed the accounting of the investments in its InvIT. So there is a one-time exceptional item of close to 5,800 crore. And along with that, they've also recognized the gain on the InvIT as a fair adjustment value of close to 230 crores. Operational miss from IRB Infra. On the back of that, expect some red. The other stock on the radar is Inox Wind, a good quarter from the company. Remember, the company has a quarterly run rate of execution of close to 140 megawatt. This time around, it's close to 190 megawatt. Revenues higher by 81%, EBITDA higher by over 100%, so it's more than doubled on a year-on-year basis. Margins, operating margins, very strong. This is due to better product mix and also versus the EPC versus O&M mix that the company has recognized in the quarter gone by. Margins at 22.7% versus 18.4%. Profitability, again, some adjustments over here on the back of deferred taxes and tax pertaining to earlier years. Profitability still going ahead at 112 crore versus 3.9 crore. Order book slightly subdued on a sequential basis, but much stronger on a year-on-year basis, 3.3 gigawatts. So expect some green on Inox Wind today.
Well, those are big increases on a year-on-year basis at least. And of course, stock like Suzlon from that same space has corrected quite a bit from the highs in the recent fall. Actually, one of the top sort of declines amongst mid caps and small caps. Well, Deepan Mehta is with us, Director, Elixir Equities. Deepan, good morning. Good to have you with us here. I won't ask you about the budget because there's so much else to talk about, which is numbers, right? And let's just start with IndusInd Bank. Quick view, Deepan. Numbers are bad, but they were expected to be bad. The question, though, is, will the markets look ahead a little bit? Price to book 1 year forward, 0.9 times. Compared to about 2 times, which is the average over the last 10 years. Just your thoughts.
Yeah, Prashant, good morning, and thank you for having me on your show. I think that the valuations have got hit purely because of the way they have conducted the business last 2-3 years or so. Since Mr. Sopti's exit or around towards the end of his tenure, we saw the NPA starting to spike up in IndusInd Bank, And if you compare IndusInd with all its the peer group private sector banks, the lending model has been far more riskier. They focus on microfinance, they focus on the vehicle finance business. And those are the differentiating factors which have led to the situation which they are in. And I would say that, first, the disclosure that we are investors in the stock, so extremely disappointed with the numbers. But I think even at these levels, does it make sense to invest in the company? The time to sell perhaps is gone. And what I've seen with such banks is that over a period of time, it starts to come back. They improve the lending standards. The NPA provisions do come off. And then you can see a surge in the stock. But every rally, I think, if the stock goes up 30, 40% on improved numbers, all those rallies and upsides should be exit opportunities. End of the day, I'm not sure it's such a great bank as compared to some of its peer group. No differentiating factor at all. Growth rates also slower than the industry.
Okay, that's not a flattering set of numbers at all. Deepan, anything in the well, first, good morning and thank you very much for being bright and early for us on a Saturday. Any of the banks now become attractive for you?
Good morning, Latasi. First of all, my view on the banks is steadily getting negative. I mean, I'm pretty certain that 2025 you may see a nice trading rally in banks, and the RBI will do something which will benefit the banking sector, and it will be an outperforming sector. But when I look at a 3, 5, 10-year type of a view on banks, I want to be almost negative to neutral weight on the entire banking sector. The reason for that is extreme competition. What we are seeing is a complete red ocean over here in the banking sector, and that's leading to these banks doing these kind of lending on the unsecured side, be it microfinance, credit card, or personal loans. And then the problems start after 2-3 years of such lending, which suddenly lead to spike in NPAs. And now I think almost all banks are on a level playing field in terms of technology, distribution, products, manpower. So from that point of view, I'm not that positive on the medium to long-term trends of the banking industry. Having said that, I think there is still some trading play value in the PSU banks. I mean, I can't believe after so many years, decades, I'm positive on PSU banks, especially tier 2 PSU banks, the likes of Bank of Maharashtra, Punjab and Sindh Bank, Central Bank, Bank of India, Bank of Baroda. I think all of these trade at a discount to SBI. Their internals, financial and non-financial certainty have improved. Balance sheet quality has improved. They are back in the lending game as well, and they have invested a lot in the technology platform. So within the banks, if you want to remain invested, which you should, because it's 25-30% of any benchmark you track, a large proportion should be in the public sector banks. I think the differentiation and the kind of we had this private sector banks doing exceptionally well compared to PSU. That argument is fast fading.
Okay, and that's a longer-term call you're taking, highlighting issues which are not just cyclical in nature, but perhaps structural, and competition is one of them.
That's right.
Got it, Deepan. That's an important point you've made. We'll keep that in mind. I want to draw your attention, by the way, hi, good morning, sorry, apologies for that. I want to draw your attention to Hero Moto. Given the management changes that were announced yesterday, now we know that Mr. Gupta, Niranjan Gupta is stepping down, and insider is going to take over in the interim. How did you view this? And I mean, in general, what's the stance on the company and the stock?
Hey, Shilpi, good morning. The stock is cheap, no doubt about that. The return ratios are great. But end of the day, I think that it's not delivered the best of returns over the last several years or so. And other companies like Bajaj Auto, Eicher Motors, TVS have delivered far better at various points of time, although not together. And also within the two-wheeler space, it's getting a bit crowded over there, and they have this massive disruption coming into play in terms of electric vehicle, rather EV scooters. And Ola Electric is acting as a big disruptor over there. All of these companies also have their strategies, but these products have lower operating profit margins compared to the traditional ICE engines for them. So from that point of view, I want to be slightly cautious on the two-wheeler side. And as I said, Hero MotoCorp is cheap, but within the entire space, our favorite still remains Eicher Motors, which is not impacted as much by the trends in EV. And I think after a long time, Eicher seems to have got its export business right. and the distribution also is playing a key role. Having said that, it's a company in which we are invested.
Got it. Just a couple of more names quickly, Deepan. The specialty the chemical space, if you will. Pankaj Tibrewal 2 days back talking about bombed out space. He said, well, keep an eye out on these. UPL reported numbers, the guidance, etc. Stocks rallied. Naveen Fluorine reported a decent said recently. Any thoughts there?
Prashant, you're right. I said it before. I think I'm surprised, and we are seeing a cyclical upswing in specialty chemicals. Last 2-3 years, they went nowhere. Base effect also benefits these companies. I think we ourselves are looking more closely at that sector. Some winners and performers will certainly emerge from that.
Okay. What about Vedanta, Deepan? That's the other one. There will be interest in terms of, I mean, the numbers are numbers, but they've also kind of put forward that entire demerger process by a couple of months.
I think it's a great trading play. You buy the consolidated entity. I'm sure once they get listed separately, the value of the separate listing will be higher than the consolidated entity. So from that point of view, I think with a holding period of 3-4 months or so, there's scope to make a good return in Vedanta.
Okay. Vishal, Megamart, Deepan, any thoughts? It's not done anything after the listing, but numbers came through.
Yeah, I think very impressive set of numbers, 10% type of same-store sales growth, so very impressive, and a lot of sales coming from apparels as well, and right positioning in terms of tier 2, tier 3, from that point of view, good runway, reasonable valuation compared to its peer group, so I think it's worth a look in. I'm not gone that deep into the company, but certainly these numbers are an eye-opener.
And
what about one minute, do you think the stocks have fallen enough? Keynes fell, Paytm, Zomato, and more importantly, Trent used to be such a darling. They've all fallen like 35-40% in a month. Any of them becoming?
Yeah, that's right, Lata. But in markets like this, you're very uncertain whether if the markets drift lower, go lower, then these are the same stocks which will be targeted more because they still trade at very rich PE multiples. So from that point of view, I just want to stay away. I think let's see how the market evolves. And I would just say that I was just reading through the news. More importantly, today is what Trump action is going to take on all these tariffs, So it's like a budget for US as well, I think.
Yeah, but that's only on Canada, Mexico, and China. So I guess we're going to be spared today.
Absolutely. Just about tariffs, etc. Names like Vari, Premier Energies, these solar names. There is some expectation that there'll be a basic customs duty imposition on import of solar wafers. Deepan, do you like these names? There's no doubt that growth will be super strong. It's about valuations. Your thoughts?
No, Prashant, I think that I'm getting very positive on these companies and valuations also coming into that sweet spot, especially Vari Energies. Sure, I think there could be a knee-jerk reaction if there's tariffs on solar modules, etc. But these companies would work around it. Other than that, ex-US also, the market is huge for them. And these companies are getting very good scale, backward integration to improve their margins. Only fear is how much is the overcapacity which will actually happen. Let's, it's a good trend investment theme to track closely and understand it and invest in.
And Deepan, what about good old consumer stocks? Yesterday was the first sign of some life and we got decent numbers, right? Nestle, Marico, volume growth was not too bad. And we know they've been completely bombed out, beaten out. Now let's see what happens today. But if at all you look at FMCG and staples, will it only be a tactical short-term trade, or do you think there's some merit in adding them to the portfolio now?
No, Surbi, any upside in FMCG is a great opportunity to exit zero in FMCG, is what I would say from a portfolio perspective. So don't get drawn into such rallies on the buying side at all. And a lot of investors have been investing in these stocks for decades and generations. I think any rally is a great opportunity to completely exit out of the sector.
And why do you say that? Because you feel that valuations are still high and growth will be anemic? I mean, what's the rationale?
A lot of products have reached mature category. They have not been able to sustain even high single-digit growth rates. And from that point of view, I think forget about the valuation. If you don't see growth, you have to get out of the stock.
What are you buying now? An incremental 100 rupees, where would you put it?
No, nothing.
Nothing. Cash.
Waiting for this budget, waiting for this earnings season to get over, waiting for the Trump announcements to be over and done with, and the RBI policy, and then I think we can, look at
Trump announcements, Deepan, Trump announcements are not getting over. All the other events they have a exit date, a sunset date. Trump announcements, I don't know, not too sure.
Next 4 years, right?
Next 4 years.
Deepan, just a couple more names. I don't know if you looked at this name, Blue Jet. reported number, there is some institutional coverage as well. I mean, super 90% growth in earnings, 600 basis point improvement in margins. Any thoughts?
Yeah, that's right. Even I was very surprised with the earnings, and they're getting into this API and contract manufacturing, and that new division has done exceptionally well for them. I just want to understand the sustainability of this particular division, and maybe you should call their management and understand what something new happening over there, and how sustainable is it, or is it like kind of a one-off? Because the existing traditional business, I think just contrast media and other similar chemicals, that I think is not growing at that. It's typically at 8-10% type of growth rate, but some new products, I think on the oncology side and some of the other very interesting therapeutic segments, they have launched some products over there. So it could be a good investment idea. I think one needs to dig a bit deeper.
Deeper in one infra name, because they will increase infra expenditure. Execution and spending is a different matter, but when you get that number, I suspect there will be some excitement. But out of that infra pack, anything looks interesting. L&T reported good numbers. Everyone keeps underestimating them, they keep beating. At least that's the story last few quarters. But what's the play here? Could be power, infra, roads, whatever.
I'll give you two names, Afcons and L&T. I think if you want to play the infra game now, at least you have something for some more names as well. And I think even ITD cementation post-acquisition by Adani, those prospects of that company may also change. It may go into a growth phase company, which we and our clients are invested in. I think see what happened in cement. If you look at the entire cement space, ACCA and Ambuja did the best amongst the cement companies, and that would be the Adani touch. Something similar can happen in ITD as well.
Okay. Well, Deepan, just stay on with us. We have our colleague Timsi Jaipuria, who's standing by actually out there near Parliament to tell us what we could expect in terms of a budgetary agenda. She's been speaking to a lot of big people out there.
Well, some of the key expectations from the union budget is that the government will not deviate from the path it has laid for the fiscal prudence, and the expenditures are also likely to remain in check. Most of the expectations are that the fiscal deficit number for FY26 is likely to range between 4.6% to 4.4% of the GDP. When it comes to divestment receipts, expectations are that there might not be a significant jump in the divestment receipts for FY26. But yes, when it comes to subsidies, the expectations are that it may rise substantially in FY25, surpassing the budget estimates by about 18% or so. But when they're expected for the next fiscal, they are likely to remain steady. When it comes to taxation side, some of the expectations include that the government could give some sort of a sweeteners when it comes to the new regime. But yes, when it comes to the old personal tax regime, there might not be any change. On the other hand, when it comes to the taxes levied on the corporates, there could be a reintroduction of the concessional corporate tax rate, which expired in March 2024. So that's also another key expectation. And yes, when it comes to further simplification of rules, procedures, simplification in terms of the Income Tax Act, that is something where a statement will be laid out when it comes to simplification towards the custom duty rate structure. That too is expected in the budget. Let's see what finally happens when Finance Minister Nirmala Sitharaman unveils her 8th record budget.
Okay, well, those are visuals coming in of the Finance Minister Nirmala Sitharaman arriving in the North Block. I mean, that's the typical, sequence of events, and you get that visuals every year, year after year. And FM with the top team then proceed to the Rashtrapati Bhavan to brief the president. From there, the Finance Minister will finally make a way to the Parliament to present the union budget. I mean, so those are pictures and visuals which are coming in. Now, the economic survey expects modest growth of 6.3 to 6.8% in FY26, which is not very far from its FY25 estimate. Parikshit is here to give us the key highlights from the Eco survey. Parikshit, take it away.
The economic survey notes that the real GDP growth in FY26 is expected to be between 6.3 and 6.8%. The CA has warned about the critical risk regarding dominance of financial markets in shaping policy and macroeconomic outcomes, which has led to unprecedented levels of public and private sector debt in some advanced economies. The Economic Survey 2025 has given a clarion call for deregulation and getting out of the way. The CA has gone on to say that the future of reforms in economic policy must now be on systematic deregulation, and government must get out of the way and not micromanage the corporate sector with regulations. On AI, the survey says that a collaborative effort between the government, private sector, and academia is essential to minimize the adverse societal effects of AI-driven transformation and deliver inclusive growth. The CA, in his briefing, highlighted the huge disparity between profits and distribution of incomes in the private sector. While corporate profitability soared to a 15-year peak in FY24, the wages have lagged. A striking disparity has emerged in corporate India. Profits climbed 22.3% in FY24, but employment grew by a mere 1.5%. Despite Indian companies achieving a stable EBITDA margin of 22% over the last 4 years, wage growth has moderated. This uneven growth trajectory raises critical concerns. Wage stagnation is pronounced, particularly at entry-level IT positions. On trade, the survey says that to remain competitive and enhance its participation in global supply chains, India must continue reducing trading costs and improve facilitation in order to boost export competitiveness.
Okay, so those were the key takeaways, but the economic survey also raised alarm over disproportionate rise in corporate profits. You know, the one that Parikshit just referred to. Corporate captains responded to this CEA's call for aligning wage growth with profits, also reiterated the need for, their ask for a capex hike. Listen to what reactions we got to the economic survey.
When wages are determined by inflation, it is determined by wage surveys in the market. They are not indexed to profitability. And because when profitability goes down, the reverse doesn't happen also. That's not the way it is done. And what we have to also look at the fact is when we are looking at wage growth, we are looking at an aggregate number. The fact of the matter is industry has become efficient and needs to do so to be competitive. The fact of the matter is there is servitification of industry. A lot of components of manufacturing are now become to be done by specialized services agency. And that's what's happened across the world.
First, we would say stay the course on capex. That's been a plus in the budgets over the last few years, which is a focus on the multiplier effect that capex brings in and the positivity from an economy standpoint on that front. The second is there is clearly a need for some demand stimulation because we see weakness in the middle and the lower segments, and that's something that needs to be addressed in a pinpoint manner for them.
Okay, well, those are sort of lots of opinion that we got. We'll play out more. Prakash Devan is with us as well, right here in our studios. Prakash, thank you very much for coming on. So let's just talk stocks because we talk enough macro over the next 2 hours or so. What's top of mind to you based on earnings or whatever?
Yeah, I think the earnings have probably got eclipsed because of this anticipation of the budget being a very key event. But surprisingly, earnings have been much better than what we had penciled in. At least till now, whatever has come out.
Which ones?
No, I mean, if you look at some of like even stray names like Indigo, and you have some smaller companies in the defense space. I mean, you would expect a trend to be emerging so soon. It's still January just got over. But my sense is that except for some of the banks which have disappointed,
yesterday's banks.
Yeah, I mean, you had a little bit of this thing with IndusInd and Bandhan. Bandhan, of course, has been in the mend on the way to be mended. So very clearly, expectation from earnings has been slightly different than what you'd anticipate. But top of the mind from the budget seems to be. 2021 onwards, we've had a lot of corporate support coming in from the government, and that's reflected in the earnings to the extent that the economic survey talks about disparity between the acceleration of corporate earnings and wages. I think for the consumption side, for the individual salaried class or whatever, if we were to have some sort of a slab getting introduced, some rationalization without too much of tweaks, we've had enough tweaks on the taxation part. That could probably be very positive. That could probably, start making people believe that things could look up in terms of what I have to spend. And the last thing is agri and housing finance, that is the pocket I'm looking at. That's, I mean, of course, we don't know what all comes through, but agri seems to be a very prime area where things could start making a big difference.
Okay.
Any stocks there? Okay. Unfortunately, we don't know which element of whether it's on the input side, supply chain side, or the funding side, but I think there'll be something creative coming through on that. So let's see, based on that, just an hour away. And
let me ask you a viewer question. Yesterday in the lift in my building, this is what I was asked. Kal budget hai na, uske pehle kya kharido? That whatever the budget does, there are still people who are looking at, because they think things look cheap. So do you have a buy list which is a budget?
No, so to be honest, we believe that some of the expenditure that the government has initiated will continue on the defense side and probably get more meaningful and deeper. So there are small companies there which can grow big, and I like micro caps and small caps. So my bent of mind has always been I would look at a BEL and a HL if I had a choice with a smaller company. So there's one company called DCX System, for instance. Very small, but very high on IP, very high on technical prowess. And they are into defense and aerospace, which is a very good combination of private sector capex and the government spend. So just about 3,400 crores market cap. I don't think it's too big in that sense. But earnings could kind of make a big difference given their runway. So you'll have to look at that.
Maybe you want to repeat it if we have the share. DCX.
DCX. Yeah, I mean, it's a Bangalore headquartered small business, very, very well run. Not much talked about. The float is also not very significant, but very high quality management and the business model per se.
All right. Prakash, stay with us. Let's get in Mitesh and Sudarshan as well with what they want you to do with this morning. The preamble from my side is that on budget days, even if sometimes you're right, you end up being wrong. So it's a volatile day. Keep that in mind. Gentlemen, good morning. Great to have both of you. You guys are the experts. Mitesh, your thoughts first. From last Monday's lows, markets have rallied nicely, 600 points. And now we have this event. What should one do?
Morning, Prashant. In fact, been positive since last 4 or 5 days, suggesting that the Bank Nifty and Nifty could see higher levels. Now, the Nifty has also crossed 23,500, and the structure is positive. Given the fact that we are running into an event on the back of 4 days kind of an up move, the event will be difficult to guess, but let me highlight some critical levels. One, any intraday declines to about 23,350. That will be a buying opportunity on the Nifty with a 80-90 point kind of a stop loss. On the upside, 23,630, 660 is my zone. Once we clear that, then I think I'm looking at 24,000 levels also being tested. So these are the two levels which I'll watch on the Nifty. Similarly, on the Bank Nifty, I think I would want to see the Bank Nifty get past 49,750, and then 50,100 is the next pivot. I think these are the two levels to watch on the upside. And on the lower side, I think 49,350 is my buying zone, but I would be slightly more biased towards the Nifty. Last 3-4 days, I've been advocating buying on the Bank Nifty, but looking at the structure yesterday, the Nifty looks slightly better placed. So any decline to about 23,350, 400 zones for me would be a buying chance.
Sudarshan, morning. What would you recommend?
Good morning. Well, I would recommend staying away. I never trade on large, big news event days. The markets go wherever they want to, and we have no idea. Now, suppose the event was not there today, I would have said that the Nifty has started a short-term uptrend, wait for a dip, and go and buy on dips. Today is not any day to trade, and I would just ask you, Prashant, repeat that preamble that you said. No matter what you do today, you're going to lose money. Be patient. The next week will come, and the week after will come, and the markets will be here every day.
No, and I think that's very, very well put, Sudarshan. So no need to take unnecessary risks, and that's very well put. What would you, in terms of specific stocks, Sudarshan, what would you recommend?
Well, suddenly I have a lot of auto stocks in my list. Now, I can't explain the underlying theme because I'm just looking at the charts. But Ashok Leyland is a buy with a stop under 210. Exide Industries is a buying opportunity with a stop under 365. Hero MotoCorp is a buy, stop 42.40. And finally, Muthoot Finance is a buying opportunity, stop under 22.05. And I'll answer a question that Lata did not ask. And that was that if there is a sector of stock, I think banks should do well irrespective of what the budget does.
Oh, okay. That's important. Thanks for that. I was going to ask a question on which sector, which is what I was asking Prakash also, irrespective of the budget. Mitesh, your stocks?
Yeah. Morning, Lata. I have a buy on Adani Green. If it crosses 1,015, there will be some intraday bullish pattern. So buy there with a stop at 994. targets of 1,065. Coal India is a buy. Disclaimer, we have some futures positions, so there's vested interest, but that's a buy with a stop at 386 for targets of 415 to begin with. A buy on Bharat Forge with a stop at 1215 for targets of 1285. And IRB Infra is my final buy call. Okay. Keep a stop below 55 half, look for a target in excess of 60.
Okay. Actually, Mitesh, that's nicely balanced. Adani Green, Coal India. One fossil, one non-fossil. Okay, gentlemen, wait on. We'll come back to you closer to trading time. Quick break. We've got lots more questions and answers on the other side.
With monetary easing expected to begin this month, will the Finance Minister announce fiscal measures to bolster growth?
System liquidity is still tight and there is deficit. The system needs more is liquidity.
Liquidity is very low at this point, as you know, negative, what, 2.5 lakh or so.
Artificial intelligence has taken stock markets by storm.
How do we make AI all pervasive?
Powered by AI. AI first.
Artificial intelligence.
Ready for AI. AI is providing some cushion to that.
But as the correction set in, investors are largely hoping for a status quo on taxes to stem the current downtrend. Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV18 Motilal Oswal Budget Headquarters.
Now, before I close, I want to warn the American people who are watching at home. You may hear lies and smears in this hearing that'll challenge my loyalty to and my love for our country. Those who oppose my nomination imply that I am loyal to something or someone other than God, my own conscience, and the Constitution of the United States, accusing me of being Trump's puppet, Putin's puppet, Assad's puppet, a guru's puppet, Modi's puppet, being the puppet of 5 different puppet masters. The same tactic was used against President Trump and failed. The American people elected President Trump with a decisive victory and mandate for change. The fact is, what truly unsettles my political opponents is I refuse to be their puppet. I have no love for Assad or Gaddafi or any dictator. I just hate Al-Qaeda. I hate that we have leaders who cozy up to Islamist extremists, minimizing them to so-called rebels. As Jake Sullivan said to Hillary Clinton, quote, Al-Qaeda is on our side in Syria. Well, Syria...
Welcome back to CNBC TV18 Motilal Oswal Budget Headquarters. We've been speaking with Prakash Devan. We're going to have more guests. Prakash, I wanted to ask you about the capex-related stocks for the simple reason that yesterday we got the April-December numbers from the government. And capex has really gone through the roof
They have spent 1,70,000 crore in 1 month compared to 50,000 crores in the last December.
Yeah.
So April, December, now they are up 1.5% year on year. Till November, April, November, they were minus 12.5% year on year. So big cap. Government seems determined to spend its. Any thoughts?
So no, that's absolutely a very positive thing, and that's what I was saying. You need to look at which are the sectors that will finally get most of the benefit percolating. But we have started looking at playing the capex theme by buying into logistics businesses. Okay. So it's like if you generate more power, you need to evacuate it. If you manufacture more, you need to move the goods somewhere, right? And our infrastructure on logistics is fairly dated. It's not the best in class yet. So ports, 3P package, 3P warehousing, all of those are themes that will start looking up. The number of companies, the kind of companies that's a bit smallish, you really don't have. The moment you talk about logistics, you go to a Concor or you will go to a TCI, but then there's lots more if you dig harder. So that's where you need to look at.
It's interesting, Prakash, you say that. By the way, I just want to point out that we've started getting some of the pre-open rates are trickling in, 70 to 80 points higher on the Nifty. That's how it's looking right now. The reaction on IndusInd is negative in the pre-open. Like I've been saying, while we all knew they have an MFI problem, but now it's really showing up in the numbers, in the slippages, which are higher, in the credit cost that's higher. So let's see. It'll probably settle down. We'll wait for this because Abhishek was telling us that while the numbers are bad, maybe not as bad as the market was fearing. So let's wait on this. But Prakash, on CapEx, while I understand your point on playing it via the logistics players, what about the bigger companies? The Siemens, ABBs of the world, I mean, Hitachi with their HVDC, or look how they've done. Now, I know the argument against these companies was that they were all trading at 100 PE.
Valuations, yeah.
Some of that is corrected, but is it enough?
I don't think it's enough because you've already penciled in the growth and they will have to grow to justify these valuations. So, the market tends to kind of discount things in exuberance. And some of the businesses I was looking at are probably discounting 2047, the Viksit Bharat numbers as well. So, which is far-fetched, but you'll have to be cautious. But you have areas like pharma and, agri, cement. Those will probably attract more attention based on how people interpret the announcements as we hear them.
Okay.
All right, let's actually throw it across to our colleague Shireen, who is joining in from Delhi to lead the coverage from budget headquarters in Delhi. Shireen, good morning.
Good morning, guys. Yes, of course, we're just counting down to the finance minister's speech. This is going to be her 8th budget, record-breaking number there being delivered by Finance Minister Nirmala Sitharaman. And, we've been talking about expectations and wish lists and all of that. I think the mood here in Delhi, and this is what all of our colleagues are also picking up, is that the message is very clear. It should be seen as a do-no-harm budget. Now, how feel-good will it be is the question, but no controversy. Don't want any kind of negativity attached to the budget. So a do-no-harm budget is certainly what the government is going in with as an approach at this point in time. Relief for the taxpayers, that's the number one ask. But again, I go back to, just the economic survey as well as the comments that came in from the economic advisor last night saying, look, it's not mutually consistent to continue to ask government to do the heavy lifting on capex and then also expect them to do significant tax cuts. It doesn't work like that. There is limited fiscal space and limited fiscal room. The government so far has always prioritized capex, has always prioritized infrastructure development and investment, and the baton now needs to shift to the private sector to start to lift on investment, wage growth, and so on and so forth. So we'll have to see whether there is any change as far as prioritization is concerned. I would imagine that there will be sweeteners on the tax front for the middle class. That has been something that's been talked about, and perhaps this budget will deliver. But how significant will all of that be is the question. And even on capex, overnight we saw the numbers come in. 6.85 lakh crore rupees is the actual spend. It has been an improvement, and that's what the government was hoping, that as the year progressed, progresses, there will be a pickup in spending. So, whether we're going to see a significantly higher number or not, again, let's temper our expectations on that. And we'll also have to see what the number is versus B2B and RE to BE as well. So those will be some things to watch out for. On disinvestment, and I heard many guests talk about that. We've not just undershot the target, we've been nowhere close to the disinvestment target as far as the last many budgets are concerned. And I think increasingly the feeling is that there is limited appetite for significant disinvestment or even privatization, even stuff like IDBI Bank so far, which has been on the list for the last 10 years, and that process of EOI and bids and all of that has gone through. We're still awaiting a decision on that. So I'm not sure whether there is really any appetite, and we should sort of have in store a big number as far as disinvestment, etc., is concerned. So that's really the mood here. Do no harm. How much will it be feel good is the big question. But we'll get you all the industry leaders joining us here at the CNBC TV18 budget headquarters with the Confederation of Indian Industry through the day. Let me go across now to Nigel and Mangalam live at the National Stock Exchange as CNBC TV18 rings the budget bell. Nigel, Mangalam, over to you.
Well, what a day it is, right? We're calling it a super Saturday. We're calling it the day where we seize the moment, and that's exactly what the hope is out there as well. We're here at the NSC on a special trading session for the budget with special people as well. We have the man himself. Sir, what are your expectations from the budget? Because the stock market wants no change from a tax standpoint, be it the long-term capital gains, short-term capital gains, STT. They want some sort of relief. What are your expectations? Let's start with that.
Running an exchange is basically providing the framework. The market's participants have their own perspectives. We as exchange have our own perspectives. And so we tend to work more on the developmental side, saying if the country grows, if the businesses grow, then naturally the markets will grow. And the taxes are more temporary in a way. So that's where we try to focus more on the developmental side and the growth side of the budget.
Definitely, but I'm sure that you would have some, desire for from the stock market standpoint.
No, the idea is to have a more consistent approach which the government has taken over the last 10 years. And if you look at it the other way around, what are the sources of revenue for the government and what are the sources of expenditure? And literally GST is a situation where all the states have a veto. So GST is something the central government cannot do on the budget. What remains is only the income tax part of it. And that's where most of the time, last 10 years, you have seen some changes here and there. But again, because everyone has expectations in terms of the spend, that the social spend has to be there on the food, on Ayushman Bharat and many other things, as well as our infrastructure. And that's where the government will be sort of trying to juggle all these things. And we are pretty sanguine that if they are able to spend money on infrastructure, then naturally it increases India's ability to grow faster. And of course, the markets will also benefit in the long run.
All right. Sir, this time, capital market has been a big contributor to the tax kitty as well. Do you think this momentum to continue?
Of course, see, India is just growing. I think the growth has started. More people are participating. And so STDs and sort of a framework of capital gains tax also have come in over last few years. And I think put together, if India continues to grow, more people continue to participate.
STD number has already breached the expectations of this year. Do you expect any STD cut in this budget?
For me, the STD itself is so small, people don't even realize. And that's why I don't think there's going to be too much of tinkering with the STD part at all.
All right, but the markets will be hoping for some kind of a booster shot, so let's wait by for that. Gautam, let's come across to you. What's the crucial number you're looking at? We have been having this debate whether you're going to be focusing more on consumption or capital expenditure. What's the crucial number we should be tracking?
So the headline number will be fiscal consolidation, which will anyway be lower than what we have seen over the last 2 years, which is great.
What's the number that will keep you happy?
So our forecast is 40 basis point consolidation this year, which is lower than 80 basis point we saw for FY25, so it will be good. But I think more than the headline number, the mix of small schemes, packages, etc., whether it turns the sentiment both for consumers and corporates. That's what markets would look at.
Let's go across to.
Let me ask Nileshba on the capex front. Nileshba, you expect Dhoni-like batting in the last 3 months to meet the capex number?
Well, at least in December, the quantum increased and the quality increased. So let's hope that Dhoni spirit lives in the capex and we achieve 11,11 crores auspicious number.
We did ask Ashish about what his expectation from a capital market standpoint is. He said that from the exchange standpoint, he wants the framework to continue. What does the market want according to you? I mean, what do you think the way the positioning is right now? Everyone's a little down on sentiment. What is it that can boost sentiment, turn things around? Not for the near term, mid-term and long term, but just, the way things are right now.
So if we go by the meme industry, then they just don't want increase in taxes.
Okay.
If we go by real market expectation, they want Triveni Sangam. One, as Gautam mentioned, fiscal consolidation, deliver on the promise of 4.5%. Number two, go for capex because private capex is subdued.
Yeah.
Support urban consumption, especially as that has started slowing down a little. And finally, if you have to spend money and you have to maintain fiscal deficit, then you have to raise resources. Now, please don't tax people who are already in the net. Outside of tax nets, there are many big sharks. Go for them. And my wish list, which I don't know whether it will ever come, is raise resources through out-of-box thinking. For example, we always have believed that Western world does things right. In US and most Western world, there is exit tax. We have seen many rich Indians leaving India and settling down abroad. Why not tax them? Second, we all know how much gold Indians own. We don't even know probably how much gold Indians own. That's lying in our Tijori and safe deposit locker. It's a frozen savings. Why not do a gold monetization scheme which can bring those gold in Tijori to outside economy and provide growth capital for our entrepreneurs? The third thing, we have been managing our PSUs pretty well in last couple of years, but overall return on equity on PSUs, bearing few exceptions, is really poor. Should we copy someone like GIC, Temasek or Norges kind of sovereign wealth fund, which allows us to manage our PSU assets better, generate better return? So there are multiple ways outside of economic survey, outside of budget to raise resources, use those resources to fund capex and other investments, and maintain the path of fiscal prudence. That will blow the market's mind.
Okay, all right, Nilesh, I thought, my imagination was going a little wilder since the SIP flows have been strong, the domestic money has been strong. Do something to, give a little further impetus because those FIs have been selling.
Nigel, what will be the happy return for you in SIP?
For me?
Yep.
I'm going to keep it going.
What return, in your opinion, will be good?
It should be at least, in the mid-teens over a longer duration.
At this correction, SIP returns are already in mid-teens.
Yeah, but I'm hoping that it sustains, right? I mean, and if I get more, I'll be even happier. But
if they present a budget like this, I can assure you that those returns will be sustained.
What will bring FIIs back? $30 billion sold over the last 4 months or so. What do you think will bring them back?
It's not about only the FII, but the FDI as well. Anything in the budget that you expect that will draw a lot of FDI capital and FII capital?
So on the FDI side, I think the CE has done a fantastic job on ease of doing business. When your wage slip font is prescribed, when the swing of the door is prescribed, when maintenance of health record for the cook is necessary, all those things create an Inspector Raj. Now, you have to whitewash your wall, but what is the definition of whitewash? Who knows? So we have to improve ease of doing business from the current level. It's better than the past, but we still need to go ahead. If we improve ease of doing business, my feeling is that FDI will come back. Please remember that there is also FDI going out with people like Hyundai booking profit, LG booking profit, Whirlpool booking profit. So it's that experience that in India there is exit also. In most global market there is Chakravyu. You can enter, you can't go out. So FDI will come provided we can improve ease of doing business.
Right. I think we are about 20 seconds down to opening the market, ringing the bell here from NSE itself. So we just
it's a super Saturday and we're all set for it.
Countdown as well. 9, 8, 7, 6, 5, 4, 3, 2, 1.
All right.
Okay, so it's a
well,
green start at least.
the bell has gone, and the bulls have spoken from NSE, and we had, I think, there's a image floating around on social media, which will, you'll see Mangalam and Nigel rub the bull's horns, and maybe for now that's really worked. About 26 points higher. The Bank Nifty is a little iffy. I just want to quickly check the reaction on IndusInd Bank to begin with. Right now, 1.2% on the upside. Even Sun Pharma, after the conference call, the commentary, everything, Sun Pharma is also on the upside. So large caps looking good, but mid caps looking even better. 0.5% up on the mid cap index.
All right, let me just quickly run through a few more names, right? So in terms of what's happening right now, because we must address that. Inox Wind is the big mover. And we discussed this in the morning. So 7.5% on Inox Wind. Vivek highlighted the numbers, looking very good. Stocks have seen big damage, along with Suzlon. Suzlon is up another 4.5%. So this is the renewable part in that sense. There is, it's, I think, budget related. There's no other reason. RVNL, IRFC, Jupiter Wagon, Ircon, Railtel, Titagarh, BEML, these are all up between 2 and 5-6%, and these have all got huge volumes. There's no separate railway budget. You'll hear allocations, etc. in this budget, and there's been focus on spend on railway, so this is that, nothing else in that sense. Apart from that, Sun Pharma is up about 1%. It's starting small higher. Walkhard ended 10% in the green yesterday. It's up another 3%. From the EMS space, you've got Keynes, which is up about 2.6 higher. Remember that electronic component PLI, 25,000 crores. So something we may hear from the budget today. There is Praj Industries, which is up about 2%. These are also potentially, right, ethanol, etc., government policy. Depending on government policy, budget play, we don't know. Kalyan Jewellers is the top volume traded loser. It's not down much at all. Yesterday was a repair. It was up 10% yesterday. It's down about 2%, starting up.
Gold duties
big volumes.
Are expected?
Gold duties are expected, certainly. And Manisha has been telling us about that. UPL saw a big move after that guidance, which the market likes. Stocks about 600, but again, over the years, big underperformer. ONGC is down 2. Bandhan Bank is down 0.75%. These are some of the top volume traded losers. EPAC Durables is down 5%. And I think Chola Finance is also reacting to numbers. It's down about 1.5-2% or so at this point. Hero MotoCorp, that CFO stepping away, 2% lower, 42.60 or so as far as Hero MotoCorp is concerned. There is Karnataka Bank, Aster DM, 5-star, but volumes are thin, so I wouldn't take too much. I think the market is absolutely flat. 5-point change is neither here nor there. And I think that's
what happens if you trade on Saturday.
It's the right way. But also it's the budget is, I think, the right way, right? You don't know what's going to happen. So go in absolutely light.
There's some red.
Unchanged.
Some red. Watch the banks. There's a little bit of red. Bank Nifty and Nifty for the time being.
Okay, Nilesh, thank you very much for joining us in our studio. Big day for us, and thank you for being with us. Well, how do we start? Do you think we should start buying in now? Because as I was telling one of our foreign guests, the rupee is cheap enough and stocks have fallen. And we have, that FII number started declining. Yesterday was only 1,800 crore. You think we're reaching some kind of an inflection point?
It looks like, Lata. Clearly, few things have happened. Most importantly, like what you said, the currency has become a lot more attractive from an investment point of view. Valuations have corrected quite meaningfully. The large caps have corrected 10 to 15% from the peak. Yes. It's been almost about 4 to 5 months of correction phase that the large caps have gone into. On the mid and small cap side, the correction has been as high as 30 to 40% in individual stocks and almost 20% at the indices levels. And clearly, there have been pockets of growth. It's not that we're looking at the headline numbers and low single-digit growth, but then there are enough number of companies in various sectors which have demonstrated very, very strong growth. So clearly believe that clearly the fundamentals are still intact and the valuations have become more compelling, more appealing.
By the way, just revisiting again more numbers, ONGC is the biggest loser on the Nifty right now, and that's a result reaction playing out. So Darshan earlier was telling us that Crude oil realizations have been on the lower side. So and there's, I think, lower other income, which is why the profit is also below estimates. So just keeping that on the radar. Nilesh, hi, great to have you with us on a Saturday today. I just want to get your sense on this FPI selling. And I know we've all been very brave and, as investors and as a country, we need to be. And domestic institutions have done a phenomenal job of absorbing the selling. But in your memory, do you remember a time like this where on a daily basis, usually it's in a pattern, it waves up and down, but it's been this one-way incessant fall. Do you see it changing at all unless there's a major crack on Wall Street? And if it continues in this manner, then what are we looking at, irrespective of the budget over the next couple of weeks and months?
Well, clearly, I think one of the challenges which they have faced is more around their home market doing extremely well. The US pretty much has been the best performing market, at least over the last 1 year. And then the views around the strengthening dollar, the weakening EM currencies, that's clearly been their very, very big focus area. And on top of that, valuations here, they look at it more from a historical perspective, that we're trading at premium valuations versus our historical averages. So that's been the second big factor. The third big factor is probably, I'm not entirely sure about this, but India is probably the only large market where foreigners have to pay tax. I think you as an individual, if you were to invest into the US market, you probably don't pay tax in the US, you pay tax in India.
Look, Americans have to pay tax for their market. I mean,
for their on your home market.
Foreigners.
Yeah.
10% tax across the board of the US.
If you as a foreigner invest in any major market across the world, you as a foreigner, you have to pay tax in India, not in that foreign market. Okay. So if you clearly see it, I think these are the three factors. One is your home market doing well. Two is the valuations. And third is, of course, the tax angle. These have been the three factors. Now, even if one or two out of this give way, which means either the tax gets reversed, the probability of that is extremely
let's not even
low.
Go there.
But if, let's assume, because of this correction, the valuations look a little more attractive or more reasonable, or if the home market,
the US market starts
looks more expensive in context of the overall growth, that India earnings will grow in double digits, US earnings will grow in single digit, and therefore let's move to India. I think if any one of these three factors starts to play out, this trend can reverse.
But the question is, I don't know if you see it on the horizon anywhere or not. And if you don't, my question was, if that inflection point doesn't come anytime in the near future, then can a capex announcement today, we are at 11.1 lakh crores, now let's say they say 12 lakh crores today. Can just an announcement like that from the budget revive market spirits?
It can. I think the first is do no harm. I think if that's the starting point, which means don't raise taxes. If at all, simplify taxes, rationalize taxes, maybe lower taxes. That's a good, useful starting point to have. After that, if the budget continues to be growth-oriented, there's a huge focus on capex, on infrastructure. If there's a better capital allocation, the capital allocation which has been happening over all these years, if that gets accelerated even further, these could be good trigger points.
Absolutely. I think well put. First to no harm. I think we'll live with that. And anything on top, of course, is cherry on the cake. Let's throw it back to our colleagues, Nimesh, Nigel, Mangalam at the NSC. They've got a stellar lineup there as well. Guys, over to you.
Well, thanks a lot for that, Prashant. Well, we have Bala as well, who joins us on the panel. Bala, thanks a lot for joining in. Well, tell us what's on your wish list. Budget 2025, nothing wrong in wishing, right? But if you could give us a couple of points on your wish list.
Of course, clearly, if you look at the last 3-4 years, I think you've done a great job in terms of ensuring the budget expectations are kept under control. And second, the fiscal focus, which has been the main focus for the government, and also improve the overall tax collections. I think we've done a great achievement so far. I think in this first year, probably we'll see the fiscal deficits will be a lot more under control. The government will have enough room actually for them to actually give away more in the hands of people. Therefore, my expectation the budget is having seen good success in creating a great collections in GST, tax collections overall to GDP ratio has been improving, and the government capex has also been going up each year to drive the economic growth. I think they'll have enough room actually to drive the consumption growth this year. I think probably more money in the hands of people, especially at the time where the last 2 months have been, almost six months have been quite tough. The economic growth coming down and the general consumption slowdown has been seen.
So you're saying a bigger focus on consumption is what you're looking for, and you believe that they have the headroom.
Correct. They will probably have more tax cut, especially for the middle class income people. So more money in the hands of people, therefore more money to spend, and therefore the consumption can be driven back. So that one big area of focus, I think my own belief will come.
Consumption
And second, consumption to boost. I'll also not be surprised if they take a bet in terms of capital gain tax. That given the fact the last 2 years, despite increase in taxes, and the Indian equity market has run exceedingly well in providing the much needed capital for corporate growth. And given the fact that now today the need of the hour is actually to drive back the growth in the economy, there's a high probability when they may even consider some element of tweaking in the tax structures to ensure not only, of course, it boosts the capital market sentiment, it also boosts the whole ecosystems around the real estate.
So you're saying, so reduce it a little bit is what you're saying?
There is, I think, with last
calling
year,
for the sweets.
We just call for all of them because the bulls would definitely rejoice that.
But I'll take a bet because I'll not be, of course, I'll take a bet on that. Given the fact last year was a surprise increase of about 2.5%, which is not needed as such, given the fact that you have been quite compliant and tax ratios have been increasing, and the stock market has been helping actually for companies to raise capital to fund the growth. And that is being the case that people have understood the actually power of how Indian capital market can provide capital to the Indian economic growth. Given that fact, and also given the fact that FI has seen only outflow in the last 1 year, there is a high probability that they may take a bet in tweaking the capital gain tax in such a manner. It boosts actually sentiment.
Well, most on the street would be happy with no change whatsoever. But if you're saying that it is lower, then it'll only be the added sweetener. Let's ask Gautam. Gautam, realistically, what can be done? Because yes, everyone's hoping for capex to happen, consumption to be boosted, fiscal consolidation, all of that. Realistically, what according to you is the expectation? And on fiscal consolidation itself, the next couple of years, yes, we do have that glide path. Thereafter, people are looking at newer ratios as well, perhaps something like a debt to GDP. What is your view on that? And you have an underweight rating on India in your EM basket. What do you think should happen this budget for you to, twist that, maybe turn positive once again?
So look, the government has a lot of levers always, as Neeraj Bhai was earlier mentioning about some unique measures which the government can always look at, or innovative measures to get more revenues. But beyond that also, the good thing is none in the market is worried about fiscal slippage. Unlike few years back, that itself is a great start. That gives a lot of leeway for government to keep sentiment intact. But in the context of this budget where there's a lot of demand around consumption, around capex, I think, look, ultimately government can't spend in a big way. But there are many small signals which the government can do. And what will be very relevant in my view from the market's perspective is if the entire package creates a feel-good and positive sentiment, both for the consumers and followed by corporate capex activity. Like if you go back a year back, we saw some signals of private corporate capex building up. Corporates were waiting for elections to get over. Post-elections, we haven't seen that come back yet. So any package, not necessarily in rupees or dollar terms, but at a broader package level, signals which revise this private corporate capex sentiment, I think can go a long way to boost markets. Finally, your question around our EM strategist underweight stance on India. Look, that's a relative call in the context of the near-term valuations, everything. I think there's no debate, including among the global FIIs who have sold in the last few months, about the structural growth in India. Look, in the context of FIIs also, their holdings in India is $800 billion, roughly. They have sold $20-30 billion. So it's not that they are walking away. They're still here. They want to be here. It's a question of getting the right opportunities in terms of the right stocks, and therefore the budget sending the right signal can go a long way in getting the interest back from the FIIs.
All right, just a quick question with regard to that preference in the emerging markets. India is, not top of the pop. So who's, do you bring China? It's a valuation call that you're taking out there?
So right now it's an overweight China call. That's primarily the valuations there and some stabilization in the macro, not necessarily a big recovery, but stabilization in the macro. But primarily it's a valuation call. It's just an extremely undervalued market compared to history.
Well, that's an interesting point because everyone's talking about only the FI selling, but as a percentage of the market capitalization, actually, it may not be that much. But the hope is that, in fact, they take the foot off the pedal a little bit with regard to the acceleration. Nilesh, let me get you into this. What's your take? if they let the fisc slip a little bit, not too much focus on the fisc, but maybe more measures to get the economy up and running. And to give credit, the government spend, capex spend, as you mentioned earlier, 1.7 lakh crore in the month of December was the highest. And that's why even year to date, now the spend in this fiscal year is more than last fiscal year. So that was good. And the RBI as well, they have realized there's a bit of a problem and there are measures being taken. So your take?
So one, as Gautam mentioned, right now market will be benevolent on the fiscal slippage. But please remember that our combined fiscal deficit between center and state is upwards of 7%. I don't think so we should go on the path of fiscal slippage.
Okay.
It's like putting burden on your next generation for your today. Which parents would like to do that? I'll rather leave asset for my daughter than the debt. So same thing should apply to the government. And yes, there are various levers in the hands of government. Few I talked there. One big is the divestment. Now government today owns about 10% of India's market cap. There are many unlisted segments within government. Why not we manage that well and raise resources? You have almost $500 billion worth of PSU holdings which are listed. A small monetization over there will give all the resources you need to fund your spending and yet maintain the path of fiscal prudence. Today, very few countries are progressing on the path of fiscal prudence. If we walk over there, many FPIs may change their view about us.
So gold monetization, that exit
tax,
clause, divestment, those are the three big measures.
Catch the sharks outside the tax net.
All right, catch the sharks outside the tax net. Once again, on this out-of-box measures, etc., while we're still talking about job creation, skill development, we're talking about boosting manufacturing, capex, all of that, the biggest underwave right now has been artificial intelligence. What's taking place in the world as well. We heard glimpses of that, read glimpses of that in the economic survey. Do you think the word AI will be a prominent, part of the finance minister's speech? Do you think the government, in light of what is happening right now, will maybe at least talk about that?
So undoubtedly, they'll talk about it because it occupies such an important piece in the economic survey. And we have to follow the ISRO model on AI. We don't have resources like Western world. China has already shown, albeit with a little bit of magical numbers, that they could develop AI at $6 million. That probably is a wrong number, but certainly it's much lower than what Western world is spending. And we have done that in ISRO. Prior to 2014, we sent 35 satellites into the orbit. Post 2014, I think we have sent multiple numbers of that at a much lower cost. If we can do that on satellite, what stops us from doing it on artificial intelligence? If the foundation program of AI is ours, then people will pay us toll for using that highway. If we are using someone else's highway, we'll have to pay that toll. Forget the security risk, just the commercial sense. The return on investment on AI foundation will be far, far better.
You spoke about satellite. The only satellite that the street wants is, a boost in the sentiment, and as a result of it, there would be rockets in the market, hopefully, Nigel.
All right, well, Gautam, let me come across to you then. On the markets, on the Indian markets itself, from the emerging market basket, you're not very, very positive, But there'll be sectors and themes that you'll still like as well, right? From this budget perspective, what is the booster shot you're looking at for a couple of themes out there?
Look, there are enough pockets already emerging after market correction, not necessarily at a sector level, but at a stock level. But industrials, pockets of consumer, not broad consumer, financials already emerging attractive.
So the best of industrials is not over. There is still, there is after the recent correction, some of them are looking good.
Because look, if you look at industrials top down, what we have seen in the big cycle last couple of years has been driven by specific spending by government, defense, etc. We still haven't seen a big private corporate capex cycle happen. So industrials, in theory or in possibility, has a long runway. But the missing ingredient is the private corporate capex cycle, which is one of the things we'll watch out closely in this budget.
Right. Bala, your top picks, sectors?
Yeah, I think the way I see is, of course, budget is one part of it. And if you look at beyond the budget, we'll have still RBI monetary policy. We'll have to do a lot of stuff, especially with respect to the steps that they have taken the last 1 year in terms of tightening the credit growth, as well as tightening the entire balance sheets of the banks and introducing new measures to control. I think post-budget, depending upon how the fiscal numbers will be projected, the monetary policy will be more supportive of removing some of these tightness than last year turn up the growth back. Therefore, financial sector is one, have come to the reasonable valuations. And second is, I think the spending that has been happening in India, especially in the government capex, which is now picking up. You'll probably see all the sectors which actually been the large beneficiaries of the capex growth, including energy sectors, will probably be another big sector to look for as we move forward.
All right. Well, that's an extremely interesting conversation from the NSC, where we rang the bell on this important day. Finance Minister with the President of India and, of course, her team from the Finance Ministry as well. That's this ritual. The Finance Minister goes to the Rashtrapati Bhavan and, of course, then with the permission goes to present the budget to the Parliament. So that's
the law
essentially...
says, Prashant, the law says the President causes the budget to be laid.
Correct.
So it has to be.
Absolutely. Well, those are some sort of ceremonial shots coming through.
But correct me if I'm wrong, that this time we're getting more visuals from, inside Rashtrapati Bhavan and some of the North Block. Usually
I think so, Surabhi, because I don't remember these shots.
We've not seen this before. It was the customary, earlier the briefcase, then the red tablet, but outside North Block. This is interesting.
The women are in step with social media more.
Absolutely. And why not, right?
Yeah.
So those are visuals. And we'll sort of keep on the visuals on the side of the screen as well. Let's get some corporate reactions now. Expectations more so, because the budget is still ahead of us, not behind us. Atul Lal is now joining us, Managing Director at Dixon Technologies. Is the leader in the EMS space by a long shot. Atul, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side. It's essentially the poster child for what the government can do in terms of pushing an industry and really helping it start up from the scratch with those PLIs working their magic over the last many years. What should we expect this time around, Atul? There's that components PLI, which has been spoken about quite a bit. Your expectations?
So, Prashant, you're absolutely right. We in the industry are very keenly waiting for the component PLI to be rolled out. Hopefully, we'll hear something about it in the budget. Please appreciate that the electronics industry has been on a significant upswing. And the agenda of the government is to take it up from $150 billion to almost $500 billion in the next 6-7 years. And the first part of ensuring that all devices are being manufactured in India has already been achieved. The next is to enhance the value addition, expand the value addition, for which the component ecosystem is required. So we are keenly looking forward to the rollout of the PLI scheme for components, which is going to be essential in taking the industry forward. That's one bit. Second, of course, electronics manufacturing is a highly labor-intensive industry. So we expect something more because the Honorable Finance Minister had already rolled out some schemes. We require some structural strengthening of those schemes. We feel that there should be something on that line also, so that the employment creation is seamless. So these are the two things. And of course, there is some tweaking required in the indirect taxes so that the operation of the industry is much smoother. So electronics industry is on a high, and we are keenly looking forward to this budget on these three parameters.
Atul, just one clarification. The earlier PLI winds down. There is no concessional. The component is, of course, ahead of us, but the earlier PLI is now winding down. There's no expectation on that, right?
So 25-26 is the sunset year of PLI scheme for mobile. However, the schemes for white goods and telecom devices carry on. There is still a significant part of tenure is still left. So we feel that there should be something more on the PLI for mobiles, because mobile has already emerged as the second largest export product in the country. And we need some kind of handholding more, because still this industry is in a status of infancy to take it forward, possibly with some more tweaks, but some more handholding is required beyond 26.
Mr. Lal, just to get further clarification, the new PLI scheme, which has recently been announced, which is for electronics, that covers components, or are you now saying that we need another additional new scheme, which will specifically cover components that go into electronics?
So we are waiting for the rollout of the electronic components PLI scheme. We understand it's going to be rolled out shortly. Basically, we are talking and referring here to non-semiconductor components. What government had earlier under ISM 1 was primarily focused on the semiconductor components. So here we are talking about the non-semiconductor components. which form almost 50% of the bill of material of electronic devices. And that is essential in giving stability and also improving the cost structures in the industry.
Okay. And Mr. Lal, you're expecting that 15% concessional tax regime to be extended. You already have taken advantage of it.
Yeah, in many of our units, we are availing 15% tax regime. Yeah, because that's going to be again a big up, because we in the industry are having significant capex investments, and we're expanding. We are setting up almost 2 to 3 factories every year. Our labor intensity, we were 2,000 people 7 years back, we're 35,000 people now. So that support is also going to be helpful.
Well, Atul Lal, they're talking about the components PLI scheme, and I just wanted to make a point here, because in my conversation with the IT Minister, Ashwini Vaishnav in Davos, he did acknowledge the fact that the government is working on a PLI scheme for components. He also said that the consultation process was on, but did suggest that perhaps in the next few weeks we could hear something more about that. So whether we see an announcement in the budget or an outlay in the budget, I'm not sure. We'll have to wait to see. Of course, the expectation is that it'll be about 25,000 crores. That's the estimate at this point in time, but we'll have to wait to see. Mr. Lal, a quick comment from you on that?
Yeah, I appreciate it. We also have a similar understanding. So if there is some indication, some positive announcement, we know that the exact contours of the scheme is going to take some time to be rolled out, because it requires cabinet approvals and more complex processes. But some indication then is going to give a huge positive sentiment in the industry.
Yes, that certainly is the case. But I'd also like to welcome on the CNBC TV18 budget headquarters our budget editors, Atanu Chakrabarti, the former Economic Affairs Secretary, now the chairman of HDFC Bank, and Rathin Roy. Gentlemen, thank you very much for joining us. Well, not so bright and early, but bright and early for a Saturday morning for certain. Mr. Chakrabarti, let me start by asking you, overnight, any epiphanies on what possibly the finance minister could do or may do? Any out-of-the-box ideas at this point in time?
Well, all ideas are in the box, I guess.
they've been sealed. They've been sealed. Now they only have to be delivered. But Nilesh Shah was just talking about what could blow the market's mind: possible gold monetization scheme, sovereign wealth fund, taxing those who are out of the tax net, perhaps taxing Indians who are leaving Indian shores, to go abroad. You think that any of that is something that the government may want to consider?
Well, government had on the gold front, gold monetization has been thought through, but frankly, even the sovereign gold bonds which had come out have been costing a lot. They are quite expensive for the government. Perhaps in some fashion, if it could be used, but in any case, the market is using it to create credit. So to some extent, that's getting used without government getting into it.
And you're right, they pulled back even as far as sovereign gold bonds are concerned, because of how much it was costing the government.
Etc. Again, the idea of sovereign wealth funds have been there for quite some time, but it has to be linked to a very strong, powerful disinvestment program. It was talked about.
Any hope on that? Any hope on that? A very strong disinvestment program?
I have my prayers on that.
So you're not hoping?
I wish that this investment program picks up. Unfortunately, a lot of ideological things were attached to it. When it was happening, it was going great guns. Almost 1 lakh crore per annum was happening. People said that companies are not getting privatized. So the ownership debate started and virtually killed the program. The narrative on which, frankly, which also happened perhaps from your studios, also to some extent killed it. I think people going out of India make for huge amount of remittances into the country. So taxing any of them, I don't think would not be a very sound economic idea. Because entry and exit of people, free market of, let me use the word labor in that sense of term, as well as free market for capital. These are two essential prerequisites to maintain our growth rates.
Absolutely. Rathin Roy, literally about an hour and a half away from the budget now. Do do you believe that in terms of priorities, things are likely to change, or it will continue to be capex, some sweeteners as far as consumption is concerned, and sticking to consolidation?
I certainly hope so, because I take a very realistic view of what government is capable of and what government is not capable of. And I'm very clear that the structural problems that the Indian economy faces are not going to be solved by tinkering with the budget. They require much more sort of whole of government action. So the best thing you can do in a budget is maintain macroeconomic stability, try and ensure that the budget does not respond to stuff like making markets go mad. Market going mad is the equivalent of a mujra. I don't want the market to get excited over mujra. I want the market to be excited over Indian economic fundamentals. So if the budget speaks to Indian economic fundamentals, and that involves stability, that would be a very good thing. And therefore, these kinds of everything that you mentioned that could happen in the budget will have an infra-marginal, irrelevant impact on the public finances. I think Otanu is right that the only place we are not a net commodity exporter. Sovereign wealth funds are normally run by net commodity exporters. So if you did not want to spend disinvestment receipts in the year in which they were incurred, you might want to run a sovereign wealth fund for that. But that is irrelevant now, because the government is, in my view, not capable of disinvestment. And that is why you have this, the worst situation ever, I think, was in 2019, was it? When the government claimed they would do something like 2 lakh crores of disinvestment, end up with some pathetic number, 25,000, 30,000. That is the kind of nonsense that diminishes our credibility elsewhere. I must compliment the government. Since that date, if you either look at tax forecasts, if you look at disinvestment forecasts, they've been very modest, very achievable, and the government more or less has delivered in, if you look at the RE, what it said it would in the BE. I'm hoping that track record continues and the government delivers in terms of, on the taxation side, in the RE what it said in the BE. On the expenditure side, I think the government is in a bind, which is important to understand. We're very interested to see how the Finance Ministry resolves this bind. If you reduce taxes, you reduce the space for public expenditure. You will therefore either have to cut expenditure as a percentage of GDP or increase borrowing. If you increase borrowing, you put further pressure on bond yields, which is not going to be a good signal for the markets. So that's I think, the real bind, that even small reductions in the tax GDP ratio, might well, now people say corporate taxes have fallen. The only way, frankly, you can raise corporate taxes is by raising corporate tax rates.
Which I mean, seems highly unlikely at this point.
Because profitability has fallen, you see.
Not just that, but also the signal that you send out. I mean, you're saying that you want to revive private investment and then to be able to even consider the possibility of hiking corporate tax.
I have a mild disagreement there, because I think private investment has not revived with low corporate tax rates.
No,
so if you want to make a trade-off and you want to increase private consumption demand of the rich, remember only the rich pay income tax in India, 3.5 times the per capita income, then you could raise corporate tax rates and lower personal income tax rates. But again, the impact would be infra-marginal. So I agree with you. I mean, it wouldn't be, I don't see any great urgency for the finance minister to do it. So I think this ought to be a steady as you grow budget. Normally with that sort of budget, you will see a lot of dramatic rhetoric. The Prime Minister already started his rhetoric yesterday. I expect to see a little more of that in the last budget. The last 3 budgets have been shorn of rhetoric because the Finance Ministry had a job to do. They had to deal with COVID, they had to reduce the fiscal deficit, and therefore the Finance Minister's speeches were mercifully short. I'm saying something to listeners, the longer the speech, the less substantive will be the budget. So watch that speech.
Well, we will watch the speech. A quick final comment from you before I toss it back to Bombay. Mr. Chakrabarti, on the expenditure side now, this balancing act that they will need to do, something will have to be put on the table, something will have to be sacrificed. What is it likely to be?
Well, Rathin has very rightly said, your space on the face of it looks very limited. It's very important to do the fiscal consolidation. Otherwise, to control the horses of inflation would become difficult, because fiscal policy and monetary policy are somewhere joined at the hip. Therefore, I guess the time has come to have another expenditure commission for somebody to sit down, go line item by line item. There's a lot of junk which remains. People miss it out. They go in as standing charges which need to be removed and cut it out and make it much more leaner organization. Government has to become small.
So our own version of Dodge.
Well, not in that sense, but however, not something overnight, not something which is sort of shakes the market, but something which requires.
No, fair point.
It happened with the last, there were two expenditure commissions, which did a reasonably good job in setting, and that cuts at the margins, but very effective.
Well, that is certainly an idea that we don't know whether the government will take forward this time around or not, but our budget editors are going to be here with us through the day analyzing the fine print, and they have the experience of doing that, but for now, it's back to the markets. Lata, Prashant, Surbhi, over to you.
Thanks for that, Shireen, and the markets are holding up, keeping the green screen going, at least for now. Keeping the faith going, and the green screen is what we have, including a lot of buoyancy in mid-caps. We should keep pulling up some of these stocks, the budget-related stocks. PSUs is where the action is, your SJVN, a couple of these names, which is where the volumes are also on the higher side, NBCC, SJVN, these are up. And the infrastructure-related plays or the CapEx-related plays, they've been doing well. And then there are names like Suzlon, of course, on the hopes of renewables getting a boost in the budget. Nilesh Shah is with us. So Nilesh, some final thoughts. At the end of the day, it's all about portfolios and what to buy and what not. Now, I know in our earlier conversations, you've always been a big bull on technology, that too futuristic technology, some of these cutting-edge internet companies. So they're going through their own challenges. I mean, Zomato and them acknowledging the competitive intensity. So are you still as optimistic? And what else beyond them?
Well, the recent correction has made me even more optimistic. Just look at where these stock prices were a month ago or 3 months ago. From there, they all have corrected probably between 20 to 40%. So be it essentially your quick commerce guys, your payment companies, travel aggregators, or some of the other platform companies providing services to mutual fund companies. This all has kind of corrected quite meaningfully, but the long-term prospects remain intact. So clearly, I believe that they've become even more compelling than where they were maybe a month ago, 3 months ago.
And budget-related gold. Budget-related. Because the expectation is that gold taxes, import duties were lowered because the government had to meet the sovereign bond outflow. But now they expect it to be raised because that's a major outflow for India in terms. You look at gold stocks at all?
Gold stock, the jewelry stocks, yes.
Exactly. That's what I meant.
Yeah. I think that's an interesting segment. And today we have a choice. 5 years ago, there was only one title. Today there's a choice enough, and there's been a meaningful correction in many of them. I clearly believe it's a great place to be, especially if you're betting on an aspirational India, the shift from unorganized to organized, and the non-discretionary, the discretionary spend. So I think that looks fantastic. That space looks very attractive.
It's budget day. We can't let you go without asking industrials and capex. Whatever is the view, and if you like, the space at all, then maybe, some idea of the kind of stocks you'll play.
Yeah, the cap goods, I think, is a fantastic place, especially companies which are leveraged to the potential in railways, in defense, electronics, overall. I think manufacturing, infra, and capex cap goods, I think that's a fantastic place to be.
Good you brought up actually, electronics, because we just had that conversation with Dixon. What's your sense on this space? The thing is, when there is a good theme and a growth theme in the market, the whole market latches onto it. Then everybody has the same situation of 100p and 90p and how you deal with that. Some of it has started correcting, but again, how do you find them in terms of valuations?
No, I mean, optically, of course, the valuations still look high, but I think if there were to be a further correction of maybe 10-20% from there, I think it's a good place to be. I think growth will continue for the next 4 to 5 years. It's one of those very few pockets in the markets where essentially the investment opportunity aligns with the national priority. And therefore, I think it's a great place to be.
Okay. Keynes has fallen 33% from its highs, so perhaps attractive. Thank you very much, Nilesh,
Thank you,
for all
Thank
that
you,
advice.
Thank you.
But we have to take a quick break. Up next, we are going to connect with the tax experts. After all, we want to know whether we should expect lower personal income tax. Dinesh Kanabar will be with us, Mukesh Bhutani of BMR Legal, and Sunil Vadala of KPMG. Back in a minute.
Al-Qaeda offshoot, HTS, led by an Islamist jihadist who danced in the streets on 9/11 and who was responsible for the killing of many American service members. Democrat senators in the past resorted to anti-Christian bigotry against some of President Trump's judicial nominees like Amy Coney Barrett and Brian Boucher. I condemn those actions as a Democrat in Congress at the time, as religious bigotry must be thoroughly condemned by all of us, no matter the religion. Unfortunately, there are some Democrat senators who still don't understand the principle of freedom of religion and Article 6 of the Constitution. Quote, no religious test shall ever be required as a qualification to any office or public trust under the United States. Unfortunately, they're once again using the religious bigotry card, but this time trying to foment religious bigotry against Hindus and Hinduism. If anyone is sincerely interested in knowing more about my own personal spiritual path of Hinduism, I welcome you to go to my account on X, where I'll share more on this topic.
Hello and welcome to CNBC TV18. We have stepped out of the newsroom to connect with you, the real experts, to hear your thoughts on what you believe should be part of Union Budget 2025. What changes would make your life easier, more affordable, or even a little bit more fun? Let's hear what people have to say. Is there something that you have in mind that you want to see this year?
I'm expecting some benefit for the middle class on priority, basically. And since I'm working in a travel sector, probably some benefit for the travel sector, like some GST benefits.
The government should be taxes less on at least daily routine items. If you are going to gold and all that, we don't care. But we are middle class person, so we need to my daily budget going very high. So we want to do some reducing to daily items, product taxes.
Welcome back. The countdown is on, and just about an hour to go before the Finance Minister presents the Union Budget in Parliament. And now we've discussed markets, we've discussed, of course, the global backdrop, we've discussed the big macro numbers. Let's boil it down to what really matters for you and me, which is taxation. That's what we're discussing with our next panel. And we have our experts joining in, Mr. Dinesh Kanabar of Dhruva Advisors, Mukesh Bhutani of BMR Legal, and we have with us Sunil Badala of KPMG. Gentlemen, thank you so much for joining in. I've been bothering most of you for the last several weeks, going back and forth on this rate and that, and manufacturing companies, and the new nature of the act, etc. But let's open with the big bold question. Do you expect the Finance Minister to really deliver a bonanza for the middle class? Mr. Kanabar, if I could start with you.
Just one question before we answer that is that we are told that in the same session, or maybe today itself, you're going to see a draft income tax code, a new law coming in. So what's going to be in that draft act and what's going to be in the budget is going to be an interesting play, because you cannot have all the changes coming in the finance bill or the budget and then say that there is going to be a bill which is also going to deliver something which is radically different or radically new. So it'll be interesting play to watch out there. But I do expect that in this
Mr. Kanabar, just for the sake of clarity on this, and I'm glad you raised this point, because what she announced in July was a review of the Act, the Income Tax Act of 1961. And then there was the Direct Tax Code, which was, formulated many years back, and then it kind of went into cold storage. So how does it play out? And from what I've gathered with conversations with all of you all is that the review of the Act is unlikely to touch the tax rates. That's going to be more on reducing litigation, simplified language, removing redundant provisions. But the code has to deal with the rates, right? So if we have to talk about an income tax cut, how does it all come together?
That's right. And the rates come in year on year. And I
Absolutely.
on your channel always wondered as to why do we need to tinker with the rates year and year. In fact, one simple proposition which I have always canvassed is that cannot the threshold limit beyond which you need to pay taxes be tied into an inflation index itself. But leaving that aside, given the fact that what the finance minister has been saying, what the prime minister has been saying about doing something for the lower and the middle class, I am indeed expecting both an increase in the threshold limit for taxation, and I'm expecting lower rates of tax going all the way, probably up to 15 lakhs of rupees. And I think that will be something very, very welcome. Again, I am expecting all of these to be under the new regime and not the old regime, because that's what the government wants to do, to push people to the new regime, with which I totally agree.
All right, gentlemen, good morning. Thank you very much. Prashant, this side. There is suddenly this sharp focus which has been, which is shining on, which is this difference between what corporates pay as taxes and what individuals pay as taxes, right? It's become now, of course, with it's very stark. It's been stark for a while, but there is a lot of focus now on all of this. So, Mr. Bhutani, I just wanted, I mean, is there any way this can be, will the government try to reduce this? I'm not sure if the corporate tax rate from 25 should go up, but on the individual side, can we see some changes to bring it lower?
I don't see why there should be alignment of corporate and individual tax rates. If you're going to tax businesses at higher rates of tax and not moderate rates of tax, you're making it anti-business. The whole philosophy behind taxing individuals at the higher maximum marginal rate of tax is to look at redistribution of income. That's the fundamental economic policy. Yes, at one point in time, the thinking was no matter what form of business you have, you should be taxed equally. But that is all in the passé. So I think that businesses should be taxed moderately. Individuals also should be taxed moderately, particularly in a country such as India. Otherwise, it gives opportunities for tax evasion or people having an outflight of capital or they themselves leaving the country. So I think the whole notion of having high corporate tax rates is, in my view, not the correct way to look at it. I think what needs to be looked into is what are the businesses that needs to be incentivized? And do you use tax rates for incentivization?
Yep.
For example, you had low rates on manufacturing that propelled manufacturing. Now that did not get extended, which came as a downer for many businesses. But if you ask me today, the corporate tax rates of 25% are still on the higher side. There is opportunity to look at India being more competitive and bring it down, if not to 20%, then at least to 22%.
Well, Mukesh, your point is taken, but that's not how you sell it to voters. And the middle class is today very vocal. You should see the number of memes. I'm sure you've got enough of them in terms of taxes. So, I mean...
you can sell that proposition to voters because the voters are also comprising of small and medium enterprises. It's not just about a debate on what should be or what ought to be the corporate tax rate. Most of our businesses in India are run by partnerships and LLPs and private companies. I don't see any reason why this class of voters should be subjected to an unreasonable or a high rate of corporate tax.
Okay. As you speak, the finance minister now is entering Parliament building. So we are just counting down. It's less than an hour now for the budget. Sunil, your thoughts, I mean, in terms of encouragement for manufacturing, that 15%, of course, was a big ask and its extension, but we didn't get it last time. Anything in terms of encouraging FDI for that matter, for the gift city, through the gift city? What are the corporate sector's expectations?
So, so I think, first of all, let me just say that I agree with what Mr. Kanabar and Mr. Bhutani said. In terms of the expectations for the Aam Aadmi as well as for the manufacturing company, I think this is a big ask. Everybody is expecting that 15% concessional rate for the manufacturing should come in this budget. I also think that it's not just for the new manufacturing companies, but even for the existing companies, we should look at, let's say, some kind of an investment allowance or some incentive if they want to expand their existing manufacturing facilities, which we used to have decades ago, where let's say if I invested into the new facilities or expanded the existing facilities. In addition to the depreciation, I would actually get some kind of an additional deduction of about 15%. Now, something similar can be looked at, in my view. Also, in order to encourage, let's say, R&D expenses or, startup, innovation, etc., some kind of a weightage, deduction should be considered. Now, coming back to the FDI, FPI issues, etc., I think, looking at the volatility in the market, I think there is two expectations. Right. One is the capital gains tax rates. I know that there was a complete change in the regime, but I think people are expecting, or people believe, that the tax rates for both long term and short term are little on a higher side. So maybe we should have some reduction there. Also, the STT, looking at the buoyancy in the collection of the STT and the capital gains, maybe there is some expectation that some kind of a rate reduction in the STT should be considered.
Well, if they decide to roll back a bit on the long-term and short-term capital gains, then we'll have a working Sunday as well. It'll be a huge headline. I don't know if that comes true or not. But, gentlemen, thank you for this sort of a quick take. We do have to take a break because the Finance Minister has now proceeded to enter Parliament. But we will come back to you as those announcements start trickling in. I think Shireen has the next set of guests with her as well. Shireen, over to you.
Going to be coming in just a second, Surabhi. Live from here, the CNBC TV18 headquarters, we'll be joined by industry leaders from the Confederation of Indian Industry. And it's important there to pick up on the messaging that's being sent out by the tax advisors. Will they tinker with the capital gains rates? Remember, it was changed just last time around. So I don't know whether they are going to want to move so quickly or let the rates settle at this point in time. But of course, relief for the middle class, that's the big ask. And we'll take that conversation forward. We've also got with us our guests from FICCI joining us now. Let me go across to Anant Goenka and the FICCI president. Gentlemen, many thanks. The countdown has begun. The top three things that you believe the Finance Minister will deliver on, not wish list, what you believe they will finally deliver on. Anant, let me start by asking you.
What is the time now?
Anant, can you hear me? Well, we seem to be having... Harsh, can you hear me? Is my voice getting through to you?
Yeah, I can hear you now.
Yeah, very quickly to both you and Anant, the time for wish list is over. What do you think the Finance Minister will deliver on the top three things?
Sorry, can you repeat the question, Shireen? We couldn't hear properly.
Yeah, what will the Finance Minister deliver on, Anant and Harsh? Anant, let me start by asking you.
Yeah, so I'd say the first three things that we're looking at. One is a budget of continuity, continued investment in capital investment. The second is focus on how do you do ease of doing business. And the third is putting some money in the hands of the consumer.
CapEx and consumption. Harsh, what do you believe the Finance Minister is going to send out by way of messaging and signals to revive and unleash the animal spirits?
I think, from the government perspective, they will focus on the continuity. We have seen in the past, they have been quite consistent in their overall budget. And this time also, we expect that the CapEx expenditure, which has the multiplier effect, will continue, and we hope that the government increase their spend in that. As Anant was saying, consumption is a bit tepid. So how do we increase and help boost the consumption? So that is certainly, we hope to see some steps from the FM on that front. And also in the area of manufacturing, make in India, in the area of PLI scheme, I think, we hope to see some activity there also.
Yes, more perhaps with regards to the PLI schemes. But Anant, let me come back to you. You did a survey of your FICCI members ahead of the budget. What's the mood, both in terms of hiring, in terms of capacity enhancement in terms of current capacity utilization? I mean, how strong is sentiment today? Where does business confidence lie ahead of the budget?
But I'd say there are two parts to the survey. I'd say one is clearly there is more positivity on the rural side. On the urban side, there is some concern. However, I think as growth comes in, capacity utilizations go up, we are looking at an increase in private investment. I think the challenge on private investment has largely been on the consumption side. So if we can just add a little bit of sweetener out there, it'll make a big difference.
A little bit of a sweetener on the consumption side. Harsh, what is the expectation as far as tax relief is concerned? Realistically, what are you hoping for?
See, I believe, some kind of tax relief, especially at the lower end of the people, of the income group, that will certainly help boost the consumption and put in more money in the hand of the consumers, which will certainly help in the discretionary spend. So we are very hopeful, and to see some kind of steps there. And also at the corporate tax level, if they at the government level, at 15%, can we expect to see something there as well?
Well, the return of that concessional scheme, which was phased out in 2024, we'll have to see whether that makes a comeback or not. Harsh and Anant, many, many thanks for joining us here on CNBC TV18. We'll check back with you once the budget is delivered. But for now, the market's holding steady. Hero Moto under pressure today on account of the management changes, the CEO resigning there. The finance minister has arrived in Parliament ahead of the budget. It's 190 points higher on the Sensex, and the Nifty trending at 23,500 plus. So we will take a quick break and return with Voices from Industry. The Confederation of Indian Industry joins us right here on the CNBC TV18 budget headquarters after this.
All right, thanks for that, Shireen. Let's dispense with the break and go straight away to our economists. We are joined by Sabiran Chakrabarti, the chief economist for Citi India, and Sajid Shenoy, head of Asia Economic Research at JP Morgan, also a member of the PMEAC, of course. Sajid, Samiran, thank you very much for being with us. Sajid, yesterday Anant Nageshwaran was very candid. He said you can't expect the government to cut fiscal deficit, add to capex, and do welfare spending. So what do you think they'll do?
That's exactly right, Lata. I think when there's so much clamor about stimulus, it's important to understand the macro backdrop here, that fiscal deficits are coming down. And I think the government's been very good about fiscal marksmanship. So, when they say they want to have a deficit at 4.5% or below, I take them at their word, and I expect to see a 40 or 50 basis point of GDP consolidation. The question is, how will that be achieved, right? Will that be achieved on the revenue side, or will that be achieved by rationalizing expenditures? And my sense is that, with CapEx, the good news is December CapEx grew very strongly. So hopefully the undershoot in CapEx that had been feared for this year will be less than expected. But the CapEx story is an important one. I would expect for it to grow at least in line with nominal GDP, right? So you want to ensure that CapEx to GDP is at the same ratio.
So 10% over 11.1.
Well, the 11.1 may not be achieved because I think despite a strong December number, the asking rate for the next 3 months is still 55% growth year on year to get to the 11.1. So we may be, 10.5. But on that base, I think nominal GDP will grow at 10.5% like it has last year. So you'd expect to see CapEx grow at least 10.5%. This then introduces interesting trade-offs, because if CapEx to GDP is not falling, where will you get the reduction in the fiscal deficit? Some of it happens because other expenditures, defense expenditures, interest expenditures, don't rise in line with nominal GDP. Subsidies should not rise in line with nominal GDP. So there'll be some savings there. But the broader point is it involves trade-offs here, that if you want a tax cut as the market is clamming for, then some revenue expenditure has to be cut and vice versa. I'll make one final point. It's important at a time where there's been some slowdown in growth that we get maximum bang for our buck from the fiscal. And fiscal multipliers tend to be higher on the expenditure side than on the tax side. So really what you want is not to compromise expenditures that are going at the bottom of the pyramid, because those multipliers are higher. But these are the delicate trade-offs the budget will have to contend with.
Then you're clearly not the middle class's favorite, Sergeant. There is a lot of expectation.
I think a targeted tax cut is okay, but the space is limited.
I take your point. But no, Samiran, do you think Reserve Bank dividend can make a big difference? 2 lakh crore again is a reasonable expectation?
Yes, I mean, obviously, as we were discussing, Sajid was mentioning that there are no free lunches. So clearly, somewhere you have to get an additional source of revenue from. In the last year's budget, RBI dividend provided that source. This year also, the number could be very large, and it could make a difference between these marginal changes that are expected in different things. Like, say, for example, we are estimating that the income tax cut or the tweak could be somewhere slightly less than 0.1% of GDP. So that can get carved out of that additional RBI dividend. Because the other source that economists have been suggesting for a while now, which is increasing significantly the divestment revenue, that does not seem to be the path that the government is walking because of certain market conditions. So that way, the scope for increasing expenditure or tax cuts gets limited. Yes, RBI dividend will definitely be watched very, very closely.
Samiran, they did not walk that path on divestment when the market was in the most charitable mood also, right? But that's a debate for another time, another day, perhaps. I just want to go back to that capex point and ask you, gentlemen, that, you know, they started the year budgeting it at about, I think, 3.3% of GDP, right? Now with the slowdown, maybe they end up at 2.9% or 3% of GDP. Going forward, while, of course, Sajid has put forward the absolute expectations, the numbers for FY26 and, you know, 10% in line with nominal GDP growth, as a percentage of GDP, would you expect capex to continue to trend at those high levels of 3.3% or so, given what the economic survey is urging yesterday? Economic survey is saying, you know, the government has done its heavy lifting. It's a bit of the heavy lifting. It's time for the private sector to move up. Now, will that at all show up in the numbers in any way? Samiran?
So my sense is that the capex to GDP, public capex, central government public capex to GDP will not fall. But what is investors are increasingly looking at is exactly on what kind of things the government is spending. There is a perception that on the traditional sectors of roads, railways, defense, it's difficult to get that kind of high growth rates of 10 to 15% year over year, because there will obviously be some issues around whether the government will be execute them. So would there be some diversification of capex into other sectors like urban development, housing, R&D, water? That's one sort of a discussion. The other is that if the government is not doing divestment and PSUs are becoming stronger, would we see the PSU capex number to go up? If you recall, last few years, PSU capex have been coming off. This PSU capex has been going into the central government capex. So if we see the PSU capex number to go up, then the overall government capex actually will look much better.
All right.
Okay. You know, I have an overarching expectation. I mean, all of us have this economic policy framework. Samiran and Sajid, the promise was that she's going to announce something now which will kind of, you know, cover for the medium term. What are you all expecting? Sajid first.
Today is going to be outside the budget math. There's so much focus on the budget math, but the short point is fiscal degrees of freedom are constrained when you're reducing deficits by 0.5% of GDP. In fact, Lata, what you said, I think, are the more important elements. The July speech spoke not just about an economic policy framework, it spoke about working with the states on, you know, on structural reforms. It spoke about reimagining the financial architecture. It promised a review on basic customs duties to rationalize import tariffs. It spoke about, making the income tax code, much easier to navigate. I'll be looking at continuation on that. And I would, I think the economic policy framework is important because this is the first year of a third term. We've seen overnight tariffs in the US may well go up on Mexico and Canada and China today on February 1st. The global environment is much more hostile. The economic survey spoke about that. So the framework will be a really important document to lay out a path for, in this global environment, How can India get 7% growth? Where should the policy emphasis be? One last thing I'll say, remember, we're forgetting that employment was the overarching objective of the July budget. And it'll be good to get a scorecard on how those employment-linked incentives and internships are done. Will those programs be tweaked? And what will be the budget allocation? So I think there's a lot of very important signals that will come in the budget speech outside of the fiscal math, which is much more constrained.
No, absolutely. We didn't hear anything about those employment. They were going to take up the EPFO and ESI part of some people employed under 15,000 rupees, etc. Though it's not been operationalized. But Samiran, economic policy framework, what should we expect?
So if I take the economic survey's main message to be the driving principle behind the economic policy framework, then it's clearly going to focus on deregulation. There is a huge positive externality that can come out of it. We have all talked about it in the past, but probably never in such a strong and clear way, that how important this is in driving productivity, not only productivity in general, but in particular, it affects the small and medium enterprises the most, who are trying to build up their businesses. And that's where it is also important to understand that the whole employment debate that Sajid was referring to, that larger part of that employment happens in that space. Also, the fact that we often talk about India not being able to do as much labor-intensive exports and doing more of high-tech exports. Part of the reason could simply be that the cost of setting up business is so high that the lower margin businesses do not stay competitive. It is only the higher margin businesses which stay competitive. And that could be the reason why the economic policy framework could focus more on deregulation, ease of doing business, and that can cut across all factor markets, land, labor, etc.
All right. Gentlemen, thank you very much, both of you, Sajid and Samiran, for joining us with that perspective as we head into the budget. But not a long wait now, another 40 minutes and we'll have the budget speech, at least beginning. Now, 50 points on the Nifty, so it's kind of holding on, waiting for that. And we'll have more on the other side. Up next, we will connect with our voices from India Inc., Sanjeev Puri, Rajiv Memani, R. Mukundan, Vinayak Chatterjee. So they'll all be joining Shireen from the CII Budget Headquarters.
Well, here's a fallout of the DeepSeek phenomena. The Indian IT Minister Ashwini Vaishnav making the big announcement that the Chinese large language open source model DeepSeek will be brought to Indian servers, will be brought to Indian shores so that it becomes available to Indian users. Sounds simple? Well, not quite. A lot of jargon there. What does it actually mean? Let's help you break this down to understand what really has transpired with this announcement being coming from Ashwini Vaishnav. Now, let's assume, and I'll explain that with the help of an analogy, the analogy of the humble tea, the common denominator between 2.8 billion Indian and Chinese. Now, for example, let's assume that DeepSeek is this Chinese tea in this cup of tea. Now, what's important is that this is an open source AI model. What that effectively means is that the core code, which is the heart of the model, which is the recipe of the Chinese tea, is publicly available. So what the Indian government is proposing is that we'll use this recipe of the Chinese tea and replicate it here on Indian shores, on Indian servers, and have exactly the same model here present in India for Indian users. But that's not all. Let's bear in mind, we like our masala chai, like most things in life, we like a little tadka in our life. So we'll add a little input to this. We'll add some components. We'll add some sugar. We like some sugar in our tea. We'll definitely add some ginger. We like ginger as well. And let's not forget, the milk in the Indian tea. And having done that, we'll come to the finished product, which of course is a humble masala chai, is a humble cutting chai. So why are we doing all of this? Why is Ashwini Vaishnav doing all of this? Well, the long and short is, number one, let's not forget the obvious out of the way, which is the masala chai tastes a lot better. But having addressed with the obvious, the other two key components why the Indian government is doing is number one, all the components that we added, the sugar, the ginger, the milk, what that essentially represents are tweaks that Indian engineers will be able to do on Indian servers to this DeepSeek model. Now, why would we want to do that? Well, let's bear in mind there were niggles with DeepSeek when it initially came out. It wouldn't accurately answer questions about, say, the 1962 war or the status of Arunachal Pradesh. So this masala chai, with all these components, represents tweaks that the Indian engineers will be able to do on the Indian servers so that it becomes slightly more comprehensive. But the second and perhaps a larger concern that the government has is that the government doesn't want you sipping tea from the Chinese cup of tea, as that will leave your imprint. And by your imprint, I mean your data with the Chinese servers. What the Indian government is essentially saying, let it come here and have a cup of tea from the Indian cup of tea, the Indian server, so that your imprint, your data stays safe within Indian shores. So this chai pa chacha is the long and short of why the Indian government is bringing DeepSeek on Indian servers to Indian shores.
Welcome back. You're watching our continuing coverage. We are counting down to the budget. 30 minutes to go for the Finance Minister Nirmala Sitharaman to rise to present her 8th budget. It is a record number of consecutive budgets delivered by a Finance Minister. We're here at the Confederation of Indian Industry. Joining me now, Sanjeev Puri, Vinay Chatterjee and Rajiv Memani. Gentlemen, good morning. Many thanks for joining us. Sanjeev Puri, let me start by asking you, CapEx, consumption, consolidation, what will the Finance Minister prioritize?
I think very clearly, like has been in the past, I think the focus will remain on inclusive and sustainable growth, and that growth through improving productivity of the economy, investments in the economy through public capex. And given the softness in consumption, we do believe there will be some relief provided to middle class by way of either income tax or reduction in duties on petroleum and so on and so forth. So we expect a combination of that, but the thrust of earlier budgets of increasing competitiveness of the economy, the productive capacity, I think that will certainly continue.
You know, on consumption, Sanjeev, and I based this on the question and the comment that came in from the Economic Affairs, the Chief Economic Advisor in his interview with me, when I asked him that how concerned is he about consumption, and he said that, look, we don't believe it's a structural problem. Rural economy has started to show signs of picking up, and we have seen a revival there. Urban is hurting at this point in time, but we don't believe that the consumption issues are a structural problem today. How do you look at the situation?
You see, ultimately, I think consumption is under pressure because of cost of certain items, particularly, the food inflation has been sticky, and that's so because of climate change. And because of that, I think the wallets are stretched. The other thing that stretched the wallets is the higher interest rates. There's a study published also which shows the share of EMI in a consumer's wallet has actually gone up. So there is stress, and that's why I think we are seeing consumption being a little soft. Once these factors are dealt with, and we do expect the interest rates also to moderate in February. Yeah, of course, that has to be preceded by liquidity injection, which has started to happen. Yeah. And both of this should provide relief, and I think some relief in the form of income tax or petroleum products. That will provide the.
But any indication of volume growth picking up? And we certainly saw that with Nestle's numbers yesterday. Any indication of volume growth picking up?
Well, rural is doing picking up. Rural is picking up, but urban is still flattish. That's the general sense we have.
Urban flattish at this point in time. Vinay Chatterjee, the bucket man, returns here on CNBC TV18. How many buckets do you have for us? 7 buckets.
I prepared them because I knew you'd be pulling my leg. So I said Shireen's going to say that.
It is tradition. We can't let go of it.
Yeah. Anyway, I have 7, but I'll concentrate on the top 2. If there's time, I'll run through the balance 5. The real issue before the budget, Shireen, is the tension between controlling the glide path of fiscal deficit versus using infrastructure outlays to pump prime the economy. This is the ultimate tension in the budget. Now, the real question is, where is the Honorable Finance Minister putting her finger on this continuum? Now, last year was a disappointment because after many years of 30% growth in the infra outlay budgets, if you remember the past years, 5 lakh to 7.5, 7.5 to 10, they were all 30% increases. Last year, we got only 10% growth. 10 became 11.1. Now, this year, what is the range within which she can play? I mean, if it's going to be as conservative as last year, then we are not going to get infra to pump prime the economy and the slowdown and the capex. And if you get only 10%...
But the government's point of view is that that's not conservative, that is still a pretty high capex number, and it's now time for the private sector to also pick up the baton.
Well, private government expenditure in infra leads private capex there. So the government, and remember, the government itself is touting the figure that 1 rupee spent on infrastructure results in 3 rupees of GDP, and 1 rupee spent on direct benefit transfer kind of expenditures results in 90% of 90 paisa of GDP. So the maths is very clear. If you want infra to pump prime the economy, particularly now when there already talk of slowdown in capex, slowdown in GDP, then where are we going to see the FM put her finger if she's going to be aggressive and go for a 25% increase in the infra outlay, then we are going to get 14 lakh crores as the budgetary outlay over 11.1 last year. And if she's going to be conservative, then we are going to get 12 lakh crores. So I'm keen to see where the government takes a stand. And the second point, and I'm going to stop very quickly after mentioning this, last time there was a hint in her budget speech. She said that the core infrastructure areas have reached a certain level of maturity and self-sustainability, which is largely transport and energy. And then she said other sectors of the economy now require attention. So I'm also keen to see in her budget announcements this time the interplay of the outlays between core and social infrastructure. And social meaning health, education, agriculture. I'm stopping here. The balance 5, if you have time.
Yeah, I'll come to you very quickly for the balance 5 in just a second. But 12 to 14 lakh crores, that's the range that you're working with this time around as far as capex is concerned. On the tax front, you know, if she needs to deliver on the range that Binay Chatterjee has just articulated, how much room does she have to do more than just provide sweeteners on the tax front?
Yeah, on the tax front, my view is that at least on the personal tax side, you know, last 3 years, Shireen, the growth in personal tax revenues has been more than 20%. So at least on the personal tax side, and if you have to provide some fillip to consumption, and also from an equity standpoint, given the way lower income and middle income people have been hit because of inflation and other things, I think the government should provide relief at those levels. So I do believe that the government will be providing relief. What's the extent of relief? I think that we'll have to see. And you're right. I think that I think the fiscal glide path has to be maintained.
But do you think that they'll move on the rate and the slab, or do you think that will be more by way of exemptions?
No. I think they will go with the new tax scheme.
Yeah, absolutely. On the new tax scheme, bring in exemptions, or do you think that move as far as the rates slabs are concerned?
No, there are 3 levers. Either there is the tax rebate, so you can move that up. Standard deduction, then that impacts everything. Or you move the slab up, that the peak rate, which comes at 15 lakhs, you know, that moves up slightly. So I don't know which they'll apply, but my sense is that the rebate amount that is there, they may increase that because that gives relief at that level, and a little bit increase on the standard deduction side, because they won't want to tamper anything that changes with the number of people who are filing tax returns, because that's been one of the reasons that they want to track that number very closely.
On the corporate side, you know, we saw changes as far as capital gains were concerned. The expectation is that given where the markets are, you know, maybe they might provide a fillip by a cut. Do you expect that at all?
No. It may happen,
STT,
but I don't expect
anything?
I don't expect. I think also if you see, Shireen, this government, they have not made too many, if I compare them with the earlier budgets, where you used to have lots of changes in tax. Now you have limited issues. So the direction is pretty clear in the way they want to go at it. So I don't anticipate too many changes. I do hope that they present the new tax, draft income tax act to be open it up for discussion, and also we probably to place in front of the standing committee, and then that will lead to real simplification. So a lot of the tax issues may be around simplification.
Simplification, yeah.
And on corporate tax side.
That's the indication.
Yeah.
But on this business of the global context and responding to the global context under Trump administration, the threat of tariffs today is probably going to be the day where we see the first set of tariffs being imposed on Canada, Mexico, and perhaps even China. But Sanjeev Puri, from a manufacturing standpoint, from an FDI standpoint, what's the expectation, not just in terms of signaling, but also in terms of tangible steps? What do you expect?
So, this is a very difficult situation in the global context today. And therefore, we have to put in a lot more focus on the domestic drivers of competitiveness, which is what the Chief Economic Advisor also alluded to. So focus on competitiveness on sectors where we can really win and become a global hub. Second is, I think, this business of tariffs or the complicated tariff walls that are emerging. This has been happening in the past, and we are seeing more of it happen. So really, we will have to really progress on FTAs. I think that's a way out, and use that route to integrate with global value chains. And the third is, I think, while it's not to do with tariffs, but there's also an issue of excess capacities in certain geographies that are dumping stocks all over and therefore limiting opportunities. So we have to deal with that unfair competition. We need to have an agile response. So really in three parts. I think one is to focus on sectors where we have potential, where the world has potential. And some of it we spoke about also yesterday. Second is FTAs. And third is really to have agile responses to these issues of dumping. That's very, all these three are critical for
Anything
manufacturing.
specific on the Make in India agenda, bringing back the concessional scheme for new manufacturing units, perhaps some allowances even for corporates to expand existing units and so on and so forth. Anything there on Make in India 3.0?
So look, anything concessional is always welcome by industry.
But is that?
I'll really, if I was to really put it down, let me say that the balance sheets of corporates, the balance sheets of the financial system, they're in strong position, right? Corporate income tax rates were rationalized in the past. I think the big things to deal with right now are ease of doing business, cost of doing business, flexibility in labor regulations. A lot of it fall in this, in the ambit of the state. It's to provide specific targeted impetus to sectors that are labor intensive. See how we can pump prime agriculture even further. And this is a sector that the economic survey spoke about.
Absolutely.
To deal with the issue of resilience, because that feeds into inflation and then consumption.
It's interesting to see the mood here in industry is measured and tempered when it comes to things like, reductions or allowances or further incentives to India Inc. And that's because the survey made it clear corporate profitability has been at a 15-year high. But of course, the situation is looking a little bit more challenging now in terms of that, but a measured response. One final bucket before I let you go, and we'll toss it back to Bombay. Vinayak.
Final bucket would be a policy statement, long overdue, of a reduction of the 28% GST on an Aam Aadmi product called cement, which everybody considers irrational.
But it cannot be part of the budget. So
it can be part of a budgetary policy announcement. It's going to spur cost effectiveness in infrastructure. It will help Aam Aadmi, and it cannot be equated with pan masala, cement.
No. And there's a lot in that 28% bucket that needs to be addressed, but the budget perhaps is not going to veer into the GST territory at all. That will be for the GST Council. But gentlemen, we will check back in with you on how much of this is actually delivered by the Finance Minister. As always, many thanks for joining us here at the CNBC TV18 Budget Headquarters. Guys, it's back to you.
All right, Shireen, thank you very much for that. That's an interesting discussion, and there is a lot going on in the markets as well. I mean, just sort of anticipating, there are lots of moves, individual moves. How much will be validated, of course, is the question we'll have to wait and watch out for. That's a 0.25% higher for now, as far as the index is concerned. Kiki Mistry is with us, former Vice Chair and CEO of HDFC. Mr. Mistry, it's always great to have you on an important day like the budget, as you've been with us in the past as well. So great to see you again. Just 20 minutes to go and we'll have the budget speech starting. Visuals are already coming in, the Finance Minister in the Parliament, and those are live visuals which are coming in. as we speak. We'll stay with the visuals, but Mr. Mistry, let me ask you, top of mind, 2 or 3 things in terms of, I mean, there are lots of asks, but in terms of real expectations, what would those be?
I would say growth, focus on growth. Second is focus on job creation. Third is leave money in the hands of people for consumption, to improve consumption in the economy. And the fourth, if you ask me, would be some reforms for the capital market. Capital market reforms.
Well, capital gains tax, I doubt they'll touch, will they, Mr. Mistry?
I don't know. I think some kind of, if we could have some kind of consistency in the tax rules, it would help a lot.
Can you be a little more specific? What could be your ask?
I'm saying if you were to say that the capital gains, the maximum, the capital gains, long-term capital gains now is going to be 12.5%, and that is the way it's going to be for the next X number of years, rather than keep, shuffling and making changes.
That's possible because she's also promised an economic policy framework announcement. So it's possible that something long-term will be announced there. But Mr. Mistry, let me come back to your old love, housing. I don't know when with the new tax regime, whether specific incentives can be announced for higher interest, higher principal set-offs and stuff like that. But overall, can housing expect something?
I think housing should expect something because housing is a big employment generator.
Yes.
And we know that employment, creation of jobs is such an important facet of the budget. So there are certain policy decisions that could be taken. Like, for example, if there is a PME 2 scheme, we had a Prime Minister's Awas Yojana Scheme 1, which was extremely successful 5 or 6 years ago. Did very, very well. Now, if we were to have a PME 2, and that stretches to urban areas, then I think that would be a huge help to, to the housing sector. Also, digitization of land records will help the rural economy. So there are many things like that can be done. Like, take, for example, rental market. In India, we look only at people staying in the house, but in the Western world, a lot of people buy property with the idea of leasing it out, renting it out. Now, if you rent it out, the interest that you pay on the loan is capped at 2 lakh rupees, which, it's not going to make too much of sense. So that limit needs to be removed. There are things like that can be done, which could be done for the housing sector without interest rates.
Got it. Just to tie in that point, you were about to say something on capital gains. Did you want to add something?
Yeah, I wanted to talk about dividend. I mean, it's a long-drawn topic. We've talked about it multiple times. But if you really look at it, the dividend is getting taxed twice. The company is paying 25% tax on the dividend that it pays out because it's not getting a deduction on the dividend that they pay. And the individual is paying tax on dividend at the marginal tax rate. So if your tax rate, for example, is 30%, you're paying 30% tax plus 25% tax paid by the company. Now, plus, of course, the surcharge. So if we were to say that we tax dividend at the maximum marginal tax rate applicable to individuals, which currently is 30% plus surcharge, then the tax on dividend should really be curtailed to 5%. So then you're still taxing dividend at the maximum marginal tax rate.
Yeah.
Okay, Mr. Mistry, on capital gains, I think because it is at 12.5, right? It's the thing. I think that is the number. It's the 10, 15, or maybe it'll go to 15. You're not expecting a reduction, right? I mean, you're saying just clarity. Just
clarity that it will remain like this. I don't think I expect a reduction.
No, last year, there were a lot of people who were saying 12.5 looks like such an unstable number. Will they make it 15? You don't have such fears, do you?
I don't. I really don't, because I think we've seen a lot of middle income and below middle income people now investing in equity markets. And if you want to, I mean, already we've seen some pressure on equity markets in recent times. So in my opinion, I don't think there will be any change.
In terms of, the CE, the economic, the report yesterday, a survey also kind of alluded to it, right? Taxes have been cut in 2018-19 from 35 to 25%. And, the CE exhorting corporates to come in, participate, invest. Is there anything of that which kind of shows up in the budget in some way? I don't know how, but will that message be felt through the budget?
I think so. I think if we are to get growth into the system, but basically the idea is to create jobs. Now, how do you create jobs? You invest, you create more capacity, whether it is in infrastructure or in other industries. So some incentives for creating that extra capacity is something which I think is very, very much possible.
Okay. All right, Mr. Mistry, I hope they're listening. There's hardly any time, not much time for tweaks at least, but these, of course, especially the dividend point you're making, has been made. And let's see whether we have heard. We'll speak with you after the budget. Thank you very much indeed for joining us today. Okay, the market's in the green, so clearly there is some kind of an expectation. To be fair, of course, positions were also light. So let's get some final words from top stock market experts joining us now. Sandeep Bhatia, the Managing Director, Head of Equity India at Macquarie Capital. Dinesh Kanabar will be with us in a bit, the CEO of Dhruva Advisors. And we will also have Mahesh Nandurkar, Managing Director and Head of Research at Jefferies. Mahesh, Sandeep, Mr. Kanabar, thank you very much. Sandeep, what's the sense? I mean, have you bought or have you advised buying something before the budget in expectation of some sectors getting benefited?
So, the budgets are a lot of hype. Most of the times it's a big show when very little go. So it's not that we would say that buy this for the budget. I think as most of the panelists before me have echoed, the corporate sector has done structurally well in terms of profit and margins and cash flows. The banking sector is strong. One part of the economy actually which is not done well is the household sector, and especially the middle income and poorer households. So I think if we see impetus to consumption, that itself will spur private capex, what we have not seen for some time, and we may not see if demand doesn't come back, is private capex. So I would be very happy if there is a spur to consumption. That's what I would expect from the budget. There is very little space otherwise to do something major. Given the fiscal glide path we are on, we need to control our fiscal deficit and gross borrowings. But definitely the surcharges which have been imposed and which need to go away, we can have some concessions there.
In what way? You said a boost to consumption you like. In what way, Sandeep?
Well, raise the minimum, the level at which tax starts coming in. So make it about, let's say, 1 lakh a month, 12 lakh, something like that. That would mean that if you're earning less than 1 lakh a month, you're not paying any taxes. So something like that. Plus, let's see if they can do anything on employment generation, incentivize corporates for employment generation. That is definitely needed. In my discussions with various senior economists of the government, they have noted the fact that the headcount growth has severely lagged behind the profit and earnings growth in the corporate sector over the last 7 to 10 years.
So the economic survey also mentions the CA made that point yesterday as well, Sandeep. So in what way? Because further incentivization.
Yeah, I think there would be some way of saying that if you don't create a certain number of jobs over a period of time according to your top line growth or something, then your tax rates could go up. I think it has to be done very, very carefully because that can create more bureaucracy. But at least a push towards more formal employment will be necessary. I hope it is done without doing much damage. So I think some kind of a conversation also is important, and that has started.
Okay, actually, on that same point, let me get Mahesh Nandurkar in from Jefferies. Mahesh, do you think that we should and will get any stimulation for consumption?
So first of all, I would like to say that we are still in the fiscal consolidation mode. From the post-COVID era, we have already reduced our fiscal deficit by more than 400 basis points. But I think each year, even from here on, and specifically in FY26, we would be looking at a 30-40 basis point reduction in the fiscal deficit. And given the fact that the revenue growth is unlikely to be more than 10% for the government of India, my belief is that the total expenditure growth is going to be, say, around 8% to 9% kind of mark. So that's the overall constraint within which I think we will have to view our expectations. So I think that the government has already done a lot of heavy lifting on the capex side. In the last 5 years, the capex has grown 3x, and it is quite natural to expect some kind of shift in that, away from capex growth into consumption growth. But I think overall the limitation is going to be 8 to 9% total growth. So in that context, however, the government may like to give a big boost, but I think it will come with its own limitations.
Okay, all right. Mahesh, is well put. Sunil Kaul is with us as well, Global Emerging Market Equity Strategist at Goldman Sachs, who's with us. Sunil, let me start by asking you, there is a lot of expectation that there could be further focus on public capex. Your report, though, says growth pace for capex is now behind us. What is your thinking and what are you expecting?
No, I think that's right, because I mean, as we know, the government actually increased capex spending at a rate of 30% CAGR between sort of calendar 21 to 2023, those 3 years, and took the fiscal spending as a percent of GDP from 1.5 to north of 3%, 3.2, 3.3%. So there have been a lot of fiscal spending that the government has done in prior years. And our strong view, even coming into last year, was that those growth rates are unlikely to sustain. And so the government will reduce the spending on fiscal more in line with nominal GDP, which is what they announced in the last budget as well. But I think this time also we'll think that the allocations to fiscal spending would be in line with sort of high, sort of low double digits of 10-11%, which is in line with the nominal GDP. So they will effectively keep the fiscal spending as a percent of GDP somewhat constant at around 3% of GDP.
Yeah, absolutely, Sunil. And that view really stands out because you're not expecting a decided uptick, continued uptick in the capex spend. Mr. Kanabar, coming back to you now, we discussed the big expectation on income tax earlier, but I want to move beyond that as well. Aside of that, what are the other major things that you would watch out for? There's been so much of a clamor for simplification, for reducing litigation, the TDS regime, TCS and TCS rates. Would you expect anything else?
So even if I think the issue really is the cost of compliance, and the cost of compliance is just going up and up and up. And when we spoke earlier about TDS and TCS, the question is it really doing any benefit to have such a lot of litigation? And coming to litigation, I think the issue really is that today we have a backlog in the tax department, which is enormous. So just at a first appeal level, you have almost a 5 to 6 year waiting, which is unheard of and which has not been there for the last 15 years. The first time we are seeing such a lot of backlog, which essentially means that if there is an addition at the tax office level, the tax office collects 20%. The taxpayer believes he is out of pocket with that 20% unnecessarily. And should the taxpayer actually lose out, the government is out of pocket on 80%, and you can't have this situation continuing. A number of suggestions have been made in this regard, whether one can go directly to a tribunal, whether more cases can go to DRP. And I'll be waiting with bated breath to see what comes out of it. And those are very, very welcome things.
Okay. All right. On the rates per se, on the multiple TDS rates, just in 10 seconds, Mr. Kanabar, what are the changes you'd expect?
So the point really is that you have a tax rate for salaried employees, which is equal to their income so that they don't need to file a tax return. Then you have a higher TDS rate for lotteries and crypto and whatever else. And then all the other TDS, can it not be a one simple rate so that one is not really litigating with the tax office as to what is the applicable section? Should the withholding be at 2% or 5% or 10%?
Okay. Well, let's see what comes. Sandeep, well, finally, at the moment, what is attracting you in the market?
I think at the moment, one should look, so my assumption is that we'll see some tax cuts. So I think we can look at beneficiaries of tax cuts. I think to that extent, Maruti looks interesting in the near term post-budget. If we do see a tax cut, small cars have been lagging. We all know that. At least sentimentally, these tax cuts can help. But there's also a pay revision commission, which has been announced by the government. Pay revisions will come through next year. So I think Maruti looks interesting at these levels. Other than that, it comes down to what happens in geopolitics. We have Trump and Modi meeting each other in February in the White House. I do expect some kind of a mini trade deal to come through. It's difficult to play this, but I think the Indian pharma sector is generally a beneficiary. So if we don't see any disruption, we definitely like Sun Pharma. So That's something. Otherwise, the private sector banks, I think the banking sector, it's a consensus call. I don't claim any special insight here. But some of the beaten down banks, such as Axis Bank or IndusInd Bank, could definitely look interesting because the system stability is definitely very strong.
Okay. All right. We are just about less than 10 minutes to the budget. Gentlemen, thank you very much for being with us. Shireen, last few thoughts from your guests.
Yeah, Lata, actually, we're 4 minutes away from the Finance Minister rising to present the budget speech. We've got our budget editors with us, Atanu Chakrabarti and Ratin Roy. By the way, there's a multilingual conversation happening here between the two of them. There's Bengali, there's Gujarati, there's Marathi. So I've been enjoying this multilingual budget banter that's taking place here with our budget editors. But Mr. Chakrabarti, to the point that was being made there, from a banking sector's perspective, from a financial services sector's perspective, what are you looking at the budget for?
Frankly, the major thing which really matters for the banking sector today is the savings, household savings, which have been eaten into by inflation. So most of the bankers would be looking at the fiscal deficit number and whether the debt containment happens, as I'd mentioned yesterday as well, this year, and maybe reduction possibly next year even. And the glide path, I wish, is even steeper, but at least glide path is followed. That will send the right signal for inflationary expectations. That will improve the savings, that doesn't eat into the wages. People would be willing to invest, increases wages across, improves savings, improves even velocity of money. That's what bankers look at.
Well, speaking of the velocity of money, if we get that rate cut, first of all, do you believe we're getting a rate cut in February? If we do get that rate cut, do you expect that this encouraging signs of a pickup as far as private capex is concerned, that's likely to get a leg up?
Frankly, people would go by because there are different benchmarks that bankers use. And if inflation is low, most of them have pegged their rates either to 2-year bonds or 5-year bonds. So there the yields would come down and the rates would properly settle down. Whether rate cut itself would transmit into that or not would depend upon, frankly, the rate of inflation.
On the global scenario, Ratan, and we were just discussing this, President Trump and Prime Minister Modi expected to meet. There is the possibility of some sort of a move ahead as far as a mini trade deal is concerned, etc. Do you believe that this budget is going to address, at least signal, anything on that front, on the global scenario? Is it likely to address even what's happening as far as the rupee depreciation with respect to the dollar is concerned?
I don't think so, because that's not the job of the budget. However, I think that I would expect the finance minister to at least comment on how India will navigate what promises to be a very turbulent year in terms of our bilateral and multilateral relationships, as the economic survey highlighted. So getting an endorsement of what the economic survey said, which is skillful, negotiated progress on the international front, would be important. And foreign investors will be looking more or less for the same kind of reassurance that Atanu was saying domestic investors will be looking at. You want a steady hand, you want a lower fiscal deficit, you don't really want to see any particular need to increase subsidies, and you want tax cuts to be moderated and not paid for by increased fiscal deficits, paid for ideally by lower public expenditure. So I think a steady budget would serve us best globally. India is fortunate amongst all the emerging economies at the moment to be one of the steadiest emerging economies. It is vital that we retain that, because then the costs of the US imposing unilaterally tariffs or other constraints on us would be that much higher, since we're the only stable, steady, democratic emerging economy at present on this planet.
Yes,
I mean, just add a point here, since from the domestic perspective, but however, we also have another jurisdiction called gift jurisdiction.
Yes.
And now a lot of transactions, a lot of money has started moving into this. And but when the money moves in and out of the country, it tends to move directly back to Singapore or to Hong Kong. It needs to rest in gift. And gift possibly, maybe it's my wish, someday a separate chapter in our tax code gets written for that. So that there's a tax stability assurance in the mind. Today is through that SEZ rules and so on and so forth. That would set the ball rolling, because there's a lot of HNI investors, there's a lot of others, there's a lot of
PE funds who are setting up their base there.
I'm sure that this is feedback that has been sent to the government. Have you heard anything on whether this is even an active consideration?
We can only hear today.
we'll only hear today.
That's a wish, and I guess that those kind of feedback must have been gone, and I'm sure maybe a lot of things are work in progress always.
I would not be politically comfortable with this happening with GIFT. There's already too much talk about Gujarati oligarchies. And this would only add to that.
Okay. Well, gentlemen, I'm going to have to ask you to take a pause because the Finance Minister rising in Parliament to present Budget 2025. This is going to be her 8th budget, 8th consecutive budget. On CNBC TV18, we're calling it Seize the Moment. Will the budget capture the global context as well as unleash the animal spirit of the domestic industry? That's the big question. That is the action from Lok Sabha, the Speaker calling the House to order. And in just a moment from now, you will see Finance Minister Nirmala Sitharaman rise to present the Union Budget.
सदस्यगण, बजट के बाद राज्यपाल अभिभाषण में आपको पर्याप्त अवसर दूंगा। मेरा आपसे निवेदन है, नहीं माननीय अखिलेश जी, आपने संसद की मर्यादा को आप बना के रखें। कभी बजट भाषण के अंदर इस तरीके का नहीं हुआ, ये उचित नहीं है, ये उचित नहीं है। अखिलेश जी प्लीज, मैं आपको मौका दूंगा राज्यपाल अभिभाषण पे, प्लीज। नो, ये तरीका ठीक नहीं है। नो, राज्यपाल अभिभाषण पे चर्चा होगी। नो तरीका।
Honorable Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive healthcare, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, youth, Annadata, and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy, and innovation, securing energy supplies, promoting exports, and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments, and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Agriculture as the first engine. Now I move to specific proposals, beginning with agriculture as the first engine. Prime Minister Dhan Dhanya Krishi Yojana, developing agri-districts program. Motivated by the success of the aspirational district program, our government will undertake a Prime Minister Dhan Dhanya Krishi Yojana in partnership with states. Through the convergence of existing schemes and specialized measures, the program will cover 100 districts with low productivity, moderate crop intensity, and below average credit parameters. It aims to 1. Enhance agricultural productivity, 2. Adopt crop diversification and sustainable agricultural practices, 3. Augment post-harvest storage at the panchayat and block level, 4. Improve irrigation facilities, and 5. Facilitate availability of long-term and short-term credit. This program is likely to help 1.7 crore farmers. Building rural prosperity and resilience. A comprehensive multi-sectoral rural prosperity and resilience program will be launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. The details are in Annexure A. Domestic best practices will be incorporated, and appropriate technical and financial assistance will be sought from multilateral development banks. In phase 1, 100 developing agri-districts will be covered. Atmanirbharta in pulses. Our government is implementing the National Mission for Edible Oilseed for achieving Atmanirbharta in edible oils. Our farmers have the capability to grow enough for our needs and more. 10 years ago, we made concerted efforts and succeeded in achieving near self-sufficiency in pulses. Farmers responded to the need by increasing the cultivated area by 50%, and government arranged for procurement and remunerative prices. Since then, with rising incomes and better affordability, our consumption of pulses has increased significantly. Our government will now launch a 6-year mission for Atmanirbharta in pulses with a special focus on Tuar, Urad, and Masoor. Details are in Annexure B. Central agencies such as NAFED and NCCF will be ready to procure these 3 pulses as much as offered during the next 4 years from farmers who register with these agencies and enter into agreements. Comprehensive program for vegetables and fruits. It is encouraging that our people are increasingly becoming aware of their nutritional needs. It is a sign of a society becoming healthier. With rising income levels, the consumption of vegetables, fruits, and Shri Anna is increasing significantly. A comprehensive program to promote production, efficient supplies, processing, and remunerative prices for farmers will be launched in partnership with the states. Appropriate institutional mechanisms for implementation and participation of farmer producer organizations and cooperatives will be set up. Makhana board in Bihar. For this, there is a special opportunity for the people of Bihar. A Makhana board will be established in the state to improve production, processing, value addition, and marketing of Makhana. The people engaged in these activities will be organized into FPOs. The board will provide hand-holding and training support to Makhana farmers and will also work to ensure they receive the benefits of all relevant government schemes. A national mission on high-yielding seeds will be launched, aimed at 1. Strengthening research ecosystem, 2. Targeted development and propagation of seeds with high yield, pest resistance, and climate resilience, and 3. Commercial availability of more than 100 seed varieties released since July 2024. India ranks second largest globally in fish production and aquaculture. Seafood exports are valued at 60,000 crore rupees. To unlock the untapped potential of the marine sector, our government will bring in an enabling framework for sustainable harnessing of fisheries from Indian exclusive economic zone and high seas, with a special focus on the Andaman and Nicobar and Lakshadweep Islands. For the benefit of lakhs of cotton growing farmers, I am pleased to announce a mission for cotton productivity. This 5-year mission will facilitate significant improvements in productivity and sustainability of cotton farming and promote extra long staple cotton varieties. The best of science and technology support will be provided to farmers. Aligned with our integrated 5F vision for the textile sector, this will help in increasing incomes of the farmers and ensure a steady supply of quality cotton for rejuvenating India's traditional textile sector. Kisan credit cards facilitate short-term loans for 7.7 crore farmers, fishermen, and dairy farmers. The loan limit under modified interest subvention scheme will be enhanced from 3 lakh rupees to 5 lakh rupees for loans taken through the KCC. For Atmanirbharta in urea production, our government had reopened 3 dormant urea plants in the eastern region. To further augment urea supply, a plant with annual capacity of 12.7 lakh metric tons will be set up at Namrup in Assam. India Post, with 1.5 lakh rural post offices, complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, will be repositioned to act as a catalyst for the rural economy. Details are at Annexure C. India Post will also be transformed as a large public logistics organization. This will meet the rising needs of Vishwakarmas, new entrepreneurs, women, self-help groups, MSMEs, and the large business organizations. Our government will provide support to NCDC for its lending operations for the cooperative sector. MSMEs as the second engine. Now I move to MSMEs as the second engine, which encompasses manufacturing and services with a focus on MSMEs numbering 5.7 crores. Currently, over 1 crore registered MSMEs, employing 7.5 crore people and generating 36% of our manufacturing have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technological upgradation, and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. This will give them the confidence to grow and generate employment for our youth. The details are given in Annexure D. To improve access to credit, the credit guarantee cover will be enhanced. First, for micro and small enterprises from 5 crore to 10 crore rupees, leading to additional credit of 1.5 lakh crores in the next 5 years. Second, for startups from 10 crore rupees to 20 crore rupees, with the guarantee fee being moderated to 1% for loans in 27 focus sectors, which are important for Atmanirbhar Bharat. And for well-run exporter MSMEs, for term loans up to 20 crore rupees. Also for the micro enterprises, we will introduce customized credit cards with a 5 lakh rupee limit for micro enterprises registered on Udyam portal. In the first year, 10 lakh such cards will be issued. Fund of funds for startups. The alternate investment fund, AIFs, for startups have received commitments of more than 91,000 crores rupees. These are supported by the fund of funds set up with the Government of India's contribution of 10,000 crore rupees. Now, a new fund of funds with expanded scope and a fresh contribution of another 10,000 crore rupees will be set up. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. This will provide term loans up to 2 crore rupees during the next 5 years. The scheme will incorporate lessons from the successful Stand Up India scheme. Online capacity building for entrepreneurship and managerial skills will also be organized. Measures for labor-intensive sectors. To promote employment and entrepreneurship opportunities in labor-intensive sectors, our government will undertake specific policy and facilitation measures. To enhance the productivity, quality, and competitiveness of India's footwear and leather sector, a focus product scheme will be implemented. The scheme will support design capacity, component manufacturing, and machinery required for production of non-leather quality footwear, besides the support for leather footwear and products. The scheme is expected to facilitate employment for 22 lakh persons, generate over 4 lakh crore rupees, and exports of over 1.1 lakh crore rupees. Measures for the toys sector. Building on the National Action Plan for Toys, we will implement a scheme to make India a global hub for toys. The scheme will focus on development of clusters, skills, and a manufacturing ecosystem that will create high quality, unique, innovative, and sustainable toys that will represent the Made in India brand. Support for food processing. In line with our commitment towards Purvodaya, we will establish a National Institute of Food Technology, Entrepreneurship, and Management in Bihar. The institute will provide a strong fillip to food processing activities in the entire eastern region. This will result in 1. Enhanced income for the farmers through value addition to their produce, and 2. Skilling entrepreneurship and employment opportunities for the youth. Manufacturing mission, furthering Make in India. Our government will set up a national manufacturing mission covering small, medium, and large industries for furthering Make in India by providing policy support, execution roadmaps, governance, and monitoring framework for central ministries and states. Details are in Annexure E. Given our commitment to climate-friendly development, the mission will also support clean tech manufacturing. This will aim to improve domestic value addition and build our ecosystem for solar PV cells, EV batteries, motors and controllers, electrolyzers, wind turbines, very high voltage transmission equipment, and grid scale batteries. Investment as the third engine. Now I move to investment as the third engine, which encompasses investing in people, investing in the economy, and investing in innovation. Investing in people. Saksham Anganwadi and Poshan 2.0. Saksham Anganwadi and Poshan 2.0 program provides nutritional support to more than 8 crore children, 1 crore pregnant women and lactating mothers all over the country, and about 20 lakh adolescent girls in aspirational districts and the Northeast region. The cost norms for these nutritional support will be enhanced appropriately. Atal Tinkering Labs. 50,000 Atal Tinkering Labs will be set up in government schools in the next 5 years to cultivate the spirit of curiosity and innovation and foster a scientific temper among young minds. Broadband connectivity to government secondary schools and PHCs. Broadband connectivity will be provided to all government secondary schools and primary health centers in rural areas under the BharatNet project. Bharatiya Bhasha Pustak Scheme. We propose to implement a Bharatiya Bhasha Pustak scheme to provide digital form Indian language books for schools and for higher education. This aims to help students understand their subjects better and in their language. National Centers of Excellence for Skilling. Building on the initiative announced in the July 24 budget, 5 national centers of excellence for skilling will be set up with global expertise and partnerships to equip our youth with the skills required for Make for India, Make for the World manufacturing. The partnership will cover curriculum design, training of trainers, and a skills certification framework and periodic reviews. Expansion of capacity in IITs. Total number of students in 23 IITs has increased 100% from 65,000 to 1.35 lakh in the past 10 years. Additional infrastructure will be created in the 5 IITs started after 2014 to facilitate education for 6,500 more students. Hostel and other infrastructure capacity at IIT Patna will also be expanded. Center of Excellence. Center of Excellence in AI for Education. I had announced 3 centers of excellence in artificial intelligence for agriculture, health, and sustainable cities in 2023. Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores. Expansion of medical education. Our government has added almost 1.1 lakh undergraduate and postgraduate medical education seats in 10 years, an increase of 130%. In the next year, 10,000 additional seats will be added in medical colleges and hospitals towards the goal of adding 75,000 seats in the next 5 years. Daycare and cancer centers in all district hospitals. Our government will facilitate setting up of daycare cancer centers in all district hospitals in the next 3 years. 200 centers will be established in 25-26 itself. Strengthening urban livelihoods. Our government has been giving priority to assisting urban poor and vulnerable groups. A scheme for socio-economic upliftment of urban workers will be implemented to help them improve their incomes, have sustainable livelihoods, and a better quality of life. PM Swanidhi scheme has benefited more than 68 lakh street vendors, giving them respite from high-interest informal sector loans. Building on this success, the scheme will be revamped with enhanced loans from banks, UPI-linked credit cards with 30,000 rupees limit, and capacity building support. Social Security scheme for welfare of online platform workers. Gig workers of online platforms provide great dynamism to the new age services economy. Recognizing their contribution, our government will arrange for their identity cards and registration on the e-Shram portal. They will be provided healthcare under PM Jan Arogya Yojana. This measure is likely to assist nearly 1 crore gig workers. Investing in the economy. Public-private partnership in infrastructure. Each infrastructure-related ministry will come up with a 3-year pipeline of projects that can be implemented in PPP mode. States will also be encouraged to do so and can seek support from the India Infrastructure Project Development Fund, which is a scheme to prepare PPP proposals. Support to states for infrastructure. An outlay of 1.5 lakh crore is proposed for the 50-year interest-free loans to states for capital expenditure and incentives for reforms. Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects. Regulatory and fiscal measures will be fine-tuned to support the plan. Jal Jeevan Mission. Since 2019, 15 crore households, representing 80% of India's rural population, have been provided access to portable tap water connections. To achieve 100% coverage, I am pleased to announce the extension of this mission until 2028 with an enhanced total outlay. The mission's focus will be on the quality of infrastructure and O&M of rural piped water supply, schemes through Jan Bhagidari. A separate MOU or separate MOUs will be signed with the states and union territories to ensure sustainability and citizen-centric water services delivery. Urban sector reforms. Building on the July budget proposals, urban sector reforms related to governance, municipal services, urban land, and planning will be incentivized. Urban Challenge Fund. The government will set up an urban challenge fund of 1 lakh crore rupees to implement the proposals for cities as growth hubs, creative redevelopment of cities, and for water and sanitation purposes announced in the July budget. This fund will finance up to 25% of the cost of bankable projects, with a stipulation that at least 50% of the cost is funded from bonds, bank loans, and PPPs. An allocation of 10,000 crore is proposed in 2025-26. Power sector reforms. We will incentivize electricity distribution reforms and augmentation of intrastate transmission capacity by states. This will improve financial health and capacity of electricity companies. Additional borrowing of 0.5% of GSDP will be allowed to states contingent on these reforms. Nuclear energy mission for Vikasit Bharat. Development of at least 100 gigawatt of nuclear energy by 2047 is essential for our energy transition efforts. For an active partnership with the private sector towards this goal, amendments to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act will be taken up. A nuclear energy mission for research and development of small modular reactors with an outlay of 20,000 crore will be set up. At least 5 indigenously developed small modular reactors will be operationalized by 2033. Shipbuilding. The shipbuilding financial assistance policy will be revamped to address cost disadvantages. This will also include credit notes for shipbreaking in Indian yards to promote the circular economy. Large ships above a specified size will be included in the infrastructure harmonized master list. Shipbuilding clusters will be facilitated to increase the range, categories, and capacity of ships. This will include additional infrastructure, facilities, skilling, and technology to develop the entire ecosystem. Maritime Development Fund. For long-term financing for the maritime industry, a Maritime Development Fund with a corpus of 25,000 crore rupees will be set up. This will be for distributed support and promoting competition. This will have up to 49% contribution by the government, and the balance will be mobilized from ports and from private sector. UDAN regional connectivity schemes. UDAN has enabled 1.5 crore middle-class people to meet their aspirations for speedier travel. The scheme has connected 88 ports, airports, and operationalized 619 routes. Inspired by that success, a modified UDAN scheme will be launched to enhance regional connectivity to 120 new destinations and carry 4 crore passengers in the next 10 years. 4 crore additional passengers in the next 10 years. The scheme will also support helipads and smaller airports in hilly, aspirational, and northeast regional districts. Greenfield airports will be facilitated in Bihar to meet the future needs of the state. These will be in addition to the expansion of the capacity of Patna Airport and a brownfield airport in Beta. Western Kosi Canal project in Mithilanchal. Financial support will be provided for the Western Kosi Canal ERM project, benefiting a large number of farmers cultivating over 50,000 hectares of land in the Mithilanchal region of Bihar. Mining sector reforms. Mining sector reforms, including those for minor minerals, will be encouraged through sharing of best practices and institutions of a state mining index. A policy for recovery of critical minerals from tailings will be brought out. Under the special window for affordable and mid-income housing, SWAMI, 50,000 dwelling units in stressed housing projects have been completed and keys handed over to home buyers. Another 40,000 units will be completed in 2025, further helping middle-class families who are paying EMIs on loans taken for apartments while also paying rent for their current dwellings. Building on this success, SWAMI Fund 2 will be established as a blended finance facility with contribution from the government, banks, and private investors. This fund of 15,000 crore rupees will aim for expeditious completion of another 1 lakh units. PM Gati Shakti data for private sector. For furthering PPPs and assisting the private sector in project planning, access to relevant data and maps from the PM Gati Shakti portal will be provided. Tourism for employment-led growth. Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list. The following measures will be taken for facilitating employment-led growth. Organizing intensive skill development programs for our youth, including in institutes of hospitality management. Providing mudra loans for homestays. Improving ease of travel and connectivity to tourist destinations. Providing performance-linked incentives to states for effective destination management, including tourist amenities, cleanliness, and marketing efforts. And introducing streamlined e-visa facilities along with visa fee waivers for certain tourist groups. Continuing with the emphasis on places of spiritual and religious significance in the July budget, there will be a special focus on destinations related to the life and times of Lord Buddha. Medical tourism and heal in India. Medical tourism and heal in India will be promoted in partnership with the private sector, along with capacity building and easier visa norms. Investing in innovation. To implement private sector-driven research, development, and innovation initiatives announced in the July budget, I am now allocating 20,000 crore rupees for this purpose. A deep tech fund of funds will also be explored to catalyze the next generation startups as a part of this initiative. In the next 5 years, under the PM Research Fellowship Scheme, we will provide 10,000 fellowships for technological research in IITs and IISc with enhanced financial support. The second gene bank with 10 lakh germplasm lines will be set up for future food and nutritional security. This will provide conservation support to both public and private sectors for genetic resources. We will start a national geospatial mission to develop foundational geospatial infrastructure and data. Using PM Gati Shakti, this mission will facilitate modernization of land records, urban planning, and design of infrastructure projects. A Gyan Bharatam mission for survey, documentation, and conservation of our manuscript heritage with academic institutions, museums, libraries, and private collectors will be undertaken to cover more than 1 crore manuscripts. We will set up a national digital repository of Indian knowledge systems for knowledge sharing. Now I move to exports as the fourth engine. We will set up an export promotion mission with sectoral and ministerial targets driven jointly by the Ministries of Commerce, MSME, and Finance. It will facilitate easy access to export credit, cross-border factoring support, support to MSMEs to tackle non-tariff measures in overseas markets. A digital public infrastructure, Bharat Trade Net, for international trade will be set up as a unified platform for trade documentation and financing solutions. This will complement the Unified Logistics Interface platform. The BTN will be aligned with international practices. Support will be provided to develop domestic manufacturing capacities for our economy's integration with global supply chains. Sectors will be identified based on objective criteria. Facilitation groups with participation of senior officers and industry representatives will be formed for select products and supply chains. Through this, there are huge opportunities related to Industry 4.0, which needs high skills and talent. Our youth have both. Our government will support the domestic electronic equipment industry to leverage this opportunity for the benefit of our youth. A national framework will be formulated as guidance to states for promoting global capability centers in emerging Tier 2 cities. This will suggest measures for enhancing availability of talent and infrastructure, building bylaw reforms, and mechanisms for collaboration with industry. Our government will facilitate upgradation of infrastructure and warehousing for air cargo, including high-value perishable horticultural produce. Cargo screening and customs protocol will be streamlined and made user-friendly. Reforms as the fuel. Over the past 10 years, our government has implemented several reforms for convenience of taxpayers, such as faceless assessment, 2, taxpayer charter, 3, faster returns, 4, almost 99% returns being on self-assessment, and 5, Vivad Se Vishwas scheme. Continuing these efforts, I reaffirm the commitment of the tax department to trust first, scrutinize later. I also propose to introduce the new income tax bill next week. I will detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Requirements and procedures for speedy approval of company mergers will be rationalized. The scope for fast-track mergers will also be widened and the process made simpler. As proposed in the interim budget, we signed bilateral investment treaties with 2 countries in 2024 to encourage sustained foreign investment, and in the spirit of First Develop India, the current model BIT will be revamped and made more investor-friendly. In the last 10 years, in several aspects, including financial and non-financial, our government has demonstrated a steadfast commitment to ease of doing business. We are determined to ensure that our regulations must keep up with technological innovations and global policy developments. A light touch regulatory framework based on principles and trust will unleash productivity and employment. Through this framework, we will update regulations that were made under old laws. To develop this modern, flexible, people-friendly, and trust-based regulatory framework appropriate for the 21st century, I propose 4 specific measures. A high-level committee for regulatory reforms will be set up for a review of all non-financial sector regulations, certifications, licenses, and permissions. The committee will be expected to make recommendations within a year. The objective is to strengthen trust-based economic governance and take transformational measures to enhance ease of doing business, especially in matters of inspection and compliances. States will be encouraged to join in this endeavor. An investment friendliness index of states will be launched in 2025 to further the spirit of competitive, cooperative federalism. Under the Financial Stability and Development Council, a mechanism will be set up to evaluate impact of the current financial regulations and subsidiary instructions. It will also formulate a framework to enhance their responsiveness and development of the financial sector. In the Jan Vishwas Act 2023, more than 180 legal provisions were decriminalized. Our government will now bring up the Jan Vishwas Bill 2.0 to decriminalize more than 100 provisions in various laws. I now move to fiscal policy. In the July budget, I had committed to staying the course for fiscal consolidation. Our endeavor will be to keep the fiscal deficit each year such that central government debt remains on a declining path as a percentage of the GDP. The roadmap for the next 6 years has been detailed in the FRBM statement. Revised estimates for 2024-25. The revised estimate of the total receipts other than borrowings is 31.47 lakh crore rupees, of which the net tax receipts are 25.57 lakh crore rupees. The revised estimate of the total expenditure is 47.16 lakh crore rupees, of which the capital expenditure is about 10.18 lakh crore rupees. The revised estimate of the fiscal deficit is 4.8% of the GDP. Budget estimates for 25-26. Coming to 25-26, the total receipts other than borrowings and total expenditure are estimated at 34.96 lakh crore rupees and 50.65 lakh crore rupees respectively. The net tax receipts are estimated at 28.37 lakh crore rupees. The fiscal deficit is estimated to be 4.4% of GDP. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.54 lakh crore. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 14.82 lakh crore rupees. I will now move to Part B. Indirect taxes. My proposals relating to customs aim to rationalize tariff structure and address duty inversion. These will also support domestic manufacturing and value addition, promote exports, facilitate trade, and provide relief to common people. Rationalization of customs tariff structure for industrial goods. As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to, 1, remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate. 2, apply appropriate cess to broadly maintain effective duty incidence, except on a few items where such incidence will reduce marginally. 3, levy not more than 1 cess or surcharge. Therefore, I propose to exempt social welfare surcharge on 82 tariff lines that are subject to a cess. I shall now take up sector-specific proposals. To provide relief to patients, particularly those suffering from cancer, rare diseases, and other severe chronic diseases, I propose to add 36 life-saving drugs and medicines to the list of medicines fully exempted from basic custom duty. I also propose to add 6 life-saving medicines to the list attracting concessional custom duty of 5%. Full exemption and concessional duty will also respectively apply on the bulk drugs for manufacture of the above. Specified drugs and medicines under patient assistance programs run by the pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. I propose to add 37 more medicines along with 13 new patient assistance programs. Support to domestic manufacturing and value addition. Critical minerals. In the July 2024 budget, I had fully exempted BCD on 25 critical minerals that are not domestically available. I had also reduced BCD of 2 other such minerals to provide a major fillip to their processing, especially by MSMEs. Now, I propose to fully exempt cobalt powder and waste, the scrap of lithium-ion battery, lead, zinc, and 12 more critical minerals. This will help secure the availability for manufacturing in India and promote more jobs for our youth. To promote domestic production of technical textile products, such as agro-textiles, medical textiles, and geotextiles at competitive prices. I propose to add 2 more types of shuttle-less looms to the list of fully exempted textile machinery. I also propose to revise the BCD rate on knitted fabrics covered by 9 tariff lines from 10 or 20 to 20% or 115 rupees per kg, whichever is higher. Electronic goods. In line with our Make in India policy and to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20% and reduce the BCD to 5% on open cell and other components. In 23-24 budget, for the manufacture of open cells of LCD, LED TVs, I had reduced the BCD on parts of open cells from 5% to 2.5%. To further boost the manufacture of such open cells, the BCD on these parts will now stand exempted. Lithium-ion battery. To the list of exempted capital goods, I propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing. This will boost domestic manufacture of lithium-ion batteries, both for mobile phones and for electric vehicles. Shipping sector. Considering that shipbuilding has a long gestation period, I propose to continue the exemption of BCD on raw materials, components, consumables, or parts for the manufacture of ships for another 10 years. I also propose the same dispensation for shipbreaking to make it more competitive. Telecommunication. To prevent classification disputes, I propose to reduce the BCD from 20% to 10% on carrier-grade Ethernet switches to make it at par with non-carrier-grade Ethernet switches. Export promotion. To facilitate exports of handicrafts, I propose to extend the time period for export from 6 months to 1 year, further extendable by another 3 months if required. I also propose to add 9 items to the list of duty-free inputs. Leather sector. I propose to fully exempt BCD on wet blue leather to facilitate imports for domestic value addition and employment. I also propose to exempt crust leather from 20% export duty to facilitate exports by small tanners. Marine products. To enhance India's competitiveness in the global seafood market, I propose to reduce BCD from 30% to 5% on frozen fish paste, surimi, for manufacture and export of its analog products. I also propose to reduce BCD from 15% to 5% on fish hydrolysates for manufacture of fish and shrimp feed. In July 2024 budget, to promote development of domestic MROs for aircraft and ships, I had extended the time limit for export of foreign origin goods that were imported for repairs from 6 months to 1 year and further extendable by 1 year. I now propose to extend the same dispensation for railway goods. Time limit for provisional assessment. Presently, the Customs Act 1962 does not provide any time limit to finalize provisional assessments, leading to uncertainty and cost to trade. As a measure of promoting ease of doing business, I propose to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. I propose to introduce a new provision that will enable importers or exporters, after clearance of goods, to voluntarily declare material facts and pay duty with interest but without penalty. This will incentivize voluntary compliance. However, this will not apply in cases where department has already initiated audit or investigation proceedings. For industry to better plan their imports, I propose to extend the time limit for the end use of imported inputs in the relevant rules from 6 months to 1 year. This will provide operational flexibility in view of cost and uncertainty of supply. Further, such importers will now have to file only quarterly statements instead of a monthly statement. I now come to my direct tax proposals. In Part A, I have briefly underlined taxation reforms as one of key reforms to realize our vision of Vikasit Bharat. In respect of criminal law, our government had earlier ushered in Bharatiya Nyaya Sanhita, replacing Bharatiya Danda Sanhita. I am happy to inform this August House and the country that for new income tax bill will carry forward the same spirit of Nyaya in its drafting as well. The new bill will be clear and direct in text, with close to half of the present law in terms of both chapters and words. It will be simple to understand for taxpayers and tax administrators, leading to tax certainty and reduced litigation. Reforms, however, are not a destination. They are means to achieve good governance for our people and economy. Providing good governance primarily involves being responsive. The Tirukural captures this in verse 542, which reads, "Vaanokki vaazhum ulagallam, mannavan kol nokki vaazhum kudi," meaning, just as the living beings live expecting rains, citizens live expecting good governance. Our government is committed to keeping an ear to the ground and a finger on the pulse and responding while balancing our national building efforts. The following measures will detail just how our government will, under the guidance of PM Modi, has taken steps to understand and address. I repeat that sentence, sir. The following measures will detail just how our government, under the guidance of PM Modi, has taken steps to understand and address the needs voiced by our citizens. My tax proposals are guided by this spirit. The objectives of my proposals are as follows. Personal income tax reforms with special focus on middle class. Rationalization of TDS and TCS for easing difficulties. Encouraging voluntary compliance. Reducing compliance burden. Ease of doing business, employment and investment. I will come to my proposal on personal income tax towards the end. TDS and TCS, rationalization for easing difficulties. I propose to rationalize tax deduction at source, TDS, by reducing the number of rates and thresholds above which TDS is deducted. Further, threshold amounts for tax deduction will be increased for better clarity and uniformity. The limit for tax deduction on interest for senior citizens is being doubled from the present 50,000 rupees to 1 lakh rupees. Similarly, the annual limit of 2.40 lakh rupees for TDS on rent is being increased to 6 lakh rupees. This will reduce the number of transactions liable to TDS, thus benefiting small taxpayers receiving small payments. The threshold to collect tax at source, the TCS, on remittances under RBI's liberalized remittance scheme, the LRS, is proposed to be increased from 7 lakh to 10 lakhs. I also propose to remove TCS on remittances for education purposes, where such remittances is out of a loan taken from a specified financial institution. Both TDS and TCS are being applied on any transaction related to sale of goods. To prevent such compliance difficulties, I propose to omit the TCS. I also propose that the provisions of the higher TDS deduction will now apply only in non-PAN cases. In July 2024, the delay for payment of TDS up to the due date of filing statement was decriminalized. I propose to provide the same relaxation to TCS provisions as well. The government under the leadership of Prime Minister Modi believes in Sabka Saath, Sabka Vikas, Sabka Vishwas, and Sabka Prayas. In line with this, we brought in updated return facility in 2022 for voluntary compliance by taxpayers who had omitted to report their correct income. Our trust in taxpayers was proved right. Nearly 90 lakh taxpayers voluntarily updated their incomes by paying additional tax. Taking this trust further, I now propose to extend the time limit to file updated returns for any assessment year from the current limit of 2 years to 4 years. I propose to reduce the compliance burden for small charitable trusts and institutions by increasing their period of registration from 5 years to 10 years. It is also proposed that disproportionate consequences do not arise for minor defaults, such as incomplete applications filed by charitable entities. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. In my speech in July 2024, I had promised that all processes, including giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. So I'm happy to announce that digitalization is being made operational now. In July 2024, we brought in the Vivad Se Vishwas scheme to resolve income tax disputes pending in appeal. The scheme has received a great response, with nearly 33,000 taxpayers having availed of the scheme to settle their disputes. I have a few proposals to promote investment and employment. It is proposed to provide a presumptive taxation regime for non-residents who provide services to a resident company that is establishing or operating an electronics manufacturing facility. I further propose to introduce a safe harbor for tax certainty for non-residents who store components for supply to specified electronics manufacturing units. Presently, the tonnage tax scheme is available only to sea-going ships. The benefits of existing tonnage tax scheme are proposed to be extended to inland vessels registered under the Indian Vessels Act 2021 to promote inland water transport in the country. Extension for incorporation of startups. We continue to support the Indian startup ecosystem. I propose to extend the period of incorporation by 5 years to allow the benefit available to startups which are incorporated before 1/4/2030. In order to attract and promote additional activities in the IFSC, I am inter alia proposing specific benefits to ship leasing units, insurance offices, and treasury centers of global companies which are set up in IFSC. Further, to claim benefits, the cutoff date for commencement in IFSC has also been extended by 5 years to 31/3/2030. Category 1 and Category 2 AIFs are undertaking investments in infrastructure and other such sectors. I propose to provide certainty of taxation to these entities on the gains from securities, to promote funding from sovereign wealth funds and pension funds to the infrastructure sector. I propose to extend the date of making an investment by 5 more years up to 31st March 2030. Personal income tax reforms with special focus on middle class. Democracy, demography, and demand are the key support pillars in our journey towards Vikasit Bharat. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, average income of 1 lakh per month, other than the special rate income such as capital gains, under the new regime. This limit will be 12.75 lakh for salaried taxpayers due to the standard deduction of 75,000. Slabs and rates are being changed across the board to benefit all taxpayers. The new structure will substantially reduce the taxes of the middle class and leave more money in their hands, boosting household consumption, savings, and investment. In the new tax regime, I propose to revise tax rate structures as follows: 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. To taxpayers up to 12 lakh of normal income other than special rate income such as capital gains. I read that again. To taxpayers up to 12 lakh of income other than special rate income such as capital gains, tax rebate is being provided in addition to the benefit due to slab rate reduction in such a manner that there is no tax payable by them. The total tax benefit of slab rate changes and rebate at different income levels can be illustrated with a few examples. A taxpayer in the new regime with an income of 12 lakh rupees will get a benefit of 80,000 rupees in tax, which is 100% of tax payable as per the existing rates. A person having income of 18 lakh rupees will get a benefit of 70,000 rupees in tax. That is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees. That is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone. Mr. Speaker, sir, with this, I commend the budget to this August House.
Item number.
Well, I think the finance minister saved the best for the last, without doubt. On personal income taxation, there is a big announcement which has come. No income tax up to 12 lakh rupees under the new income tax regime. The entire slab structure itself has been changed. A new slab has been added as well. 1 or 2 new slabs have been added as well. And we'll have all of that up for you. Towards the end, the finance minister actually gave examples. She said that a person having an income of 18 lakh rupees per annum will get a relief of 70,000 rupees. And a person having an income of 25 lakh rupees will get a relief of 1.1 lakh in terms of their tax burden. So, I mean, that is essentially the announcement which the market has liked. On the macro big numbers, I'll talk to Lata in a bit, but, the 4.4% fiscal deficit target, which she said earlier, that remains. We are still, of course, waiting for the capex number for FY26, the budget estimate on capex for FY26. But she's managed to provide some relief to the income tax payer, middle class, right at the end. And I think, as you can see, the market reaction as well, there was a steep sell-off when she began, and she kept that fiscal deficit at 4.4%, dampening hopes about how much relief she can provide. But of course, towards the end, I mean, that personal income tax relief, which she has provided for income of up to 12 lakh rupees exempt, I think that has provided a bit of cheer to the market as well. And the Nifty is back up a little bit, still down from where it was pre-budget, but we're down about 0.15. But I think this is a lot of taxation-related changes, both on the direct side and indirect side.
Finally, I think we have to reserve our judgment. We have to reserve our judgment because she gave us the net tax income for the government, and she said that that is going up from 25.47 trillion to 28.37 trillion, which is a rise of about 11%. So if you're cutting personal income tax and still this is up, we have to find out where there have been increases. As well, your expenditure has gone up by 7.4%. According to her, she mentioned total expenditure goes up from 47 trillion to 50.65 trillion. That's a rise of 7.4%. And you have got these tax reliefs. So is the capex budget cut? We will have to wait to see that. She said 1 lakh
crore is the tax foregone on direct taxes. And I think there was a number on indirect taxes as well.
Which I
towards the end, I think tax
she said about tax foregone.
Yeah.
But don't have the number. So my sense is maybe the capex budget has been
maybe it's a little subdued.
Has been cut.
So it's finally a bonanza for the middle class because after a long time, you've got big announcements coming in. And not just on personal income tax, some of the bigger demands of the tax world, they have also been addressed. Let's start with personal income tax. Now, these are the rates that I could pick up, and we're just cross-verifying all the slabs because the entire slab structure has changed in the new income tax regime. What's the first headline? The first headline is that there is nil tax payable up to an income of 12 lakh rupees. The first slab is not starting at 12, but because of the way the slabs have been structured and the rebates, you don't have to pay any tax up to an income of 12 lakh rupees. This figure was 7 lakh rupees up until yesterday. That is, I mean, we're talking about the previous budget up until FY25. So 7 lakhs was the limit of nil tax. Now 7 moves to 12. So that's a big, big boost. The slab 0 to 4 lakhs, 4 to 8 lakhs, 8 to 12 lakhs, 12 to 16 lakhs, 16 to 20. There is 20 to 24. And the 30% rate now comes in only above 24 lakh rupees. So there's a sort of a big boost coming in over there. And then the rates come in 5%, 12%, 15, 20, 25. So this is what we have. We're going to cross-check some of the figures there. But this is what was, first glance, first hearing. This is what came out. So this is, point number one. The second thing that, a lot of homeowners will absolutely, like to hear is that the second house property that you have, which was subject to easier taxation only if you complied with certain very stringent provisions. Those provisions are getting relaxed. So not just one, but now 2 self-occupied house properties will get a beneficial tax treatment. They will be treated as nil value from a tax perspective. So again, this is a big boost coming in for those women who do have 2 house properties. That's the other one. The third major sort of relaxation or rationalization has come in the TCS and TDS regime, something which the industry was asking for many years. And one of them, which I remember because there was such a furor around this earlier, is the remittances that happen through the LRS route, where the cap was 7 lakhs. If you were remitting money above 7 lakh rupees, then a TCS had to be paid. Now that limit has been increased to 10 lakhs. So if Prashant and Lata are planning big foreign holidays with, big packaged holidays, then there is a bit of a TCS and cash flow relief comes in. But I think we have a panel of experts. Let's actually get to them.
That was anyway set off with TDS.
Yeah, but let's actually get to the tax experts. Ashok, let me ask you first. So big bang for the middle class finally?
Yeah, I'm glad at last. For years, middle class has been waiting to see whether they get real relief. And I think moving the slabs up is really very, very good. I'm not sure I heard it right, but my sense was that the 30% slab applies only above 30 lakhs. But I may be wrong.
Above 24.
What we heard was 24.
24 lakh.
Yeah. So I think at least up to 25 lakhs, it's serious relief. And she was computing the numbers and giving it to us. The question that Lata asked, which is a very relevant question, is that, if you're maintaining your fiscal deficit to the levels that you had announced, and you are foregoing 1 lakh crores in direct taxes, 2,600 crores in indirect taxes, and you are showing 11% increase in your tax collection, then where is the gap? We need to see the fine print to be able to see, where is the tax collection happening. But overall, I would say, from a middle class perspective, a fantastic budget, although corporates may be a little disappointed. There wasn't much that was at least spoken from a corporate tax perspective. But again, we'll have to look at the fine print.
Yeah, actually, on indirect tax, the amount foregone is only 2,600 crores.
Said right
so
now.
It's not a great deal.
If I can just ask Mr. Kanabar. Mr. Kanabar, you've been listening keenly as well. In the direct tax, personal taxes, of course, is the big headline. But anything else you caught on the taxation front? Lots of announcements.
Actually, quite a bit, really. And sort of, just before the budget, we spoke about ease of compliance and quite a few things. Like, for example, there was this regarding safe harbor rules being extended. And of course, nobody cheered it up in the House of Parliament because this is not a subject which people would normally understand. But that's going to be something which will ease the compliance burden of multinationals, will promote a lot of foreign investment. Similarly, tonnage tax being applied to domestic vessels. Again, something very, very welcome. And then a few other things. So, for example, charity, if you are recognized, rather than renew every 5 years, you would renew every 10 years. You are permitted to update your return for 4 years. Each one of them may appear to be small things, but they were really irritants. And sort of their going out is going to be something which is very, very welcome. I think it's quite a bit really.
Well, that's the budget Nirmala Sitharaman has delivered, saving the best for the last. As we've been pointing out, this has been the big ask, the big expectation, the big hope, and the finance minister delivering. As the prime minister said, the focus this time around was going to be on the Madhyam Varg, or the middle class, and that is what the tax slabs that have been introduced in the budget have taken forward. So up to 12 lakh rupees, as we've been pointing out, no income tax is payable, and of course, new introduction as far as different slabs are concerned, and the 30% kicks in above 24 lakh rupees. But it's consumption that seems to have been the focus of this budget. We're still waiting for the fine print as far as the capex number is concerned. The revised estimate comes in at 10.18 lakh crore rupees. What is the BE? We need to know, but it is consumption that the government has gone for as part of what we are seeing. Let me very quickly bring in a take there from Madhu Kela. Madhu, FMCG stocks on fire at this point in time. It's a consumption boost that was being hoped for.
Shirin, this is a big one. I think getting to 12 lakh rupees, I don't think anyone in the market was expecting this. So this is clearly a big one. And I have the capex number. It is 11.21 lakhs crores. So essentially, even the capex number are in line with what the market would have expected, from 10.2 to 11.21. And fiscal deficit, again, 4.4% next year. So I think they have met all the numbers which was guessed by the markets. I think it is on the better side only than what market would have assumed before the budget.
Okay, so 11.21 lakh crore rupees, that's the capex number, Madhu Kela, that you're giving us. That's coming in from the budget fine print. So as you're saying, the expectation was, or the hope was, between 12 and 14 lakh crore rupees. The government coming back with a number of 11.21 lakh crore rupees. So it is an improvement over what was the allocation last time around. Remember, 11.11 lakh crore rupees, so a slight improvement there, but an improvement over the RE. Disinvestment and monetization target has been kept at 47,000 crores for FY26. FY25 RE at 33,000 crores from 50,000 crores in B. Again, along expected lines, we've seen this happen on the disinvestment front time and time again, and that's what seems to have happened even as far as this year's budget is concerned. 11.2 lakh crores is the capex number. Very quickly, let me bring in our guest, Zia Modi. A quick take, the big headlines for you from Budget 2025.
Thank you. I think from my perspective, the now formalization of the insurance FDI to 100% is good news. What is even better news is the finance minister's commitment to revamp the KYC norms in 2025, which has caused a lot of pain in the ease of doing business. I think that the IBC, I was looking forward to some announcements on pre-packs or cross-border IBC situations. Maybe that will come later, but that is very important because that law has clearly brought down our NPAs. The enhancement of the judiciary, the dropping of government taking cases to court. Government today is our biggest litigator. Maybe there will be something in the fine print to show that unnecessary litigation can be cut down, especially since the FMS said she's digitizing faceless assessments, etc. I think that the one thing that stands out, which I'm hoping to see some movement from the government, is a liberalization of Press Note 3, which is the bordering countries, which has had a lot of unintended effects and slowed down FDI from private equity. But all in all, I think the message of getting out of the way, to stop micromanaging, to listen to the industry and to allow the theory of being honest unless you are proved dishonest, are all very, very positive messages.
Yes, positive messages. And speaking of positive messages, we're still going over the internals now, because remember, as the finance minister was pointing out, a lot of the details there in the annexure, not in the speech. More good news, the tax deduction limit for senior citizens has doubled from 50,000 rupees to 1 lakh rupees. So more sweeteners they're coming in. The tax deduction limit for senior citizens has been doubled from 50,000 rupees to 1 lakh rupees. We will have to wait to see under whether that's under Section 80D, but we'll get to that. Let me bring in our other guests as well. We've got plenty with us here. Before I get back, Madhu, a quick take on the markets from where we are before we get the other voices in.
Yeah. Sarin, I think from a market perspective, I would like to mention one thing. There is a lot of emphasis on ease of doing business, decriminalization of laws, and making things really, really simple. Apart from increasing the personal taxation slab. One more thing, she spoke about the introduction of new income tax bill, which is to be tabled next week, and which will basically deregulate a lot of things. So this will be perceived very, very positively, and it's a basically continuation of the good effort. From a market perspective, shouldn't we are back to back to basics? I think this will be a range-bound market this year, and this will be stock pickers market. So if you can really take advantage of all this volatility which is there and pick up good companies, that's where money will be made.
I mean, absolutely. By the way, as you said, the volatility is back, right? We were up, we recovered after that personal income tax announcement. We're down about 50-60 points on the Nifty once again. Prashant Khemka is with us as well. Prashant, do you think this will, by the way, the Nifty FMCG index is up some 3%, Maruti is up 6%. More money in the hands of the middle class. Where will they spend it in your assessment? And as a money manager, what looks best placed?
See, I think overall it is positive for the market. As Madhu just pointed out, the most important thing to me is that there's a genuine intent and effort. It comes through very clearly to increase the ease of doing business. So it's directionally very positive. There's no material negative. I usually, when I'm sitting and hearing the budget, I keep tab of the positive snippets and negative, and there are hardly any on the negative side. Whereas on the ease of doing business, the underlying spirit of the budget is to simplify rather than to complicate things, which is often the problem with budgetary speeches. So be it 100% FDI in insurance, simplifying TCS, TDS, or decriminalizing additional 100 laws, safe harbor rules, as mentioned earlier by Mr. Kanabar, I believe. So a lot of the, obviously, fine print needs to be still seen. But all sounds very positive. And most importantly, the finance minister mentioned the new income tax bill, which is scheduled for next week, would be, in her words, it would be clear, simple to understand, and provide tax clarity. That would be a big boost to overall business environment, and that can only be positive for job creation as well as for the markets, broader market. So if there is additional savings in the pockets of middle class, I think the market, rather than selecting a particular sector, I think it should be positive for the broader Indian market.
Okay, gentlemen, I just want to come to a couple of additional announcements that we haven't heard so far. They're all from the budget documents, and these are perhaps going to be very welcome by the financial services sector, and I'll get to the experts in just a bit. For GIFT City, there is a boost. It is proposed that transfer of share of unit or interest held by a shareholder in the original fund in consideration for the share or unit or interest in a resultant fund on relocation shall not be regarded as a transfer for the purpose of calculating capital gains. There was an ask that if a fund or a structure is relocating from a foreign destination to IFSC GIFT City, then give it some tax relief from the point of view of capital gains. And that seems to have come through. And one more, the extension of the date for sovereign wealth funds that are investing in the India infrastructure sector. There was a sunset, but now look at the extension. Instead of March 2025, they have extended it all the way to 31st of March 2030 to attract long-term capital in the infrastructure sector, perhaps. So if I could go back to the panel, Mr. Kanabar, your thoughts on some of these internals that are arising from the next years?
Both of them very, very welcome. This was something, a very, very specific ask.
Yeah.
Clearly, investment into infrastructure is something which is long gestation. There is no point in tinkering it year on year on year. and giving it a 5-year thing is something which is very much welcome. Similarly, the proposition is that if there are funds with investments in India and they are relocating into the gift city, then there should not be a tax implication. Again, that has been accepted. Both very, very welcome. Similarly, there is this whole provision that if your transfer pricing is accepted, it is accepted for a block of 3 years. Again, will make not a lot of non-residents relook at India and come back to say the transfer pricing litigation will come down. All very, very welcome.
Okay, no, that's good to hear. Actually, I have some problem perhaps with the confidence. Corporate tax growth, according to the BE for the current year, works out to 7.5% higher. For next year, the estimate is that it will rise by 10.5%. So we keep our fingers crossed over there. One expects that corporate sector has to do better, but obviously that is the estimation. But otherwise, the estimations are very modest. For instance, income tax this year, it is up by 22% as of December, for which we have data. They have estimated only 20% higher for the full year. But for next year, the estimate is only 14.4, clearly because tax rates have come down. So the estimates seem modest when it comes to income tax. Corporate income tax, I hope we deliver on that 10.5. But I think within this, in spite of not assuming very aggressively, they have been able to give a capex of up by about 10%. So that's very good. Yeah. Prashant, can you tell me why the market is sulking? It's got its tax cuts. It's got nothing negative in terms of capital gains. But actually, there's red on the screen. Bank Nifty is down about 0.5%, 0.6. Anything that's niggling the markets at all, Prashant? And then I'll come to Madhukela on that.
See, hard to say with markets 0.5% here or there. But if it was me, I would read this as a positive. And I would think if I had not seen the market ticker, I would have expected the market to be positive today by a percentage point at least, because the absence of any negative itself is a big positive. And then as we were talking earlier, there are a lot of, absent the fine print, still a lot of directionally very positive announcements, the 100% to FDI, 74 to 100%. In and of itself, none of these measures may be big enough to have a positive impact. But when you view them collectively, it shows the direction in which the government wants to take it.
Actually, it's I think the defense stocks and the railway stocks that are going down, because I guess something specific was expected on defense. But otherwise, FMCG stocks, consumption stocks, all the trends, the Britannias, the auto stocks, Bajaj Auto, all of them are up and about. Maruti Suzuki's numbers also have been good for December. Mr. Dinesh Khara is also with us, former chairman of State Bank of India. Mr. Khara, the borrowing has been kept almost as expected. It's about 14.8 trillion. I think the market expectation was 14.5, but the fiscal deficit is lower than expected at 4.4%. What do you think you can expect? Rate cuts now, good times for banks?
I think it may or may not have any impact on the rate cut, but just it certainly reflects that what is the government thinking. And so long as fiscal is kept within check, certainly it is an indication that inflation will also remain under check. That is what I would like to add. And also I would like to mention when it comes to various sectors, particularly what is talked about in terms of the income tax. Personal income tax, it is going to spare a lot of liquidity with the middle class, which will certainly spend. Likewise, when it comes to agriculture also, the KCC limit has been increased. Similarly, when it comes to MSME also, they have increased the guarantee cover. And similarly for the exports. So I think these are some of the sectors which are eventually going to have the mainstay when it comes to the economy.
Right.
So I think on these very parameters, it really augurs very well when it comes to the economy overall. And the kind of challenges which you faced in the last quarter numbers, they are very well being addressed through this budget.
Got it.
The point taken about MSMEs, I think what the chairman is pointing out is very well taken.
Sajid is with us as well. He was with us right before the budget speech started. Sajid, what did you make of the big macro numbers? All in line?
Very much in line, right? This is following the rhyme and rhythm of previous budgets. I think conservatism is the needle was the buzzword here. The deficit numbers very similar to what we thought. 4.8 goes to 4.4. nominal GDP assumed quite conservatively at 10.1%, to this year's below 10. And the question was, and we had also said that capex to GDP would remain in line with what is achieved this year, and that's panned out as well. Capex is rising in line with nominal GDP. I guess the question was always, where was the consolidation going to be achieved? Will it be on the revenue side or the expenditure side? It's largely on the expenditure side, and it's happening on non-capex expenditure. So there's some expenditure restraint on revenue expenditures. The other one point to keep in mind is on tax buoyancy. Once you adjust for the foregone revenues from the tax cuts, the budget essentially is assuming a tax buoyancy of 1.3. Okay. Now, this year we got about 1.1. So we'll wait to see if that's achieved. But I think no major surprises as far as the big fiscal math is concerned.
You know, the GTR, gross tax revenue, is assumed to rise by 10.8%. And nominal GDP by 10.1%. So it doesn't look like it's...
No, well, because Lata, you have to adjust for the foregone tax revenue, which is 1 lakh crore from the tax cuts.
Yeah.
So when you adjust for the foregone revenue, then what you're assuming is the effective growth in gross taxes is 13% in a nominal GDP of 10.1.
Okay. Well, we have Anish Shah also with us. Mr. Shah, what have you made? The auto stocks are up and about.
For us, one is the demand stimulus that was much needed and very well delivered. Second, a focus on making India the manufacturing hub of the world. The focus on ease of doing business, on enabling capital goods to be imported at lower rates, and importantly, addressing the duty inversion that we've seen. These are all things that will help make in India in a much more significant way. And the third is inclusive development, which is also something that is important for us as an economy. So on balance, a very good budget. The capex from a government standpoint stays on course, which is something that we ideally would have liked. And the fiscal discipline stays on course as well.
Well, that's right. The fiscal discipline stays on course. Capex, along clearly what the economic survey as well as the CA were highlighting would be the trend as far as capex was concerned. But then you can't have capex and the consumption boost at the same time. So the expectation of doing 20-25% on capex and then also providing income tax relief, which has been the big focus of this budget, can the two be reconciled together is the big question. So the government this time around has prioritized consumption and relief for the middle class. And if you just bring up all of those stocks, FMCG stocks at this point in time, the new age stocks, Zomato and Swiggy and all of the others, and Mangalam is standing by with a rundown of everything that's moving. That side of the market clearly is firing at this point. But let me bring back our budget editors into the conversation as well, Atanu Chakrabarti and Rathin Roy. Mr. Chakrabarti, to you first. As far as the big numbers were concerned, pretty much steady as you go.
Yes, very much in a sense that the borrowing numbers satisfy the requirement of, I was looking in containment, they have actually gone in for reduction. So even if numbers don't hold at the end of the year, still the borrowing numbers, the gross borrowing numbers are lower than last year, assuming a fiscal deficit at 4.4%.
Yeah.
RE is at 4.8%. So a good glide path there. Consumption, Philip, given through, as you just mentioned.
Were you expecting them to go as far as they have? Or has it surprised you on the positive side?
Frankly, no. I am pleasantly surprised and very happy about it that the fiscal reduction, debt reduction is, because that opens up the credit growth for the industry in general, which has been sort of accounted for in a lot of expenditure proposals. They're depending upon bankable schemes.
Right.
So unless you open up that space and crowd out, you are not going to get that. So there is, I can see a design in the entire thing, that fiscal reduction, which was important. And that builds upon a lot of bankable schemes that have come.
So, Rathin Roy, they have delivered on the 3 C's that we were talking about. Capex, you can argue about whether they could have done more, but more importantly, on consumption, they've clearly delivered more than what the market or even the consumer was hoping for. And even on consolidation, they've stuck to the glide path.
Yeah, well, I was not expecting them to not stick to the glide path. I was not at all sure whether the government would engage in yet another round of wishful thinking. Quite frankly, I think the execution capabilities of this government as far as capex is concerned, has hit its limits at 11 to 12 lakh crores. Now, the point is to try and promote capex in the private sector, where the real execution capability is. Looks like this is what the government has in mind.
Yeah.
But I'd like to puncture one balloon. Everyone here that's come on your program so far, me included, is in the top tax bracket. And everyone who pays tax in India is in the very rich part of the population. It is facile to call them middle class. What has happened is, at the cost of 1 lakh crores to the exchequer, which is a small price to pay, is a major increase in the regressivity of our income tax system. Till yesterday, you had to earn 3.5 times the per capita income to start paying income tax. You will now have to earn 6 times the per capita income, 6 times the per capita income to start paying income tax. So by no stretch of the imagination can we say that these people who begin to pay income tax at 6 times the per capita income belong to anything other than the top 5 or 10% of the population. So that regressivity has come at what cost? Well, it has come at, the tax system has become more regressive because if you look at the indirect tax burden, it's the same. So you have the progressive part of the tax system, which is direct taxes, is now nicer to the rich people. The indirect taxes, where the burden is shared between rich and poor, remains high. And therefore, what ends up is the proportion of taxes relatively poor people who don't pay income taxes but do pay indirect taxes is now greater. So this is, in that sense, on the tax side, a regressive budget. It will increase consumption of you and me. It is going to do nothing, absolutely nothing, for consumption of the Aam Aadmi.
Okay. Well, we'll have to wait to see, but the market reaction at this point in time is 2 thumbs up. Manglam, very quickly, run us through what's happening on that side.
Well, it is a consumption budget, Shireen. Tell you, no income tax payable up to 12 lakh rupees, income of, up to 18 lakh rupees, saving 70,000 rupees, and income of up to 25 lakh rupees will save over 1.1 lakh in taxes. What does this do? A shot in the arm for all the urban consumption names. So we have names like Jubilant Foodworks, Zomato, Trent, D-Mart, the ones who have a higher propensity of revenue coming in from the urban centers doing extremely well. No tinkering on taxes for, all the sin goods. Those stocks also doing extremely well. And some support coming into rural and agri names has a positive impact on larger FMCG names as well. The FMCG index had been underperforming. The street was hoping for some sort of shot in the arm coming in from the budget to consumption. The government has gone ahead and made its 2 steps. Now the rest remains on the FMCG industry to go ahead and deliver those growth numbers. Most of these stocks are actually trading very close to their 10-year averages as well. So from a valuation standpoint as well, this budget has a trifecta of all positive news coming in from the consumption sector. And we're seeing that in names like Jubilant Food, Trend, ITC, all of them being among the top gainers in today's trading session.
They certainly are, but let me go back to Anish before I let him go. Anish, in what way does what has been delivered today change the needle? Do you believe, as far as private investment is concerned, that's been the big hope and the big ask in terms of consumption as well? And also from a manufacturing standpoint, the measures announced by the budget, including on the customs side, on each of these 3-pronged areas, how does the needle move post the budget?
I think it just accelerates our pace, Shireen, because the fundamentals have been very strong in the economy. We've seen short-term blip from a demand standpoint. With the consumption incentives given here, hopefully that is addressed. The more important thing is to ensure that we can manufacture in India at a much lower cost than the rest of the world. And that will allow the economy to grow at a much faster pace. And a number of measures taken here are steps in the right direction to make that happen.
Okay, got that point, Anish. By the way, I just want to point out, trying to go through more and more of the annexures. So while the budget speech spoke about the reduction in TDS thresholds for certain segments, for instance, the LRS limit 7 going to 10 lakhs, there is an increase in TDS rates or the thresholds for a whole range of payments. Dividends for an individual shareholder, income in respect of a mutual fund from a specified company undertaking, winnings from lottery, crossword puzzle, winnings from horse races. So there are several cases where the thresholds have been increased. So that's what we have at this point in time. I just want to go back to the panel here. And, Sunil, if I could come to you, what is the big picture takeaway? The headline clearly seems to be that the middle class has finally gotten the relief. But one ask, at least I have not found even in the fine print so far, which is corporate India was asking that new manufacturing companies should be given more relief, that concessional income tax rate of 15% should be brought back, if not 15, 18%. But as of now, we've not seen evidence of that in the speech or in the documents. Your overall take on what this will mean once we go beyond the personal income tax bonanza?
So thank you for having me. So I think, Surabhi, a lot of eyeballs and discussions is obviously pertaining to the income tax relief, and rightly so. The government has given 1 lakh crore in the hands of crores of Indians, and that is a welcome step, because I think the economy was suffering from low consumption, a combination of obviously maybe a less disposable income as well as tight liquidity situations. So the liquidity situation was eased off a little bit 3-4 days back when the central bank pumped in 1.5 lakh crore, and now this 1 lakh crore additional also has the potential of at least kickstarting a little bit of a temporary blip in consumption. Having said that, I think capital expenditure, which was slated to be 11 lakh crores, the government has not been able to spend the entire amount, maybe because of inflation, everything got deferred. And to that extent, the kickstart as far as capex is concerned has got deferred a little bit. Luckily for next year, we are again looking at a 10% growth on this lower 10 lakh number. And I think that is something which is very interesting and is very, very needed. As far as your comments are concerned, I think a lot of announcements were made in terms of pushing manufacturing in India, particularly industries where it's more smaller industries, SMEs, where there are a lot of imports, a lot of manpower required, like textiles or leather or toys and so on and so forth. So I think the intent is very clear that we need to make India a powerhouse in terms of manufacturing also. We still have to see the fine print.
Yeah.
But on the face of it, obviously, this 15% has not been revised. But on the infra side, I think there has been a 5-year extension in terms of fresh investment, which will
absolutely
be
the sovereign wealth
for
funds.
its benefit. So I think it's a good balance. I think overall, it's a very balanced budget. I wouldn't say it's like a superlative growth focused budget, but this 1 lakh crore of added income in the hands of crores of Indians, I think that's a key positive.
Yeah, absolutely. And I just want to add to that the annexures show a whole range of announcements to make GIFT City more attractive. Again, that's a stated roadmap to try and get in more longer term capital through that route. In fact, let me answer. And one more point we should keep in mind on crypto, by the way, there is a clear reporting framework that has been announced. It says there is a proposal to bring an amendment in the Act for this new reporting framework for all regulated entities, which would be crypto exchanges. They have to give information on digital virtual assets in a specified format as the government asks for it. So that's one. But coming on this point, if I could throw this to Ashok and maybe to Dinesh as well. Ashok, coming to you first. While, visibly we don't have that headline on 15% tax for new manufacturing companies, I don't know if you had a chance to go through some of the GIFT City provisions or the other provisions, sovereign wealth funds we've spoken about. Do you find anything else there that could excite longer-term investors looking at India?
I'm actually just looking at the fine print. It's just been delivered to me. And there does not seem to be anything which is specific. I mean, obviously, we've all spoken about the infrastructure. We've all spoken about the one question that's still unclear is that if a domestic fund, in other words, if a fund from India was to relocate to the GIFT City versus a global fund being relocated to GIFT City, whether the relocation from India to GIFT City also triggers the same benefit or not. That's not been clarified in my view. But there's clarity about global funds being relocated to GIFT City. There is clarity.
Yeah.
I haven't been able to pick up whether, if for example, a normal fund, an AIF was to decide to relocate to GIFT City, whether that capital gains would be exempted or not. I haven't got that done. But there is language around parity on long-term capital gains on transfer of securities between residents and non-residents. And there was some lack of parity when changes were made last year, both in terms of property as well as, of course, in securities. And I think they seem to have brought that parity back. That certainly seems to have been provided as a clarification. But over to Dinesh for that.
I just wanted to come in with some of the sectoral outlays, guys, and maybe we should just bring up these numbers for the benefit of all of our viewers. The defense sector outlay has seen a reduction at 4.91 lakh crore rupees. The budget has allocated 4.9 lakh rupees for the defense ministry. That's down from 6.2 lakh crores in the July 2024 budget. So that's as far as the defense allocation is concerned. At 4.9 lakh rupees for defense, down from 6.2 lakh crores in the July 2024 budget. Rural development, an outlay of 2.6 lakh crore rupees. Agriculture, 1.7 lakh crores. Education, 1.28 lakh crore rupees. Health, 98,311 crores. Urban development, 96,777 crores. IT and telecom, 95,298 crores. We'd have to also see whether there is an enhancement or a reduction across, but defense, there is clearly a curtailment as far as the outlay is concerned at 4.91 lakh crore rupees versus the 6.2 lakh crores. You wanted to come in, Ratin?
No, I just wanted to say that one good thing in this suit boot budget, which should help all the suit boots who are celebrating this so-called middle-class tax cut, is a very promising announcement the finance minister made, that she's going to cut the tax code in half. That's been long overdue, long overdue. And much as I might be, sad at the celebration that's going on about this, people earning 6 times the per capita income getting a tax break, lowering the tax code bill, I think, should incentivize the growth in taxation. I also want to caution about the numbers for next year. The implicit buoyancy of 1.3, 1.4 that is implied in this budget is very rarely achieved by government, especially at a time when growth is tanking. So this particular cut, although the absolute amount is only 1 lakh crores, might actually put pressure on government outlays. On defense, I want to say, I think the government has been very realistic. They're unable to spend on defense. So there's no point allocating money for defense when you can't spend any money. And I think the government has done quite the right thing to make it more realistic for next year, because they have a good idea about how they're going to be able to allocate money to defense next year. So all in all, I think on the expenditure side, the budget has been prudent, and therefore you're seeing more modest outlays, because the execution capability of the government is limited. And it is for that reason, and not because of the tax cuts, that the expenditure side looks, moderate.
Fair point, and that's an interesting and important point that you make as far as the defense sector allocation is concerned. Mr. Chakrabarti, you've been going over the fine print. Anything there, and especially as far as the housing sector, etc., is concerned, cement, steel, what do you believe that the budget does in terms of infrastructure, housing specifically?
Two, three things. For defense first, I guess we need to, because these are reasonably finely balanced. So perhaps we have to see between the revenue allocation, because revenue was about 3 lakh crores, balance about, so it was about 4 point odd something.
Right.
So I'm a bit surprised when we say 6, because there are some other allocation for roads, etc., which keep changing. So I guess a fine print needs to be seen. This is unlikely. There's not much of a scope for cutting, because almost 75% of the capital acquisition in any case is domestic.
Correct.
So therefore, the numbers are reasonably well known. So that's one particular thing I'm happy about is about IFSC, which we just discussed.
The gift city,
A, income tax, B, getting AIFs in. Because if you see, the corporate tax is at 9.8% growth, less than 10.8% envisaged, 9.8 lakh crore, about 40,000 crore less than what was envisaged at B stage. It has not really kept up pace. So the only disruptors in the economy are going to be the startups and GCCs, where there's a lot of private equity movement, which could happen only through IFSC. To that extent, one again has to see the fine print of regulation and everything, but at least a correct direction on the things.
Correct direction. And of course, as we've been pointing out, we are poring over the fine print at this point in time, because the speech did not focus on the details which are available in the annexures. But let me toss it back to you in Bombay.
Shireen, thanks very much for that. I'm just looking at the market and I don't want to sort of put everything which is happening on the budget. I mean, after all, it's a Saturday as well. So we must keep that in mind. But FMCG, of course, the index is up almost 4% now. So if anything, it's picked up a little bit more steam. And the auto space is up about 2% as well. On the other side, defense, as you said, Shireen, in terms of allocation, sharp deceleration, right? The index is now, There's a Nifty Defense Index. It's down 3%. And the PSC, CPSC, a couple of these government company indices, oil and gas, they're all down between 2 and 3% at this point. The metals index is down about 1.8% as well. And IT as an index is down about 1.5% as well. I just want to go back to Sunil for a bit. Sunil, with this sort of 1 lakh crore boost to the, the taxpayers, as an investor, does it make you any more bullish directionally to look at that area? There is on this Friday, we'll have something from the RBI as well, maybe a rate cut.
So I think, Prashant, last 1.5 years, consumption generally has been pretty slow. Combination of maybe a little bit of inflation, maybe a little bit of fatigue post the huge boom we saw in the consumption post COVID and so on and so forth. I think a little bit of liquidity squeeze also from NBFCs and banks in particular post the regulator directing them. So I think all this is getting sorted to some extent. On the fundamental side, we have had good monsoon season, good crops. I think crop prices are good. So the rural income should be pretty handsome or should see a pretty handsome growth. You had RBI, which infused 1.5 lakh crore only a few days back. So liquidity has been to some extent taken care of. And now we have this huge boost of 1 lakh crore flowing into the hands of Indian consumers. So I think at the margin, obviously, yes, there will be some move up as far as consumption is concerned. However, what is happening on the consumption stocks is a combination of a lot of things. One is they have never been cheap. They are not cheap. So there's a valuation headwind. Second, there are a slew of new products coming in, and particularly with this advent of digital economy and D2C brands and so on and so forth. To some extent, there's been a cannibalization, even in terms of existing players losing some market share. So I would say that at the margin, this is positive, but this is not something which would lead, an investor to double or triple the weightage as far as consumption is concerned. Maybe a slight tweak, but for the economy, I would say it's a bigger boost because the economy needs consumption as well as capex to move back to that 6.5–7% nominal and real and 10% nominal growth rate. Rate cut, I'm not sure whether it's going to happen very soon, but the good thing is the path to fiscal prudence is maintained. And to that extent, the environment as far as interest rates in India is concerned is pretty, on the downside, which is refreshing compared to what is happening in the world.
Okay. Well, point taken on the consumption boost. And I also take Ratin Roy's point that, that also means that there is that much less in terms of welfare expenditure. You cannot take away from the fact that we have a very large number of people who are not earning even 6 lakhs, forget 12 lakhs a year. But Mr. Dinesh Khara, to come back to the fact that there is more money in the hands of those who would take retail loans, 12 lakh rupees is the minimum income tax limit now. Does this mean that banks can now have more of a retail loan, or do you see the capex baton being picked up at all by private sector, given what the budget has said?
No, I think there is a very clear focus when it comes to the infrastructure investment, and also they have brought in the PPP concept also. So I think part of the infrastructure also, they have also indicated that even state government are expected to join them in this PPP investment for the infrastructure. So I think infrastructure boost will certainly be seen. And when it comes to the retail borrowing, maybe, there are, of course, when it comes to the consumer unsecured borrowing, that is expected to remain expensive. But nevertheless, I think as far as home loan, etc. are concerned, there will be enough disposable income to support the EMI. I expect that even that sector will get a boost with this kind of a income tax relief which is seen. And also I would like to mention that, now the startup also, they have increased the guarantee scheme for startup as well. So I think to that extent, they are addressing all the very critical components which are required to be addressed for giving the required push to the economy.
All right, got that point, Mr. Khara. Just going back to Dinesh. Dinesh, earlier, I asked that question to Ashok as well. Let me take that to you now. whether there is anything further that you've picked up in the annexures, in the fine print. There are lots and lots of announcements on gift. One, we discussed, but like Ashok was saying, that there still needs to be clarity whether there is a domestic relocation from, anywhere in India to gift, whether that also gets a capital gains exemption. Anything else which could boost investments and flows?
Lots and lots of things. So far as GIFT City is concerned, income arising by way of ship leasing is specifically exempt now. ETFs have been brought under the ambit of what can be done in the GIFT City. One very welcome thing which one has seen this time is that most of the extensions are for a period of 5 years rather than 1 year, which we see at a time. So for example, the income of a startup is exempt for a further period of 5 years straight away. So up to 30 or whatever startups are there, 5 years exempt, which is again a very, very welcome thing. One very interesting change, and the finance minister did mention this in her speech, but I didn't pick it up at that point of time. There is this concept under Income Tax Act that if a foreign company has a significant economic presence in India, then it is liable to tax in India. This, of course, applies where there is no tax treaty. And the question is that if the significant economic presence is only for the limited purpose of export, would there be a tax liability? And that has been clarified, and that should provide a relief to several people, because that was something which was acting as a barrier to exports. So again, very, very welcome. So quite a few clarifications out there.
All right, Mr. Kanabar, we'll come back to you, sir. Let me bring in Amitabh Kant. He joins us now. Mr. Kant, always a pleasure. Many thanks for joining us here on CNBC TV18. She saved the best for last. It is a budget that's delivered on the hope of boosting consumption, on delivering for the middle class, and that was the promise that the Prime Minister had made. On balance, Mr. Kant, your big read, your big takeaways from Budget 2025.
So, Shireen, first and foremost, I'd say that the main attempt has been to give a fillip to demand and put more money in the hands of the consumers. That should give it a big push. But it has been done in a fiscally responsible manner. She's also looked at the macroeconomic stability of the economy, because 4.8% fiscal deficit in the RE and aiming at about 4.4% for the coming year. Also, I think if you look at the budget, there's a huge focus on labor-intensive sectors. The first time I've seen so much of emphasis on tourism, on textile, on footwear. So labor-intensive sectors, there's been a focus, but I was particularly glad that the startup fund of funds has been replenished by another 10,000. This will have a huge multiplier impact, because there'll be a risk sharing with the venture capital funds. And also this putting another 20,000 crores for innovation, and saying that there'll be a separate fund for deep tech areas, which requires patient capital. So that should be a big push to the startup and the deep tech movement in India, which is job creating in many ways. And I would also say that two good things that have happened in the budget is that, I'm a great believer in free enterprise and private sector. The focus of taking asset monetization forward from 6 lakh crore between 21 to 24, now to 10 lakh crore. And that means asking government departments that put out your assets for monetization, and private sector to come in and do better operation and maintenance. And secondly, to ask every ministry, prepare a pipeline for PPP projects for the next 3 years, because the government departments were getting very comfortable by owning and managing infrastructure. And that was causing great inefficiency in the economy. So putting all these out and bringing in greater thrust to PPP will be a very good thing. The total allocation for infrastructure on CapEx has been kept at about 11.2 lakh crores, which is a little higher than the previous time. But infrastructure, greater thrust on execution and implementation of infrastructure projects is very, very critical. I would have felt that there should have been a much greater even a greater emphasis on infrastructure, because infrastructure boost gives a long-term impact. And lastly, I feel that there is a clear realization in government that several departments and regulatory bodies have caused a regulatory cholesterol, and they need to scrap rules, regulation, procedures, and acts all over. A huge amount of scrapping of laws, etc., needs to take place. And rightly, the finance minister has talked about laying a huge emphasis on ease of doing business and creating a committee which will come out within 1 year, a report. I think it should be much quicker, much faster, because at the state level, a whole range of deregulation is necessary and is required. And this, to my mind, is very critical. And I also feel that this emphasis on clean tech mission is very important, because today, if you look at it, solar, we are importing 80%, EVs, batteries, we are importing about 75 to 80%. All these things require an approach of Make in India in a very big way. And so overall, I rate the budget as giving a major push to demand creation in the Indian economy, and a very macroeconomic stability is really the focus, despite this big giveaway of 1 lakh crore.
Yes, it is a big giveaway in terms of the revenue foregone for what the finance minister has delivered as far as direct taxes are concerned. But Mr. Kant, this regulatory cholesterol that you spoke of, and of course, a lot of what was announced in the budget will be work in progress. As you pointed out, a committee will now look at these areas of deregulation and so on and so forth, and come back within a year's time. But on the infrastructure side, because you said that you would have hoped for the government to do more at 11.21 lakh crore rupees, the capex. Do you believe that is enough? Do you believe more should have been done?
Yeah, but the intention, again, Shireen, is that you have better quality of infrastructure creation with 11.2 lakh crores, but you also push out a lot of government assets for private sector management through the asset monetization pipeline, which has done well. They were able to achieve the 6 lakh crore and now to target for 10 lakh crore. And also say that we are going to have more and more of PPP, because in the last 7-8 years, there's been a slowdown on the public partnership projects, and that requires you to do a lot of homework in terms of land, your ability to get all clearance and then put them out for bidding. So you need, every ministry has been asked to do this in the next 3 years. That, to my mind, is very important. It's a clear message that the government believes in private sector, and it believes in private sector management of infrastructure creation. That's important. I really feel that the next bid round is the fiscal bid has been done, and the next bid is to allow, in the monetary policy, to allow greater credit to flow, because I'm a great believer that the private credit to GDP ratio in India is still low, at about 50%. That needs to increase, and the RBI needs to pick up the baton and allow greater credit to flow to India's budget.
Right. Okay. Shireen, I just want to quickly make a mention on what's happening to insurance names, and they're all up on your screen right now. HDFC Life is down. These are big moves, 6.5%, 6% on HDFC Life. Max Financial is down 4%. ICICI Pru is now down 7%. And you can look at something like a SBI Life, which is down about 6.5%. It's not something which has been done for insurance, or there's no negative per se for insurance as a space. It's not directed at insurance. It's just that the new tax regime has been incentivized heavily in a big way, and this will make, the no tax up to 12 lakhs will make a lot of people think to move. The thing is, under the old tax regime, under the sort of 80C benefits, etc., insurance gets a fair bit of relief, tax reductions. And if people move from the old to the new, I think that essentially is the reason why these insurance companies are selling off. I saw estimates ranging from about 5 to 7% of individual new business premiums on account of this 80C benefit. So it's not that large also, but in the margin, it's certainly negative. I think Yash is with us for a quick take. Yash, over to you.
Well, Prashant, I want to explain two things. One is, of course, the obvious question that if the government is going ahead and increasing FDI to 100%, why are life insurance companies or insurance stocks reacting negatively? Let me clarify that first. FDI going to 100% has no impact on the listed companies because what comes in the way there is the minimum public shareholding norms, where the promoter can only have 25%, 75% have to be in public. So, of course, FDI of 100% does not matter at all as far as the listed life insurance companies are concerned. So, there is no positive coming out of there for the listed life insurance stocks. Then why are they down today? That's exactly what you were also alluding to. Government's move to sweeten the new tax regime. Now, of course, as per the new tax regime, if an individual plans to take exemptions, which the government plans to introduce under the new tax regime, then there won't be any tax payable up to 12.75 lakh. Now, what that creates the fear is that more and more people, if the new tax regime becomes beneficial to them, will look to move towards new tax regime. And what that does is that it defeats the purpose of buying life insurance or health insurance for the intention of saving taxes under ATC as well as under ATD. You spoke about the estimates, about 5 to 7% of the life insurance premium still comes for the intention of tax saving under ATC, and that is the impact which might get impacted for life insurance companies as well as on the ATD side for health insurance companies if people indeed find the new tax regime more beneficial, more attractive, and start moving there. And that's exactly the fear which is rattling the life insurance stocks particularly today.
Yash, I just want to make one, you said FDI is not negative. It wanted people, biggies come in with 100%. Won't that raise competition?
So, Prashant, it is positive for the sector because, of course, a lot of foreign capital, a lot of capacity with that would come.
No, I'm saying from if you're already an incumbent large player, it raises competition, right, at the end of the day.
Correct. It will increase competition, but I mean, with a penetration of 3%, insurance density of just $92, much lower than developed economies. I mean, it's a large pie for all players to go there and acquire. So that's not a very big concern.
Point taken. So they're not falling because of competition. They're falling because the tax stop
the
given.
stock move is basically this thing.
Because the tax stop may not work anymore in their
my
favor.
only point is that FDI thing is also not positive. I mean, if you're from a competition perspective, at the margin, 3% penetration, but the point is it's a small pie expected to go up, but right now it's 3%. So,
Absolutely.
But
But
also
in which there will be foreign competition. But actually, the nature of the stocks that are in the red today clearly indicate those dependent on public spending are the ones that are falling.
Absolutely.
So if you look at the names, RVNL, IRCON, BEL, I mean defense budget cut down, JSW Energy, IRFC. All these are,
everything infra, defense, oil and gas, PSU, CPSE, everything is coming off. Energy, so that's
because
the
that
fact.
big capex push has not come through, and some of these stocks, by the way, had recovered from the recent bruising fall. They'd all started rallying in the run-up to the budget. So positioning was for a much bigger capex announcement.
Which maybe that the market is overestimating or overreacting to this. Because if you look at the revised budget, actually capex has gone up by 10% because they brought it down from 11.11
from
to
RE to B, it's
10.2.
gone up. From B to B, it's
so
flat.
if you look at it from RE to RE, the expansion last year also was only 10%, and this year also is 10%.
Which is what the economists have been saying, that in line with the nominal GDP growth, but perhaps the market was expecting for a bigger number.
Nimish is pointing out that Dixon is down 6-7%. It is indeed down. It was down 10%. It's down 7.5%. We had the Dixon management with us earlier in the morning, and we were talking to him about the PLI. There's, of course, electronics component PLI, which is a new thing, 25,000 crore allocation, which was expected. Maybe it'll come out of the outside of the budget. We don't know. But he was also saying that the earlier PLI, which finishes in FY26, maybe there is the mobile PLI, basically, of which Dixon is a beneficiary. Maybe there's some extension, etc. Which I don't think that was really an expectation built into the price. It was something, I think we asked him, so he said, well, we need it. But it's a big reaction, and there are many listed other players as well. We should just sort of run through those names: Keynes and Amber and so many others, right? I mean, Sirma, PG Electroplast, and we'll put all those names up for our viewers.
They're mostly down. Sirma is down about 2%. Keynes is down 0.5%. Not too much, but the price damage on Dixon is the highest at this point in time. Perhaps the stock market also didn't pay too much attention to what the CEA was saying. And then, our team was flashing this even yesterday, the commentary that came through. The indication this time actually was there in the economic survey. The government saying that the onus is now really on the private sector to fire up the animal spirits. But even having said that, I think the 10% increase in capex is still what the economist was saying. Maybe the market wanted more. I think Shireen's coming in.
Surabhi, this is exactly what I've been pointing out, and I think Anant Nageshwaran made it very clear that to continue to expect the government to do 20%, 25% is an unrealistic ask, especially when you're also asking the government then to provide for tax relief. I mean, revenue foregone of 1 lakh crore rupees on account of direct taxes. Where is the government going to make up all of that is a separate question altogether. But to expect that it will be the historical, what we've seen in the last few years, a 30% kind of increase as far as capex is concerned. Even last year, the Finance Secretary had said, look, we have kind of reached a peak. We have reached a limit as far as how much we can do as far as government capex is concerned. So the message has been sent out, not just in the economic survey yesterday, but was sent out in the previous budget itself by the budget makers who were here with us on the channel explaining how they were looking at this. But Mr. Chakrabarti, you wanted to make a quick point as well. You're looking at the numbers.
Related to defense, it is RE number is roughly 4.56 and B number is 4.91. It's actually effectively an increase.
It's an increase. That's right. So that's a correction. There is an increase if you look at the RE number. So that's an increase as far as defense is concerned. I'm curious as to why we have Dixon, etc., selling off at this point in time, because it's certainly something that consultations are taking place. So it can come post the budget, so the window is not shut, is the point that I'm trying to make. But is there something else? There was a whole host of issues related to customs duty rejig. I don't know whether that has anything to do with it or not, but perhaps it would be best to check with those companies directly. That's the story as far as the markets are concerned. A quick final take before I let the two budget editors say goodbye. Ratin, we'll of course see you back in the evening as you digest more of the fine print, but on balance, your final headline.
The best thing that's happened here, and I'm not a Bihari, so I suppose the best thing that has happened here is for every Bihari in this country. And there's an election coming, so I understand. But I think is the promise to rationalize the tax code. What I'm very worried about, I'll come back with the exact numbers in the evening, is that the taxation system of India now is far more aggressive than it was yesterday. The proportion of corporate taxes haven't gone up much. Income taxes now kick in at 6 times the per capita income, and the revenue foregone from indirect taxes is almost zero next year, whereas the revenue foregone from direct taxes is 1 lakh crores, which essentially means that the Bombay Gymkhana has gained at the expense of the arm. And this is regrettable. I think I completely would like to endorse your point about capital expenditure. The government, to its credit, has very clearly said repeatedly that the heavy lifting on this front will ultimately have to be done with the private sector. And that has not yet been forthcoming, but there's only so much the government can do to raise capex. I'm not so puzzled by the markets not responding warmly to this budget. Because again, if it's only the Bombay Gymkhana whose net disposable income is going to go up, that sector is already maxed out. We don't see new sources of demand coming here that will give a permanent boost to the growth rate of the next 150, 200 million who don't pay taxes. And therefore, probably the markets quite correctly have reacted with caution, unlike us consumers who are very excited about the next thing we'll buy or the next holiday we'll take with that 1 lakh crores. In terms of fiscal prudence, I think this budget has done a very skillful job. 1 lakh crores is not a large amount in budget making terms, as also given a test to. However, it is the optics of doing that in personal income tax is absolutely massive, and that's a core support base of this government. And therefore, this has definitely benefited them without too much cost to the exchequer. The government has stayed its course on fiscal consolidation, which is good. Let's see what's happened to expenditure, but that I'll tell you in the evening.
Okay, we'll hear back from you more on the expenditure side. Mr. Chakrabarti, a final take before I let you go.
One of the things which, since it came initially on the agriculture side, a very comprehensive scheme has come. Normally, they are all divided up, something for irrigation, something for fertilizer, something for... It's a comprehensive scheme which has come up. I didn't get the name correctly, but it covers 100 districts and covers irrigation, markets, technology, everything. Though what one misses out on agriculture is it's supply side heavy. It also covers warehouses, rural warehouses.
Correct.
I really welcome it. However, on agriculture, we are still supply side heavy. It has to be, the market part. perhaps it's still work in progress. Everything cannot happen on the budget.
I have the name of the scheme, the Dhan Dhanya Krishi Yojana.
Dhan Dhanya
Krishi Yojana in partnership with Skates, which will cover 100 districts. And the finance minister saying 1.7 crore farmers will be benefited on account of that. So you're saying
it's an excellent scheme. The other part is, second one is the part 2 of Swami. It was launched almost
the housing
4.5 years back for the stalled housing.
Yeah.
If you recollect, all of us see a lot of shells of housing lying.
He's being modest, he designed it.
And there 15,000 crore additional has been provided. Of course, I wish this would, of course, come as a mix from both government as well as private sector. I hope 90% of it comes from private sector. Let's hope, because it depends upon how the rules and everything work out in this. It's a very well worked out scheme, has been successful. And, it's only the risk weights that RBI is going to attach to the assets, which would be standard. That will decide.
Right.
Third is on the regulation part. FSDC has been given the role on the financial regulations.
Yes.
Which means adding a lot of muscle in the finance ministry to the financial market division and other division to see that they can, because they're all very powerful regulators.
Yes.
To bring them, even though FM heads it, but somebody has to really act it hard. So a lot of lots of muscle has to be added there.
Lots of muscle.
To ensure that direction gets taken, otherwise we'll miss woods for trees. And lastly, I'm very glad with the consolidation part, which is something I guess should, over a period of time, don't look at the market.
Yes, absolutely. Well, yes, consolidation, I think everyone concurs. That's positive. And 2 schemes that you specifically pointed out, the scheme for stalled housing, which gets an additional allocation, good move there. And of course, on the agriculture side, a more holistic approach with that Dhan Dhanya scheme. But Prashant, back to you, more information on what's happened to Dixon?
No, Shireen, as I was talking, I spoke with the Dixon management, and what they said is that if anything, actually what has come through is positive for their business. So as the finance minister said, the basic customs duty on open cells has been reduced. They are setting up a display manufacturing capacity. We speak with them every quarter, and that's been something which the market is looking forward to. So actually it helps them. And they also said, the Dixon management has said that even for mobile parts, there are some reductions which have happened. And that is also actually positive. So, unaware where the stock was seeing a bit of a swoon, but you just see what's happening now. It's about 1,200 rupees recovery from the lows of the day on Dixon already. So it's actually almost flat now on Dixon. So I think, initial kind of knee-jerk reactions starting to get reversed. Even actually for insurance companies, you look at the price reaction, right? HDFC Life was down 7%. It's down 2.5% because the dependence on the old regime is about 5 to 7% of individual new business.
I think
new premium.
Prashant,
So a lot of it, there is excessive move, and then it kind of gets moderated.
I think what we have to keep in mind is today there isn't much volume, and perhaps that's why you're having these rather eccentric or volatile moves, because the volume perhaps is not like on a normal day. Remember, it is a Saturday, and foreign funds are not in the game. Well, actually, I want to look at it this way. Mr. Khara, you just correct me if I'm wrong. What could have gone to capex 1 trillion less because the increase is only 10%, and that 1 trillion actually is gone into the pockets of the taxpayer, right? Especially the small taxpayer, up to 12 lakh. Which means more people can spend, more people can take loans, retail loans, for instance. So, and normally the Reserve Bank's thinking is when fiscal deficit is kept under check, they are more courageous to cut rates because you don't want fiscal looseness and monetary looseness together. If the fisc is tight, normally the central bank cuts rates. This is their normal thinking. So do you think that this is a boost for retail loans?
So I think, it is certainly a boost to the retail loans because when it comes to the ability to repay, they have got a better ability to repay. So that is a positive. But, when it comes to decisions relating to the policy rate cut, etc., there are multiple other factors which they have to evaluate. And perhaps herein, even if the policy rate comes down, whether the interest rate structure will allow the reduction will be a function of the liquidity. if at all, unless and until liquidity improves, I think my apprehension is that the ability of the banks to cut the interest rate would be little constrained.
Fair point. Well, I agree with you. Liquidity also is something which the Reserve Bank has been giving. So hopefully going forward, we will see more such steps from them. Mr. Kara, thank you very much for being with us on such an important day. Sunita Reddy, the Managing Director at Apollo Hospitals, is also with us. Sunita, thank you very much for your time. Your first thoughts, there was a mention that medical tourism will be promoted. What have you made of the budget?
I think it's a fantastic budget because what is good for every Indian is good for healthcare. And the first part of it, of course, lowering of personal taxation is something that is going to put more disposable income in the hands of many more Indians. And moving on, this will give them access to health insurance products. The 100% FDI in insurance, while it might not show on the stock market, I see it as a very positive move because bringing in more liquidity will give insurance companies the ability to have higher risk pools and therefore create products that the middle class can access. We have seen private insurance and insurance products grow by 25% in the last 3 years. This is the best way to access corporate healthcare. So certainly a positive move. The second is the focus on oncology and cancer. The incidence of cancer is growing at far more than 7%, which is reported because it is not detected early. And with this focus, the dual focus, the first on creating daycare centers, they've mentioned 200 chemotherapy centers, which will cover all of the districts in the next 3 years. I think it's a great move. What needs to be done is to create a hub and spoke model and use AI and connectivity to make sure that we cover large populations. It would have been fantastic if we could have done this even on equipment that's needed for radiation. Currently, we pay between 28 to 36%. So a customs duty, a reduction on oncology treatment equipment would have been, would have been very comprehensive for treatment of cancer patients. The third aspect is clearly the Heal in India, which you mentioned. And Heal in India, Heal for India, all of this is good. It's a $100 billion opportunity. And I believe that we have the capabilities in place. If you combine this with the skilling and the addition of 10,000 more medical seats, moving to 70,000, I think we can set up a very strong healthcare system that not only heals India, but heals for the rest of the world. And by doing so, like I said, it's a $100 billion opportunity. I think we will earn a foreign exchange, we will provide more jobs, and we will create a healthier India. So to me, the budget was definitely a step in the right direction.
Well, absolutely. And there was a mention of that in the speech as well, that promoting and enhancing medical tourism is also one of the focus areas for the government. By the way, look at the intraday charts of insurance stocks all over again. It's all happening right here because of a very sharp reversal playing out now on stocks like SBI Life, HDFC Life. Many of them have bounced back very significantly from the lows. Big uptick coming through as the market settles down and digests this. By the way, folks, I was doing rough back of the envelope calculations, trying to figure out how much do you save in this, new era of the new slab. So very rough. I mean, for someone who's earning 15 lakh rupees, my rough calculations show that in the earlier, this is a new concessional tax regime, but with the old tax slabs, that person would have had to pay 1,40,000 rupees in tax. Now the liability is coming down to about 1,05,000. So roughly speaking, 35,000 rupees of savings for someone who's earning 15 lakhs. Again, I'm not taking surcharge and cess, too many things going on at the same time. But roughly speaking, that's the saving that we're talking about.
No, the finance minister herself gave us those calculations. Those
lakhs.
People earning 12 lakhs will save 80,000. Yeah. Those earning 18 lakhs will save 70,000. Yeah. And those earning 25 lakh will save 1,10,000.
Exactly, because for those who are earning 12 lakhs, the rebate itself is coming in.
Yes.
So it becomes nil. I mean, the rebate, which used to be only 7 lakhs, has now gone up to 12 lakh rupees with these new tax slabs. But anyway, it's anyone's guess. Now, where will this money be spent? Will it go in SIPs? Will it go to, buy new clothes? Stocks like Trent are surging about 7%. Will it go for travel and tourism and holiday? Or will it go in buying maybe better health covers? Because the market is worried on health insurance and they're not being covered, with more people perhaps moving to the new regime. but there is generally higher disposable income. So could that benefit? Anyway, let me take that question to Nilesh Shah, who's joining in as well. Nilesh, the markets become so polarized today. All things economy are selling off and all things consumer are moving higher. But as the dust settles on the day and the budget documents, how do you think we are poised, and what next for a market that's been hurting for several months now?
So while it is fashionable to say that market has been hurting for last 2 months, last 5-year return of market is 20% plus. So if you have given so much of profit, obviously there will be a consolidation or correction. This budget has clearly shifted focus from pure investment to also boost for urban consumption. And now that roti kapda makan is secured for most of the people, focus will be shifting to education, travel, entertainment, consumer durables and stuff like that. And that adjustment is happening in the market. More importantly, from a valuation point of view, capital good companies were pricing in price to vision ratio. So there is some amount of deceleration there. Consumer stocks, they normally trade at a higher valuation, but compared to their historically higher valuation, they were at a discount. So there is some amount of investor pulling over there. So we are seeing a distinct shift from infrastructure investments to consumption, both in the budget and hence in the market.
By the way, the market itself, it's not just life insurance stocks. The market itself is pulling back from the lows. Should keep that in mind. The Nifty's cut is around 60 to 67 odd points. That's the recovery that I'm talking about. Apart from life insurance, you've got stocks like Bajaj Finance moving higher. Of course, auto stocks are up. Aisha, for instance, is gaining more ground. And the Bank Nifty is also trying to reduce its losses.
You're right. Bank Nifty and mid-cap index were down about 1.5% at one point in time. Now down almost like 0.5%. So it's a fairly decent recovery that we've seen. Zia Modi, you've been with us for quite a bit. Thank you very much. But any last thoughts that you've heard, everyone? IFSC investments, anything from an investment point of view that you want to leave us with?
I think one will have to look at how the promotion of GIFT City takes place, Lata. I think there will be a lot of movement there. I think one thing that I focused on was the concentration that the FM gave to the MSMEs, given that, they apparently constitute 36% of our manufacturing and 45% of our exports. And that led me to think about what is the boost she has given to the skilling sector? Because we have Indians, but we need to have employable Indians. And I think there also the government has tried to do what it can in skilling. And in addition, I don't think anyone has mentioned the AI part of it, where the government has basically said that they're going to set aside a large amount to train people in AI for the Excellence Center. And I think that is one where both the country, the startups, and the foreign investment should converge well. And it's a new area for us. I think all in all, stable budget, no surprises from a foreign direct investment point of view. Some over-regulation by some regulators, which make it more difficult for FDIs and FPIs. But I'm assuming that will get sorted out at the back end. All in all, I thought it was fine.
Thank you. Thank you very much for that, for those wrapping up thoughts, Zia. And actually, under the FSDC also, they have, they are looking at an interregulatory committee, which perhaps will take out these extra compliance. Prashant, you wanted to say something? Go ahead, please. Yeah, Prashant, I think you're on mute.
Sorry, before Zia Modi goes, and unfortunately Kanabar is no longer there, but Nilesh Bhai is there. So a lot of things have been said about Gift City and the positives. In fact, I would say, despite my overall very positive view on the budget, and in fact, I believe it's the best budget in a long time, it did nothing to address the core problem of Gift City, which is that under Section 9A of the Income Tax Act, which Nilesh Bhai is very familiar with now, fund managers like me or my peers who are seated in Singapore or Hong Kong or London, who are managing FII funds are effectively prevented from relocating to India, to Gift City. So you can relocate a few funds and make it like a mini Mauritius. But
full
unless the
structures.
fund managers are allowed to
Yes.
relocate, Gift City can't be made into the kind of city that our Honorable Prime Minister Modi ji has dreamt it to be.
You know,
So just to complete the thought, metaphorically speaking, to grow a tree, it is not sufficient to have good soil, water, and sunlight. Most crucially, you need the seed. And the fund managers and investment teams, their investment managers are the crucial seeds to grow those trees, metaphorically speaking. So I must add that all this excitement around Gift City results into nothing but zero unless that issue is addressed.
I'm glad you raised that, Prashant, and I want to go to Ashok on this because we were debating and discussing this earlier as well. What clarifications come and have it on the relocation part. That and one more thing, Ashok, I remember this was a very big ask earlier. Basically, some of the non-bank units that are operating in GIFT, they wanted to get parity with the bank branches, the bank units in GIFT, in terms of issuing instruments like ODIs to overseas investors. That was a big ask. I don't know, I've not seen it in the fine print so far, but your thoughts on some of the issues that Prashant has also raised.
No, you're right. I mean, I have now seen the detailed fine print on IFSC, and the amendment required for Prashant to relocate to India is still missing. I mean, it goes back, his and my discussion goes back to many, many years when we first made this request to the government. But sorry, Prashant, there has not been an amendment, and the rules still remain rather rigid, which effectively means that existing funds operating out of Singapore, most of them are now from Singapore, not so much from Mauritius, are finding it difficult to relocate their fund managers. You can relocate the fund, but if you can't relocate the fund manager, then who's going to manage the fund? And I think sooner or later that change has to happen. Having said that, there is an interesting change that they have made in the Gift City rules, which is what they've said is, if there are two related companies and you have a treasury company located in the Gift City, historically, when there is a transfer of money from one related company to another related company by way of a loan, it's deemed to be dividend in the hands of the receiving company. What they have now clarified is that if the giving company is based out of Gift City, then any loan given by that company to a related company not based in Gift City is not subject to deemed dividend tax. So that's a very positive step forward in terms of enabling large corporates to set up their treasury business, certainly in Gift City, both domestic as well as global companies, without causing a deemed dividend tax. But to the point that was made by Prashant, we probably have to wait one more year.
And what about ODIs, Ashok? What about ODIs? Because some of Nilesh Bhai's peers, for instance, I mean, Kotak has a unit. Many other Indian entities have set up non-bank units in GIFT, and they all want to be able to do the business on ODIs as well, which I think the tax benefits are restricted to the bank branches right now. Did you see anything there?
No, unfortunately, nothing there either.
Okay.
No change in law. But just two other points that I'd like to make is coming back to MSMEs and Zia's point that there is a lot of focus on the middle class. I think we are missing the point on the number of new opportunities in terms of increasing the limit for both micro enterprises as well as small enterprises. I think a lot of microfinance companies and unsecured lending, even secured lending businesses with small ticket loans have gone through an immense amount of stress in the last 6 months. You can see the delinquencies, you can see the challenges in collection, and therefore you can see that several companies are either reeling under pressure if they're listed, or many that had filed for DRHP are not getting listed because of the environment. Increase of limits over there and providing insurance on a larger base, I think is a very positive step. Government is giving an assurance to more and more lenders to say, you can continue the business. And we know that there is some pressure at the lowest end of the economy, but we will cover you with insurance by increasing these limits. That's a very positive step.
Got it.
On insurance itself, on the FDI side, I think there is a very positive movement. I mean, we have 22 odd companies that
Mr.
are...
Badva, sorry. I just wanted to, a point taken. I just wanted to clarify something. And I don't know if you've seen this. This is the point about bringing clarity in income on redemption of unit-linked insurance policy. And the wording is, it is proposed to clarify that the profit and gains from the redemption of unit-linked insurance policies to which exemption under Section 10D does not apply shall be charged to tax as capital gain. Is this the way it is worded? Does it look like it perhaps is retrospective? I mean, just your sense. Redemption from here on, basically.
Yeah, so effectively, if the redemption happens from today, it does not matter when you invested. Therefore, if you invested historically, but you redeem today, the language seems to suggest that it would be. I haven't read that still in the document. So my apologies that I can't provide you greater clarification. But if that's what it reads, then it means in some sense it's retroactive in nature, because past investments, if redeemed from today onwards or whenever the effective date is, shall become subject to tax.
So this is like what they did to debt funds last year when grandfathering was removed? Something similar?
Something similar.
Okay. I mean, that is... Zia, you want to comment quickly on this? Any thoughts? Okay. Okay, I think you're on mute, but I think you're saying you're not seen it.
I've not seen it.
I've not seen it. Okay, all right. We'll have to, I think, clarify with our with Sapna, our reporter in Delhi, whether this is what they mean.
I'll have to run to the money control interview that I have right.
Prashant, carry on. Let me just actually toss it across to Shireen now, who's at the CIA budget headquarters with the panel of guests there. Shireen, over to you.
Well, thanks very much, guys. Consumption is the theme that's playing out, and we're seeing a recovery even as far as the markets are concerned. The Sensex moving back into positive territory, but the man with the biggest smile, Sanjeev Puri, the president of the CII, as well as the chairman of ITC here with us. Sanjeev, many thanks for coming back into our CNBC TV18 budget headquarters. Consumption, that middle class boost that was being asked of, the finance minister perhaps doing more than even what industry was expecting. What do you make of it?
Absolutely. I think the relief to the middle class is very welcome, and it's going to certainly provide impetus to consumption, and therefore, contributing to the virtuous cycle of investment and employment. And this was much needed at this point of time. Of course, we do expect interest rates also to come off in February to reduce, and that should provide some further impetus. But the larger point of this also would be that this is the immediate relief. But a lot of sectors that have been touched upon in the economy are areas that which are very labor intensive.
Right.
And the economic activity increasing in those areas will have larger impact on employment generation.
Footwear, toys, tourism, all being identified as sectors.
Even agriculture.
Yeah.
It has enough people, but
healthcare.
Income can improve. Income can improve. So all this itself actually feeds into the virtuous cycle of, therefore, consumption and investments. So there are measures for the immediate and measures that will also unfold over a period of time. So from that perspective, I think is a very positive.
But, in terms of growth and in terms of providing that consumption boost, I mean, realistically, what are we talking about, given what the finance minister's already announced in the budget? As you pointed out in the morning, rural had picked up, urban was still suffering. Do you believe that this could alleviate the pain?
You see, it will certainly provide some impetus, and there are multiple things that come together. Right? For example, social security for gig workers that will provide relief on medical expenses.
Yeah.
So a lot of pieces like that are there in the budget, and as I said, as employment comes in employment intensive sectors, that further provides boost. So we'll have to look at the full picture. This is one element of it.
One element of it. Rajiv Memani, let's look at that particular element as far as the tax cuts are concerned. Revenue foregone of 1 lakh crore rupees on the direct taxes side, 2,600 crores on the indirect tax side. But the signal that the government has sent out clearly saying that, look, we want to come in and provide a shoulder to the middle class. The big takeaway, we've of course got two big elections, Delhi right around the corner and Bihar. And, that's the message the government's sending out.
Yeah, I think, I think we've had pre-budget discussions. Everyone was expecting relief for the lower and middle income. But this extent of relief, I don't recollect, has been given 1 lakh crore in personal tax, which is almost, about 7 to 8% of the total personal tax collection that the government has. So I think it's a very significant relief. And overall, if you look at the overall theme from a tax standpoint, I think a lot of it is based on just simplification.
Right.
From the new income tax, 50% of the provisions coming down in the new income tax bill, that will be tabled next week. All the other things that they've also done, whether it's on TDS, TCS, all the other areas that have been laid out, a lot of that is on simplification. Also in continuity, no changes, no significant changes anywhere except addressing some, minor tweaks here and there. Unless if something is there in the fine print that we don't know. But this government generally, whatever is on the table. IFSC always gets, they're trying to encourage and project IFSC more. That's there. And overall, the emphasis, whether you look at the economic survey or you look at the budget, this ease of doing business. And I think it is so important to unleash the spirits and to ensure that India achieves its full potential. I think that, setting up the committee, coming out with in the next 1 year, setting up some competitiveness among states, clearly recognizing that a lot of this benefit, a lot of these things have to happen in states. I think that's a big change. And the pillars that they've identified, and focusing, some of which Sanjeev mentioned, focusing on those 4 or 5 pillars that are so critical for growth in the next 10, 15, 20 years, including nuclear power and making changes in the air. I think that was quite good to hear.
Yeah, a target of 100 gigawatts as far as nuclear power is concerned. And remember, the IEA has said that 2025 is likely to be a breakout year when we talk about nuclear energy. So India getting into the ring as far as small modules are concerned. But Chandrajit Banerjee, what the finance minister has delivered on the consumption side, perhaps some disappointment on the capex side. Clearly not on the lines of what industry was expecting or even hoping for, but it's in line with what the government has been saying. So on balance, the balance has been done and the balance has delivered.
Absolutely. Of course, we talked about a 25% more. I mean, there's no restriction to asks, but
no, clearly there isn't. Clearly there isn't.
But yes, this was expected, and one had thought about that. But if you really look at the type of spend that one sees on the capex, which is still, I mean, quite reasonable in terms of if you compare it, what goes into rural infrastructure, even this about the states that 50-year interest-free, So all of that actually would help in crowding even the private sector, which has been called a laggard, so to say, for some time. And I see that coming in because we see a focus on a lot through that will come through the consumption demand. So all in all, not really any disappointment with the capex which the government has done, because it has done more than to offset the consumption demand.
Done more than what was expected, certainly on the consumption side. Sunil Mujal, thanks very much for joining us. On balance, the big headlines, the big takeaways, what does the budget do to accelerate growth?
So actually the whole exercise, I think, was the balancing act between maintaining fiscal discipline, which the finance minister has put on herself over the last many years, at the same time figuring out a way to bring growth back in. So I think it's been done in multiple different ways. One is the building blocks, is on education, skilling, research, innovation, tech focus. That's very good. Second is picking specific sectors for high growth potential, clean energy, deep tech, so the seeds, that's a massive area actually. What they've done in agriculture is a wide coverage. What I like is also focusing on some of the fundamentals, things like nutrition, things like the elderly, things like the farmer, small industry, export capability. So it's actually, I'm actually broadening the answer to your question, because I don't think it's only about that. It's not only about, growth is not something you can flick a switch and get tomorrow, but the tools have been put in place. And the point you were making just now about the higher liquidity in individuals and families' hands will either go towards savings or investments or consumption, and all three will do good. Even if you say it's about 1/3 each, roughly. So you're talking about 30,000 crores coming into consumption this year. So some of it will need to go because personal and family balance sheets were getting a bit upset because there was over leverage taking place on individuals. I think some of that will go to offset that, as companies and banks have done over the last 7 or 8 years. So I think we will come out better, healthier, cleaner. I do hope, unlike what CB is saying, I was hoping that the infra spend would have been higher, because this consumption takes a little bit of while for the virtuous cycle to kick in. Consumption can start, but consumption leading into production, leading into additional capacity, leading to jobs is a bit of a time lag. So That's one miss from my side. But I guess to be able to maintain the 4.8 instead of 4.9 at the Fisc was a pretty magical number.
Oh, and it certainly was a surprise that came in there after having delivered on the kind of cuts that they delivered on. But Sanjeev Puri, let's talk about those untapped sectors where the government hopes to unlock potential. Tourism, you know, this identifying 50 cities, PPP with states, PPP with industry as well. I'm not sure what the details are, but also including hotels as part of the infrastructure harmonization scheme that they're talking about. What did you make of that? And, you know, a lot of actually the schemes that were talked about are work in progress. The actual operationalization still has to be detailed. So what do you take away from many of the announcements that came in?
See, first of all, many of the specific interventions that are there, you alluded to some in tourism. Then there are others, for example, in exports. I think the integrated approach, cross-ministerial approach, I think is absolutely the one that is required, because in the morning also we spoke about some of the issues that have to be dealt with, which requires a cross-ministerial approach. And something CI has also been talking about, you know, having an integrated approach. Looking at setting up this committee on ease of doing business.
Right.
And taking an integrated and focused approach on agriculture, 100 districts, all-round development.
Yeah.
Taking an integrated approach on rural, the non-farm development. You know, really sending some development and resilience hubs for rural areas. So these are very fine ideas, very good ideas, and certainly will unlock the potential in many, many areas. You know, creating a framework for GCCs. GCCs are already, you know, doing well in India.
And massive job creators.
Massive job creation, and the world has demographic challenge. So it's a great opportunity for India, and to provide impetus to it, to make some, you know, today it's happening on its own. Without really any impetus or specific interventions. So right now, to create a facilitative framework for this, I think it's going to provide further impetus to it. Then the whole idea about the strong point of reforms and collaborating with states. I think this will provide a lot of impetus, because a lot of reforms now need to be done at the state level. Right? So a lot of the right things are there. And I think what I'm very happy to note also is that there is a lot of clarity on the mechanisms that will be used to do it. It is not just a statement without an institutional mechanism.
Sure. Rajiv Memani, the big headline for you as I say goodbye, at least as part of this session, but the big headline that you take away from what the finance minister has delivered.
I would say identifying the critical growth drivers for Viksit Bharat, ensuring that there is, as he rightly said, that there is a focused approach, interministerial approach for that, including ensuring that there is good state-to-state collaboration, and identifying all the levers, you know, even AI, deep tech, you know, global value chains. So at least the thought process of growth, the growth levers are very clear, and how you take that through. Now, the main thing is, you know, how these committees come, how the execution happens, and what changes on the ground.
It comes down to execution. CD.
So adding to what Rajiv said, I would think the national manufacturing mission. That's going to be very critical, because that's going to really cut across. And secondly, the element of trust, the Jan Vishwas Bill 2.0, that again is a very, very big takeaway for me.
Okay, Mr. Munjal, final word.
So the setting up of a group to review all rules, regulations de novo, I think is one of the most critical things which has not got enough airtime from many of you. Because for a long time, we've all been cribbing about excessive red tape. We've tinkered with the laws and rules for 50 plus years. We've scrapped many, we've decriminalized many, but it's not enough, because they were designed over 100 years ago. I think this is a fantastic move, other than making things easier for industry, accelerating M&A, and there's a whole bunch of things on that front, which I think are quite welcome.
Well, we'll have to wait at least a year for that committee to deliver its verdict on what will be axed, what will need to go, but a clear message being sent out by the budget. Mr. Munjal, CB, Rajiv Memani, Sanjeev Puri, appreciate you joining us here on the CNBC TV18 budget headquarters as we digest what the budget will do in terms of growth and how it will propel the needle of the economy. We are going to take a break. We haven't taken one in a very long time. We're back in a moment with more. We leave you with where the markets are and come back for closing. Stay with us.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set
Welcome back. This is our special budget coverage on CNBC TV18. We've been telling you what's come of the budget, what's the positive and what's the negative, although there is nothing very much negative which we've been able to pick out so far. Usually about 2 hours, 2.5 hours later, you know, tax experts, and we've got many here in our studios and our offices who are poring over the finer details, will come up with this or that, you know, which is like, for example, last year there was, you know, that big googly that the benefits on debt funds were removed. I mean, the grandfathering relief was removed for debt funds, but this time around, at least so far, there is nothing as such. Markets have come off quite a bit from the day's lowest point, and we are down only 20 points or so, 23,490. And of course, what's doing well is consumption and all kinds of consumption names. Even I saw Swiggy, Zomato, etc., surging quite a bit. So that's the picture. Well, we've got my colleagues joining in as well. Rima is here, Nigel is here, Mangalam. You guys were holding the bull by its horns, guys. And
I think one of the horns of that bull worked. That's the one in the green.
I mean, consumption is the story today, Mangalam.
Consumption is totally the story. You know, everyone was hoping for some boost coming into consumption itself, and it's largely because urban consumption had been struggling. We've been hearing from companies over the last couple of quarters, etc., as well. So we'll leave it to the tax experts to find out the exact benefits. But speaking from what the finance minister had said, and quoting her speech itself, zero income tax incidence for people up to 12 lakh rupees. That saves them 80,000 rupees annually. Income tax of 18 lakh will now have to pay 70,000 rupees less in terms of annual taxes, and income of upwards of 25 lakh rupees will save 1.1 lakh rupees annually in terms of taxes. That's roughly 10,000 rupees additional that people have per month for people upwards of 25 lakh rupees, urban dwellers that are. And as a result of which, all these urban consumption plays, the likes of Zomato, Swiggy, Nykaa, you have the likes of ABFRL, which is the biggest gainer. You have Trent, which is doing extremely well as well. So the urban mass consumption spaces are doing extremely well. Premium was doing well already. And even in staples, if you look at something like a Nestle, 75% of their revenue comes in from urban India. GCPL, which is among the bigger gainers, 70% of their revenues come in from urban India. We have Britannia, Marico, all of them, nearly 2/3 of revenue as well coming in from urban India itself. Add to all of this, you have ITC, which is doing extremely well as well. Why? Because before every budget, there's a fear that there could be an increase in tax incidence out there as well. That's not come by. But most importantly, the FMCG sector had been underperforming for the last couple of years. If you look at, the valuations as well, if you look at names like HUL, you look at names like Britannia, you look at names like ITC itself, Nestle, Jubilant FoodWorks, all, the table comes up for you on the screen. If you compare it to the FY26, their current FY26 price to earnings, 1 year forward price to earnings, and look at it from a 10-year average basis, they've come down to the mean. And in cases like HUL and Dabur, they're actually below the mean as well.
So there is that
valuation,
comfort as well.
Yes, comfort as well. And then add to that, you had big gains in capex and infra-related themes earlier. If there has to be a sectoral shift coming by, then it has to be the consumption space.
Will this cause that sectoral shift is the question. And we'll get to, the other sectors as well, one by one. Insurance, Yash is also standing by, and we'll bring him in. But I think we have Ramdev Agarwal now joining us, chairman and co-founder of Motilal Oswal Financial Services. Ramdevji, good to have you with us here. Good afternoon. It's been a couple of hours now. Budget, I'm sure your team has briefed you. You've poured over all the important things. What's the sharp take at this hour, according to you? Is it how would you rate it if I were to rate it on 10?
10 out of 10 for sure. If I could give 10.5 also. So it is definitely 100 out of 100 budget. And first thing is there is no negative. Right. Okay, at least as far as I know, there is no negative. So which is a big positive. Second, that whatever they said in economic survey, everything has given, it has found some space somewhere. So I mean, now insurance is 100%. That shows the kind of intention to attract capital into the country. Then they have also talked about global competency centers going to the tier 2, tier 3 cities. That's a very big revolution in India. I mean, it is after IT, GCC, evolution of GCC is very, very large. So I don't know what all they have done.
Yeah. No, absolutely. Absolutely. We'll get to some of those things in a bit, but for our market audience, right? What Mangalam was talking about, how much of this is this a boost on personal income via personal income tax route enough to spur meaningful growth for listed companies, and where would that show up in a more meaningful way, according to you?
Yeah, so I think clearly I'm not in a position to figure out when you get about when your income level is about say 15, 20 lakh or 24 lakhs, and you get a benefit of about 70, 80,000 rupees. Where does it go? My sense is clearly there'll be that money will tend to go into the consumption, and that's what market is betting on. So, I would go by the market judgment that that consumption will, particularly the FMCG kind of item or Zomato and all who sell small ticket items, they would get benefit clearly.
Mr. Agarwal, afternoon. This is Rima here. Now, CAPEX infrastructure was seen as a multi-year, multi-decade kind of a story for India. But given what we've seen over the last 2 years and the thrust now on consumption combined with the welfare schemes announced by the government in the last 12 months, is there a shift now in the narrative from CAPEX to consumption? And therefore, should you step back from the CAPEX-related themes as a multi-year story, especially after the kind of returns they've generated?
Yeah, so I think as far as the economic allocation is concerned, that remains same, just that the market was sitting on the CAPEX side, and there is a shift in the allocation. And in fact, we were saying that economy is growing at 7%, 7.5%, but there's no feel on the consumption side, anything of that kind of a growth. So now that consumption, which was completely amiss, there is some money which has been put in the hands of this middle class. And because if you can't increase the income, you have to reduce the tax so that people can buy some more. And other way was to reduce the cost of the goods by reducing the GST and all. So that side they have not done. So they have put some more money in the hands of consumers. And see, real benefit is going to come from economic growth. Will they go from current 5.5% kind of a growth for last quarter? Will they again go back to more like 7%? The real benefit will come from there, and then from there allocation will happen.
No, fair enough. But what about the CAPEX story? Is there a change? Would you continue to allocate the same amount to the CAPEX infrastructure-related stocks, your defense, railways, etc., as before?
Yeah, so we will, of course, there will be reallocation of the resources. Ultimately, the fund manager has only $100. So out of 100, if I remove 10 to the consumption, obviously the 10 will come from the CAPEX side. I mean, if I say the CAPEX and consumption, there are only two buckets. In that case, if I increase the allocation to consumption by, say, 5 or 10 rupees, that will immediately come from the CAPEX side. Though the story has not changed for CAPEX, but the story has improved for consumption. That's how I look at it.
How much do you think for a lot of the consumption companies is in the price? Because when we speak about urban consumption, there are names like Zomato, Swiggy, Trend, etc. They are trading at high multiples already. It's the staples which are actually trading at 10-year means. So in that case, the incremental allocation to consumption itself, does that go to consumer discretionary urban consumption, which is already trading at elevated valuations? Or would you look at staples as well? Because now that rural is improving and there is some push to urban, maybe that makes a better value bet.
Yeah, so I think as far as the stock selection is concerned, it's also a question of at what price you are buying and what you are buying. So those things are about the stock picking. But broadly, if consumption is going to happen, where is the actual value lying? Say, I would think that all the digital companies, quick commerce companies, that's a good place to, if they get a little more booster, I would rather spend there than the 70, 80, 100p old companies, where the growth rates at best will be 10, 15%, whereas here it is like 70, 80%. So that's a matter of choice. This is what I'm saying, but somebody else will have some other view. Right. But clearly, consumption companies, if yesterday it was worth 100, today it is worth 105. That's what market is saying.
And another way of playing consumption is also via autos and some of the consumer finance companies.
Yes.
Would you bet on any of those as well, or maybe you will look at just some of these new age consumer-focused, tech-focused consumer companies itself?
No, I mean, see, I don't manage money, so of course managers will go deeper into the thing and they'll talk to the companies, and just that little provision has come in the budget. It doesn't mean much overnight. I mean, Monday, a lot of things will get equalized or things like that. But I mean, individual companies are very important. So and there is going to be a lot of second-tier effect. Like the entire tax benefit is not going to flow into just the consumption companies. That in fact, the capital markets can benefit significantly because there are a lot of people who are well off, say about 25 lakhs and all. They're not constrained by the income for the consumption. The incremental a lakh rupee comes to them. That a significant portion might come to the capital market. So we'll further examine. Right now we are just in the in the mood to react to what is given. Just that there is no negative and positive tailwind is there for consumption, auto or things like that. So that's how market is sentimentally moving that side, because there is no seller there. There is only buyer. On the capex side, there is no buyer. There are only sellers. That's what is reflecting right now in the market.
All right.
The real rational movements will start happening next year.
And okay, no, absolutely. You said that your fund managers will speak with companies and figure out exactly what is going on. Just you may want to listen in, Ramdev, to this next conversation, because it's a space where a lot of the fund managers, your fund managers, have been bullish as well. EMS, right? And Dixon is the leader. We have Saurabh Gupta, CFO at Dixon, joining us. The Dixon stock saw almost about a 1,500 rupee swoon. It sold off very aggressively, and then it basically came up very sharply. Saurabh, good to have you with us here. The basic custom duty on open cells has been sort of brought down. Whereas as far as flat panels are concerned, the customs duty has been taken up. This is at the margin. How does this affect you, Saurabh?
Yeah, so definitely interactive flat panel display, the duty going up from 10 to 20% is a big positive for us, because we have been manufacturing this for last 1 year. So this will trigger more domestic manufacturing, and we manufacture for some of the marquee brands. And this is a good industry. So we think this is a major positive for us.
How major you think, Saurabh? Can you any way to kind of quantify this? How much was coming in, and how much of that import will now become unattractive?
So my sense is this is broadly a 5,000 to 6,000 crore industry in India, and large part of it was service to imports. We also had a small revenues coming in last year, but definitely this would now trigger a large part of import substitution, and we should have a decent portion of our revenues in the next 1 year should start coming from this category.
Mr. Gupta, afternoon. Any other measures that have been announced in the budget which impact you? And if yes, if you could explain?
Yeah, so duty has also been cut on some of the mobile parts. We are also examining it, but that is also a big positive, because if India has to be competitive and industry has to be competitive as far as exports are concerned, because we're already exporting some of the duties, high import duties that was levied on mobile phones. So that is a big positive, especially when we have all the brands with us on the Android ecosystem, and we are already exporting for some of the brands. So this is also add to the competitiveness of our industry and for us.
All right, so sort of just net, we want to understand, going by the kind of volatility that we saw in the stock price today, you're not seeing any negatives in this budget for Dixon. In fact, every statement that you've made it's positive, right?
It's positive, and this 12 lakh relief also is a big positive for us, because demand lately has been slightly subdued. I think so this would really trigger that positive sentiment and demand
in India. And that open cell bit, Saurabh, that is also something.
That is also positive, because the parts of open cell, especially for the TV parts, so we also manufacture, do the display assembly for mobiles, IT hardware, and hopefully in TV we had thought in future. So if the parts come at a lower duty, that also is a positive for us.
Right. And what about capacity? I mean, for the incremental demand that you foresee coming in on account of import substitution, do you have the capacity for the same?
Yeah, we already have a capacity for this, especially for this interactive flat panel display. We already have a capacity in our Tirupati plant. And for the display assembly, we are setting up a unit in Noida, which hopefully should be commencing operations by Q2 of next financial year.
Just for better understanding, what proportion of your revenue comes in from a product like this?
So as of now, it's a small revenue. It's around 200 to 300 odd crore revenues. But clearly, we see that the industry potential is almost 6,000-7,000 odd crores. And large part of it was service to imports. Now it will really trigger that domestic manufacturing, like the way a 20% duty on all the other products have triggered domestic manufacturing. Now the same thing will apply to IFPDs as well.
And at peak capacity, what is it that you can do from this product itself? Currently, it's 200 crores. You have capacity headroom. How much can you do?
My sense is we should be targeting somewhere around, at least in the first year, somewhere around 800 to 1,000 odd crores, if not more.
Okay, and the thing, as you said, the other one is, of course, the personal income tax cut. Phone sales has been very sluggish for the last at least 6 months, if not more. We were talking with Ramdevji on the other side. I think he's still with us, and he was saying, I'm wondering where will people spend this 60,000, 70,000 rupees So phones definitely is one area as well. Saurabh, thank you very much for joining us. Quick reaction there. Ramdevji, if you're there, if you heard the Dixon management, any thoughts here?
Yeah. I think he was the guy to talk about Dixon. I mean, I think, see, what is happening is market is in too much of a hurry. So you saw the cut, I mean, stock slumped and again came back all the way. I think even markets, the moment fiscal deficit number came to about 4.4, markets sold off.
Yeah.
And then slowly it is recovering to when the thinking is happening that this is actually a positive thing rather than negative, crowding out will not be there. So I think by evening when everything is thought out, I hope there is not much of, between the lines, there are not too many negatives. I would think that market will recover and then it will go back to its own momentum in terms of whatever is happening globally.
Now, Ramdevji, from market perspective, they had two asks. One was that the RBI goes ahead and loosens some liquidity and hopefully they've done some bit of it and next week we see a follow-up. And the other one was that the capex spend continues.
Yes.
You've given this budget 10 on 10, 100 on 100 cent marks, so to say it. But don't you think that that little bit of a capital expenditure push is missing and that would have been actually the cherry on the cake?
Actually in capital, see, right now what has happened in the actual, they have not been able to execute what was projected. Say it was projected for 24-25 to be, say, 11.2 lakhs. They are barely able to do 10.1 and I'll be surprised if they finish even 10.1. Because most of the momentum has started only in December. So you are left with only just about 2.5-3 months. So my sense is that they may not be able to even complete the actual what they are talking about. Because it has to be a cash accounting, isn't it? You have to actually execute and pay. So even if government wants and orders are not given on time, which is slipped because of the elections and all, so the next year, again to, make a comeback and spend more than 10-15% would be very tough. So they are being very practical at about 11.2 lakh crores next year's execution. And if they execute full 11.2 next year, I think the momentum in capex would broadly be maintained. And if by chance economy actually recovers to 7-7.5%, they will have enough margin in terms of tax collection. Tax bonds should be very good, and hence they can, in the second round, they can further allocate for the capex. But I think the intent is very clear that they'll keep pushing the capex in various segments.
Ramdevji, just one quick thing. I know you don't manage money directly, but you have a defense fund. Defense stocks are all selling off, 4-5%.
Yeah.
Any feedback you've got from your team?
Yeah. No, I mean, Prashant, I mean, I'm just in the studio itself.
Okay.
And see, those guys are also talking to them, understanding. It is very difficult to develop anything. And in any case, it's an excess fund in the sense that it's an index fund. So they have to allocate whatever the index composition is saying. So per se, in passive funds, you don't have any option but to allocate the way index is designed.
Right.
So, to that extent, active manager doesn't have much role to play out there.
Right. We request you to stay with us, Ramdevji. The interesting thing about the way these stocks are moving also is that there's no counterparty today. It's a Saturday, right? So no FIIs. And a lot of these FNO stocks, which had been beaten down, are seeing big spikes. Trent, for instance, is up 8%. DMart, you're talking about that stock, is hit the temporary freeze at a 10% up move.
Oh, wow.
We're seeing big traction on Zomato, up 7.5%. AB Fashion and Retail up nearly 4-5% as well. You were speaking about ITC, how there has been no tinkering with tobacco taxes. That stock is up just around 3.5-4% in context of the way the market is right now. Look at something like Godfrey Phillips. That too is up close to around 13.5%. So it's a big move that we're seeing in a lot of these stocks. How much of that is, because of the impact of no counterparty right now? How much of that is on account of the impact of...
Mangalam, but to be fair, the counterparty usually is on the sell side.
Yes.
So they are there.
So which is why the exaggerated up move, right? That's the exaggerated up move.
So you're saying they're up?
There is no
The big
seller is away, and there is, the FNO impact as well. But
we're seeing some big moves even in the textile, footwear, leather-related names. Look at a Mirza International. We've practically forgotten about that stock. That's up close to about 20-odd%.
So
Campus Activewear. That's another one, as the government spoke about it, right?
They spoke about it. There are two parts to this. One, these sectors, these stocks were beaten down. Secondly, while they're focusing on exports, also remember the rupee is closer to 86.5, right?
That's a tailwind.
So that's a big tailwind coming in for all these exporters. And again, the lack of any counterparty out here as well. So we'll keep an eye out on all of these stocks. But we do have Sandeep Bhatia, who's the MD Head Equity India, Macquarie, joining us now. Sandeep, how would you rate this budget? Point number one. Secondly, the capex versus consumption debate. Does it shift towards consumption from here on in terms of allocation?
Well, I think it should definitely shift to consumption, and there's no reason for it not to be. I've said this on your channel before the budget was presented, that we need a tax cut up to 12 lakhs of income, and the finance minister delivered exactly on that. So what do I say? I think it meets the prescribed cure for the economy, and to that extent, it's a good job done.
Sandeep, I remember you saying in the morning that Maruti would be a stock to look at if the government chooses to prioritize consumption, which they have. And Maruti is a stock which is up 5.5% because small car sales have been lagging, and that could get a boost. So tell us, the stocks that have, swum into your ken because of the announcements that we've heard in the budget, particularly on the consumption front.
So the entire consumer sector has been a laggard. And again, just for the sake of a proper disclosure, that doesn't mean that one budget will change the entire story of consumption in India. But yes, it's a good 1 trillion rupee or $11.5 billion tax break, which comes to every taxpayer every year, year after year. And therefore, it is a meaningful tax break. Therefore, all the consumption stocks are going to go up, and that's what's happened today. But we should also remember that finally it's earnings that matter. I think the large cap consumption stocks have suffered. Volume growth is in very low single digits, if at all. And these competitive issues or these demand issues, until they are resolved, will these stocks remain expensive. So despite today's movements, and anyway, I think as all the anchors have been discussing, we don't have a fully functional market. On the other side, we don't have the other institutional players, which are the foreigners. We will definitely see more supply of stock come through when the market is fully open on Monday. Okay. So some kind of rationality will come in stock prices then.
Okay, all right. Hi, Sandeep. Always good to speak to you. I recall the last time we chatted, you said that the quick commerce space could have a big potential, but you're fairly cautious on this space. Now these stocks have come off, from the top. You have this bit of a booster shot as well that's coming in there. Still cautious. Zomato now is one of the top gainers as we speak on high volumes as well.
See, today's movement is not a benchmark to change anything on any sector or stock. Okay, I think all of us know that. People still ask these questions because that makes good headlines. But I think the whole market is expensive. The whole market needs to correct. I've been saying that multiple times whenever I come on the channel. I continue to reiterate that the market needs a correction. But in the near term, let me tell you, I also expect a rate cut on Feb 7. So I think we have to see some positive news on the economy. Yeah. The tax cut has happened, the rate cut will happen. So yeah, in the near term, the market will show some strength, which is fine.
No, absolutely. I was actually going to ask Ramdevji that rate cut. Next is North Block is done. Main Street is next. Ramdevji, 7th of Feb, next Friday. Yeah. So what is your sense of
the it's very crucial.
Yeah,
not only the
if you'll get you get more measures, you get a rate cut, you get guidance of maybe a little bit more. We're presuming, but if that were to come, where does that place the market according to you?
See, market, nobody knows, even I don't know what it will do in next 15 days, 20 days, because there's so many players. The foreigners are very large chunk for the short-term trade. So I wouldn't know how they will react. There is a global allocations and things like that. But as far as our economic performance is concerned, I think the demand, aggregate demand is dependent on the credit flow. So the credit flow has slowed down to more like 9-10%, 10.5%. That must go to 15-16%. And when that will take some time. So I'm sure the economic activity will also take some time. So it might take 2 quarters, 3 quarters before that pickup happens. But the turnaround in the credit cycle, that year-on-year growth from 10% goes to 11, 12, 13, that's what I expect. And that's what even the governor should be indicating in their next policy meetings and things like that.
So yeah, near term is okay. Just let me put it another way, and we'll ask Sandeep this as well. And I think Hirenvid is also joining us. So Monday morning we come back, Ramdevji, and say we got this weekend tariff risk also, right? Trump's, maybe we wake up to 10%, 20%, we don't know, tariffs. So is that, will there be collateral damage in that sense? Or what's your sense?
See, Monday is Monday. We are in Saturday today. Whatever was the activity today, we have taken care of that. Monday will its own balance sheet of activities, whether it's Mr. Trump, whether FIIs, interest rates. I mean, then it takes over, you know. So today's job is like which way the wind is blowing. Today, wind is blowing towards consumption. That's what has happened. And I think market in next 1 hour should take a call.
Ramdev is the bull. He's given 10 on 10 and he's saying Monday ke baad Monday dekhe.
By the way, he's sounding like a full philosopher. And you're saying Saturday hai. And by the way,
philosopher ne abhi kya kar sakte ho? Matlab, you know, Prime Minister ने सवेरे बोला कि लक्ष्मी जी के आपके पास आशीर्वाद रहेगा middle income group के ऊपर, and that's what she has showered.
Oh, she has absolutely. Thank you very much for your time, though. Appreciate it very much here. And Mangalam and Nigel, you guys always make the point about Fridays and Saturdays and
Saturday and Sunday.
And beverage stocks.
I have,
Radico has moved up 9%.
I have to get Varun beverages actually.
Actually, Rima, I just want, I think we need to check out if there is something that's come on the telecom space, because as we speak, we just entered the studio around 20 minutes or so ago. Idea is a stock that's locked in upper circuit. I think it's up close to around 10% as we speak. And Industars is the other one as well. So both those two stocks, I don't know whether we have got any kind of details with regard to a potential relief or something that the street wants to read with regard to that. But both these two stocks, they are firing away, both of them at the high point of the day as we speak. So we'll wait by Rima as well as, just checking up. And I think our ticker team as well will try to alert with regard to that. Both those
Bharti is not moving. So usually Industars moves when Bharti does because the fortunes are linked. But Bharti Airtel as a stock, if you're looking at pure telecom industry, Bharti is up close to about 0.5%. But yeah, there has been a little bit of an uptick. So we'll try and find out if there was anything in the budget.
All right. Well, let's welcome Hiren Ved onto the show as well. Hi, Hiren. Good afternoon and good to have you in. Well, the markets have been seesawing in today's trading session, trying to, analyze this budget. Some would argue that maybe, in fact, we required a bit of a more, push with regard to the capex, while others are quite happy with regard to the consumption boost that we've got. How do you rate this budget?
I think it's a very balanced budget. I think what was lagging was consumption, and I think by giving a tax cut, you've given a push to a part of the economy which was struggling. I also believe that people are not thinking through as far as the capex number is concerned. So I think, on day one, whatever hits you on the face, people tend to react, instinctively. But let me give you some sense on the capex itself, right? So they're budgeted for 11.1. They finally revised that to 10.2.
Yes.
We have the numbers from April to December. The December number was a big number, 1.7 lakh crores, right? If you take April to December, then you have essentially 3.4 lakh crores to cover in Jan, Feb and March of this year, and 11.2 lakh crores in all of next year, which means you have to spend 14.6 trillion rupees in the next 15 months. To give you context, the first 9 months, the average monthly run rate was 76,000 crores of capex. If I now take 14.6 lakh crores, then the average monthly run rate for the next 15 months is going to be 97,000 crores. I don't think people are thinking. In no 15-month period have we seen a spending of 15.6 trillion rupees, right? Now, this is obviously assuming that whatever numbers they have given, they are to execute. But if you purely look at the math,
we request you to just hold on to your thoughts for a minute. We do have our colleague Parikshit, who's in conversation with the Commerce and Industry Minister Piyush Goyal. So you might want to listen into this, and thereafter we'll hear your thoughts once again.
Right, joining us right now is Commerce Minister Piyush Goyal to speak to us about Union Budget 2025, the big push for supporting the middle class, startups and the manufacturing sector. Mr. Goyal, how do you think this budget fares in terms of giving more consumption power back to the middle class? Because that had been a pain point over the last few quarters.
Well, it's a very transformational budget. It's balanced. Continuity is evident in the budget, but very strategic in its outlook. It has planned a vision very holistically. Now, the benefits given to the middle class. It straightaway results in money in the pocket of the middle class. India has a very rapidly growing middle class with 25 crore poor having come out of multidimensional poverty. You are rapidly seeing more and more people with increasing incomes. Their disposable income becomes much bigger, savings of up to ₹1 lakh for all those who are earning up to 25 lakh rupees. And for those who are in a job at 12,75,000 rupees salary, you have zero income tax. I think it's a very, very big message that so far the government had focused on investment-led growth. Now we will have investment-led and consumption-led growth, which is how developed economies of the world have been created. So it's the right pathway to a developed India.
Sir, there was a concern about India's growth going forward, whether there are structural problems. The CA has said that the growth in this fiscal could be between 6.4 to 6.8%. What is your view on what this budget will now do for growth revival for FY25 and FY26?
My sense is this budget and the number of elements it touches, whether it's MSMEs, whether it's farmers, whether it's the youth for creating more job opportunities, our startups, creating the right infrastructure mix, monetizing 10 lakh crores worth of assets for reinvestment into the economy, focusing on ease of doing business, the Jan Vishwas Bill 2 also coming in now, working with the states.
मिशन को ड्राइव करने वाला है। ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा। मैं वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम को इस जनता जनार्दन का बजट, पीपल्स का बजट, इसके लिए बहुत बहुत बधाई देता हूं। साथियों, आमतौर पर बजट का फोकस इस बात पर रहता है कि सरकार का खजाना कैसे भरेगा, लेकिन ये बजट उससे बिल्कुल उल्टा है। लेकिन ये बजट देश के नागरिकों की जेब कैसे भरेगी, देश के नागरिकों की बचत कैसे बढ़ेगी और देश के नागरिक विकास के भागीदार कैसे बनेंगे, ये बजट इसकी एक बहुत मजबूत नींव रखता है। साथियों, इस बजट में रिफॉर्म की दिशा में महत्वपूर्ण कदम उठाए गए हैं। न्यूक्लियर एनर्जी में प्राइवेट सेक्टर को बढ़ावा देने का निर्णय बहुत ही ऐतिहासिक है। ये आने वाले समय में सिविल न्यूक्लियर एनर्जी का बड़ा योगदान देश के विकास में सुनिश्चित करेगा। बजट में रोजगार के सभी क्षेत्रों को हर प्रकार से प्राथमिकता दी गई है। लेकिन मैं दो चीजों पर ध्यान आकर्षित करना चाहूंगा। उन रिफॉर्म्स की मैं चर्चा करना चाहूंगा जो आने वाले समय में बहुत बड़ा परिवर्तन लाने वाले हैं। एक, इंफ्रास्ट्रक्चर स्टेटस देने के कारण भारत में बड़े शिप्स के निर्माण को बढ़ावा मिलेगा, आत्मनिर्भर भारत अभियान को गति मिलेगी। और हम सब जानते हैं कि शिप बिल्डिंग ये सर्वाधिक रोजगार देने वाला क्षेत्र है। उसी प्रकार से देश में टूरिज्म के लिए बहुत संभावना है। महत्वपूर्ण 50 टूरिस्ट डेस्टिनेशन, वहां पर जो होटल्स बनाएंगे, उस होटल को पहली बार इंफ्रास्ट्रक्चर के दायरे में लाकर टूरिज्म पर बहुत बल दिया है। इससे हॉस्पिटैलिटी सेक्टर को, जो रोजगार का बहुत बड़ा क्षेत्र है, और टूरिज्म, जो रोजगार का सबसे बड़ा क्षेत्र है, एक प्रकार से चारों तरफ रोजगार के अवसर पैदा करने वाला एक क्षेत्र को ऊर्जा देने वाला काम करेगा। आज देश विकास भी, विरासत भी, इस मंत्र को लेकर चल रहा है। इस बजट में भी इसके लिए भी बहुत महत्वपूर्ण और ठोस कदम उठाए गए हैं। 1 करोड़ पांडुलिपियों के लिए, संरक्षण के लिए, मैन्युस्क्रिप्ट के लिए ज्ञान भारतम मिशन लॉन्च किया गया है। साथ ही भारतीय ज्ञान परंपरा से प्रेरित एक नेशनल डिजिटल रिपोजिटरी बनाई जाएगी। यानी टेक्नोलॉजी का भरपूर उपयोग किया जाएगा और हमारा जो परंपरागत ज्ञान है, उसमें से अमृत निचोड़ने का भी काम होगा। साथियों, बजट में किसानों के लिए जो घोषणा हुई है, वो कृषि क्षेत्र और समूची ग्रामीण अर्थव्यवस्था में नई क्रांति का आधार बनेगी। पीएम धन धान्य कृषि योजना के तहत 100 जिलों में सिंचाई और इंफ्रास्ट्रक्चर का डेवलपमेंट होगा। किसान क्रेडिट कार्ड की लिमिट 5 लाख तक होने से उन्हें ज्यादा मदद मिलेगी। साथियों, अब इस बजट में 12 लाख रुपए तक की आय को टैक्स से मुक्त कर दिया गया है। सभी आय वर्ग के लोगों के लिए टैक्स में भी कमी की गई है। इसका बहुत बड़ा फायदा हमारे मिडिल क्लास को, नौकरी पेशे करने वाले जिनकी आय बंधी हुई है, ऐसे लोगों को, मिडिल क्लास को इससे बहुत बड़ा लाभ होने वाला है। उसी प्रकार से जो नए नए प्रोफेशन में आए हैं, जिनको नए नए जॉब मिले हैं, इनकम टैक्स की ये मुक्ति उनके लिए एक बहुत बड़ा अवसर बन जाएगी। साथियों, इस बजट में मैन्युफैक्चरिंग पर 360 डिग्री फोकस है, ताकि एंटरप्रेन्योर्स को, एमएसएमईज को, छोटे उद्यमियों को मजबूती मिले और नई जॉब पैदा हो। नेशनल मैन्युफैक्चरिंग मिशन से लेकर क्लीन टेक, लेदर, फुटवियर, टॉय इंडस्ट्री जैसे अनेक सेक्टर्स को विशेष समर्थन दिया गया है। लक्ष्य साफ है कि भारतीय प्रोडक्ट्स ग्लोबल मार्केट में अपनी चमक बिखेर सके। साथियों, राज्यों में इन्वेस्टमेंट का एक वाइब्रेंट कॉम्पिटिटिव माहौल बने, इस पर बजट में विशेष जोर दिया गया है। एमएसएमईज और स्टार्टअप के लिए क्रेडिट गारंटी को 2 गुना करने की घोषणा भी हुई है। देश के एससी, एसटी और महिला जो नए उद्यमी बनना चाहते हैं, उनको 2 करोड़ रुपए तक के लोन की योजना भी लाई गई है, और वो भी बिना गारंटी। इस बजट में न्यू एज इकोनॉमी को ध्यान में रखते हुए गीग वर्कर्स के लिए बहुत बड़ी घोषणा की गई है। पहली बार गिग वर्कर्स का ई श्रम पोर्टल पर रजिस्ट्रेशन किया जाएगा। इसके बाद इन साथियों को स्वास्थ्य सेवा और दूसरी सोशल सिक्योरिटी स्कीम्स का लाभ मिलेगा। ये डिग्निटी ऑफ लेबर, इसके प्रति, श्रम एव जयते के प्रति सरकार के कमिटमेंट को दर्शाता है। रेगुलेटरी रिफॉर्म से लेकर फाइनेंशियल रिफॉर्म्स, जन विश्वास 2.0 जैसे कदमों से मिनिमम गवर्नमेंट और ट्रस्ट बेस्ड गवर्नेंस के हमारे कमिटमेंट को और बल मिलेगा। साथियों, ये बजट न केवल देश की वर्तमान आवश्यकताओं को ध्यान में रखता है, बल्कि हमें भविष्य की तैयारी करने में भी मदद करता है। स्टार्टअप के लिए डीप टेक फंड, जियोस्पेशियल मिशन और न्यूक्लियर एनर्जी मिशन ऐसे ही महत्वपूर्ण कदम है। मैं सभी देशवासियों को एक बार फिर इस ऐतिहासिक पीपल्स बजट की बधाई देता हूं और फिर एक बार वित्त मंत्री जी को भी बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
All right. Well, that's our Prime Minister Narendra Modi seems pretty pleased with the budget that was just announced. Well, let's take a couple of other pointers that the street has been debating about, and that's the insurance stocks. They've been all over the place. To help us out with, the first take with regard to the insurance companies, we have Ms. Vibha, the CEO of HDFC Life, who joins us on the show. Hi, Vibha. Good afternoon and good to see you, and thanks a lot for joining in. Well, one factor is been on with regard to the changes in taxation, particularly for the new structure, and the other one is on ULIP. Let's take the first point first. Since there will be some kind of leeway given, particularly on the new structure, the fear is that it could result in fewer people taking insurance, and in that regard, hitting your volumes. What do you have to say with regard to that?
Couple of points here, and thank you for having me on this show. The first point is it's widely available data that almost 70% of taxpayers have moved to the new tax regime. That is the first data point. Second data point is with our own policy holders, less than 2%, our analysis shows that less than 2% are dependent on tax, or tax being a reason for them possibly buying life insurance. So really a non-material number, and even that would reduce as we go along. So we have moved a long way from a tax being the reason. This might have been certainly the case a decade ago, but now given innovation in the sector and many other products and emphasis on more and more of protection, I think at least certainly for HDFC Life, but I think even broader for the sector, just given the number of people who moved away into the new tax regime, I don't think that is really a dampener in any form or shape.
Well, that's heartening to hear, actually, Vibha, not just from a market perspective or from a policy perspective, but people are taking insurance because of, for the core interest with regard to insurance, not because of, tax exemptions. Yeah, Prashant.
No, Vibha, hi, afternoon, Prashant here. So you're saying that 2% of just, 80C roughly contributes about 2% of the new individual premium. That's what you're saying?
80C is overcrowded, as you know, Prashant. There are many, many things, and if you're salaried, in all probability, when we do an income proxy, we know that even if they did not buy life insurance, their contribution to Provident Fund, other things, ELSs and so on, would have consumed or utilized 80C anyway. So that was not the primary reason or the reason at all for them buying life insurance.
The other change was this redemption of unit-linked schemes, right? And there, for a brief period, there was a misunderstanding. There was a little bit of fear that maybe, it's being taxed at capital gains. But then clarity, Yash told us that it was being added to your income tax, charged at the marginal rate. Now, actually, it is going to be taxed at 12.5%, which is the capital gains tax. Is that the correct interpretation?
Yeah, absolutely. And actually, it's significantly better. So let me just deconstruct, the somewhat of a misunderstanding in terms of what was intended. First of all, the language, and I'm just referring to the language mentioned by the FM. is bringing clarity in income on redemption. So it was to bring clarity and not to introduce anything new, anything that was significantly adverse. Now, post 2021, 1st of February 2021, there was a cap of 250,000, and anything above 250,000 annual premium was taxed, and it was taxed as and continues to be taxed as capital gains tax. Up to 250,000 was tax-free. Now, before the policies that were sold before 1st of February 2021, if they were, if they adhered to certain conditions, for example, number of times of the ratio of premium to sum assured, then it was completely tax-free, regardless of the quantum. However, there were some other policies that didn't satisfy this multiple of sum assured, and they were being then taxed and continuing to be taxed until today at the highest marginal tax rate. So all that the provisions now unveiled are going to do is to simplify it, to say that anything that is not compliant will now be taxed under capital gains tax, instead of all this hybrid of earlier was a marginal tax rate and so on. That's all there is to it.
Okay.
And just to add on that, if you were to look at, say, hypothetically, if I had bought a policy before February 21 and say I had only a 6 times sum assured, then that would have not been even then eligible for under Section 1010D. And so I would have been paying at highest marginal tax rate. So if a taxpayer has been paying or would have paid a maturity proceeds at 30% tax, now it will be at a capital gains tax rate at 12.5% tax. So actually there is a benefit for those policyholders that would have bought their policies before 21.
Okay. Ma'am, the third important announcement from the insurance sector is opening up the sector to 100% FDI. Will it impact listed players like you, one? And two, how does this change the competitive dynamics? Would some of the unlisted players now get that 100% FDI and therefore become a lot more competitive and aggressive?
While I welcome 100% in insurance, being pragmatic, even when it went up to 74%, it's not like there was a lot of money flow. What could happen is there could be some foreign insurers or foreign investors for whom it's either 100% or it is zero. It could attract people like that, or if they want full control and don't want a partner, say if their brand presence as an insurer somewhere else is extremely strong. But barring that, will it make a huge change in dynamic to the competitive intensity? I don't think so. I think what is really important is some sort of regulatory certainty. I think that is the biggest aspect that will attract flows into the, why only insurance sector, but any sector really. And that's really what could be a game changer in terms of certainty on regulatory outlook.
All right. Thanks a lot, ma'am, for joining in and giving us all your views on the space, assuaging some of the fears that the street had with regards to shift into the new tax regime and that impacting business for you as well. But, meanwhile, while this conversation was on, there was a lot of fear in the jewelry space that will there be any increase in customs duty for gold once again or not? There has been a notification, but there is clarity as well that there is no specific change coming in for gems and jewelry sector. The new tariff line that has been introduced is largely to differentiate between gold, which is imported in bar forms, and the other forms. Most of the gold imported in the country right now is in bar forms, but increasingly there was some platinum alloys, etc., that were being imported as well. And that had an impact on the overall equilibrium of the market. Okay. So this tariff is on the non-bar gold import, which is not a big portion of this business as well. So on account of that uncertainty, we had seen a big dip on names like Titan and Kalyan Jewelers. We'll just keep an eye out on that. The clarification that has come, there is no specific change for gems and jewelry sector when it comes to this business itself. But Hiren Ved is still with us. Hiren, thank you for waiting patiently, hearing out all the conversations that we've been having on the channel so far. But you were making a point on capex that the street may have been overreacting to this less allocation towards capex. You complete that point, and a word on consumption stocks from here on as well.
Yeah, so just to complete the capex point, right? I mean, as I mentioned, if you look at the data for the first 9 months, the actual numbers that have been spent gives you a run rate of about 76,000 crores a month. They now have put that by March end, they will spend 10.2 as opposed to 11.1, which means that you have another 3.4 lakh crores for this 3 months and a total of 11.2 lakh crores for the rest of the 12 months.
Yes.
Which means that in the next 15 months, you will have to spend at the run rate of 97,000 crores a month, as opposed to 75,000 crores that you spent in the first 9 months of this year. That is actually a 30% increase, right? But as I said, people tend to react very spontaneously. Very clearly, the big delta of this budget is the push given to consumption, and therefore it's very apparent in the consumer stocks. And I believe that rightly so, most of them have been bid up. But even there, I think that to the point that, Sandeep also made, is that substantially going to change the volume growth for the FMCG companies? We have to wait and see. But clearly from a sentiment perspective and the fact that the biggest needle has moved in terms of consumption, we are seeing a significant rally in consumer stocks as well.
Okay, got that, Hiren. Thanks a lot for joining, Hiren, and giving us your initial take with regard to the budget. But Sandeep, before we let you go, one final question to you. I recall when we chatted the last time around, you were not ruling out further downside. Maybe a 10% correction is something that we could be bracing for. We almost got that, and we have bounced back in the last few sessions. What do you think? Budget is already done now. I mean, most of it is done. That we'll have the RBI. Hopefully, they inject some liquidity. But on ground, sentiment is still a little bit subdued. Earnings really haven't picked up. So what's your take for the remainder of this year with regard to the Nifty's moves? All right, Sandeep, I think you're on mute. We'll just try to... Yeah, Sandeep, you're on mute. If you could unmute yourself. Yeah, please go ahead, Sandeep.
So remainder of the year is some time away, but we are on 1st Feb today. I think in the near term, the market will have some legs and strength. I do expect a rate cut. I do expect, liquidity injection to happen, and all that should be good news for the market in the near term. The earnings picture is not going to be as buoyant as the policy announcements and the rate cuts that I'm expecting. And around the earnings season, again, there could be weakness. That's what I expect. I think the real turning point for this market is how the meeting with President Trump and PM Modi goes in February at the White House, and if India can continue to work, which I do expect with the US, and that will be good news for the markets, and that would be a more longer-term positive picture. But in the near term, earnings will continue, and lack of earnings will put pressure on the market, and that remains unchanged.
I mean, that's interesting. That meeting, the stakes are rising. Prime Minister Modi and Donald Trump, and what can come out of it, some sort of an agreement. I mean, it's certainly a break from the past. Which way is the break going to be is the question. Sandeep, thank you very much for staying with us and, of course, taking all those questions. And we look forward to our next conversation. Thank you. We'll take a quick commercial break here. We'll come back. Nilesh Shah of Envision comes back. You heard from him pre-budget. So he'll give you his take on what we've seen. And we'll also have Shardul Shroff joining in. And that is going to be a broader conversation on what Mr. Shroff has made of the budget. Stay tuned, coming back.
Credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global.
Welcome back. Absolutely unchanged on the benchmark indices, but railway stocks are tumbling hard and fast. Ircon down 8%, RVNL, IRFC, Jupiter Wagons seeing cuts anywhere between 6 to 8%. And these are stocks which have fallen 30 to 50% from their 52-week highs in the last couple of months. That said, stocks like RVNL have gone up 1,000% in the last 3 years. They've had a massive run up. They've undergoing profit booking. And in the budget, there is no increase in the railway capex for FY26. And that has disappointed the street. For defense, there has been an increase. But for railway capex, it's absolutely unchanged. And the street is a bit disappointed. As we said, the stocks have had a big run up. RVNL, for instance, is up 1,100,000 or 1,100% in the last 3 years. Nilesh Shah, MD and CEO of Envision Capital, is now with us on the show. Nilesh, thank you for joining in. So outside of the big thrust in consumption, tell us, are there any other portfolio plays that you would recommend post the budget?
So, well, apart from consumption, I clearly believe there's one sector for which budget has been positive is the insurance sector. And I say this because first, of course, is the overall FDI limit has been raised to 100%. Which was widely expected, but nevertheless, that gets confirmed. So that's, I think, a key proposal. The other thing going positive for the insurance sector is that given that the tax exemption limit has been raised for the middle class, the post-tax take-home or the post-tax disposable income goes up. That gives them a lot more leeway to spend on healthcare. And within healthcare, clearly health insurance is a priority. So clearly believe that outside the core consumption space, the discretionary consumption space, I think one sector which benefits trade because of this clearly is the insurance space. I think there's a lot for the sector there.
Now for you to increase your allocation to insurance, if you have a medium to long-term view?
Yeah, I clearly think it should be part of it. And we've essentially been liking more the insurance distributor, the insurance platform company, and not the standalone insurance companies. But maybe with these developments, we'd probably take a hard look at some of the standalone insurers, especially the health insurers. That space is interesting. Some of them have essentially kind of been very aggressive in the underwriting, realizing mistakes. There has been a course correction. In some cases, stock prices have also corrected sharply. So clearly, I think we remain constructive. So maybe it's time for us now to start looking at standalone health insurance companies as well.
There's Star Health and others as well. We have Mr. Shardul Shroff as well, Executive Chairman of Shardul Amarshal Mangaldas and Company. Mr. Shroff, good afternoon. Thank you very much for joining us on this important day. What are the key points? I mean, there's of course the personal income taxation, but from a corporate perspective, we heard a lot of stuff on focusing on ease of doing business, etc. What are the top 2 or 3 things which really will make an impact? Maybe not on day one, but which you think are meaningful?
I think the fact that ultimately the income above 24 lakhs will get uniformly taxed at 30%, and that has an impact on the consumption budget and the capital budget for the middle income group. Now, as far as the corporates go, clearly two things which matter are the new Income Tax Act, which is expected in the next week. That's what she said in her budget speech. And she has also indicated that the Income Tax Act would be reduced to half its current form. Now, this is an interesting development because you're having a significant change in the law. I hope they don't bring in new stuff, because I've been just reading her speech and there is a lot to be said in relation to the speech. I understand that there's a changed definition of capital asset for the purposes of capital gains. I'll have to pay focus to that. And the other change which is happening is going to be the decriminalization of laws. About 120 laws still need to be decriminalized. And that is something which you will see in the context of how the law is simplified. This budget is a budget which has a simplification as a norm. And besides the Income Tax Act and besides the decriminalization, I think the compliance aspect for small charitable institutions, the fact that ease of doing business has been made part of the budget, the fact that the laws which have become obsolete and which some years ago the government had scrapped by a single bill, all these changes will have an impact on the corporates.
No, absolutely. Mr. Shroff, quick comment today, but I think you'll come back for a more extensive chat over the coming days as we sort of go through and pour over the budget. But for now, let me cut across to my colleague Shireen, who's in conversation with Mr. Hardeep Singh Puri, the Petroleum Minister. Shireen, over to you.
Well, thanks very much, guys. Yes, joining us now live and exclusive here on CNBC TV18, the Oil and Gas Minister, Mr. Hardeep Singh Puri. Mr. Puri, many thanks for joining us here. As I've been pointing out, Mr. Puri, it's been a focus on... We'll just get him in a second. But of course, as far as the oil and gas sector in specific is concerned, you can see the oil marketing companies under pressure. And that is largely on account of the fact that LPG under recoveries have not been factored in. So that has not been allocated. And that is what we will seek more clarity on. But that's the impact as far as the OMCs are concerned. That is the call there for the oil marketing companies on the under recovery side. But, stocks like RVNL, etc., also under pressure. And that's largely RailTel, largely on account of the fact that it's pretty much status quo as far as the railway capex is concerned. And overall, the capex is at about 11.21 lakh crore rupees. Prashant, we'll come back to Mr. Puri as we get him to join us. But for now, I'll hand it back to you.
I think, Shireen, just one point that you'd like to make. Mangalam just made that point with regard to clarification on gold. And, Titan was the stock that had taken a hard knock. Kalyan Jewellers as well as taken a hard knock. And Mangalam essentially said there's no big change. Just take a look at those stocks. In the last 10 minutes or so, both of them have seen a big recovery from the lows of the day. I think Titan was down close to around 3% or thereabouts. That's recovered. And Kalyan Jewellers, I think Mangalam was down 4% odd. So big recovery. The sheet is taking note of that clarification.
Yeah, this market currently has been a trader's paradise. If you look at the way the stocks have moved, we earlier saw the way the reaction was on Dixon Tech. Yes. There was, Vodafone Idea, all of them surging, and thereafter they've been sold into as well.
Insurance today.
Insurance as well. All of them. It's been all over the place. So similar is the case that has taken place on, the jewelry space as well. The street was looking at, a proposed increase in the alloys of gold. Anything which has less than 99% pure gold or silver will be they will be a tariff of 10% imposed on that. That was mainly to differentiate or put in at par the gold alloy imports versus gold bar imports. Gold bar imports, there was always a certain duty, and as a result of there being no duty on alloys, there was this arbitrage that was playing on, and now that there has been just normalized, so nothing specifically changes for these companies. And after that big decline, we've seen a recovery, subsequent recovery as well.
Absolutely. I think, markets all told with about, 15, 20 minutes to go are just about 15 odd points lower, right? I mean, that's essentially the story by close. And it's been true for the last 2-3 budgets now. The close has been absolutely inconsequential. Flattish has been the close. I think we can toss it back to Shireen. She's got Mr. BVR Subramaniam, Chief Executive Officer, Niti Aayog. Shireen?
That is right, Mr. Subramaniam. Many thanks for joining us here on CNBC TV18. To start with, what the budget delivers on in terms of growth, what are the big takeaways that you read into as far as the budget is concerned?
Okay, I've been hearing a lot of comments on the budget since morning. First of all, it's an outstanding budget. It supports growth. It will accelerate growth. It addresses all the choke points or all the bottlenecks which will hinder growth. But one point I think a lot of people are missing. If you see the fine print, the GDP of India next year crosses $4 trillion. It's 357 lakh crores. That translates to $4.1 trillion. The budget has been a very finely balanced act. They've addressed both the consumption side as well as the supply side. And I think that's remarkable. And all that has been done when there has been fiscal compression, both on fiscal deficit and also some tax giveaways to the middle class. When about 2.5 lakh crores is the compression that has been done in terms of either less revenues or cutting the fiscal deficit. So I think we must actually compliment the finance ministry, the finance minister, and the team working with her to produce a budget like this. If you want, let me just tell you what the macro picture is. It's a very simple budget. About 50 lakh crores is the expenditure, 35 lakh crores is the revenues, and 15 lakh crores is the deficit. That's 4.4%. She's cut the fiscal deficit from 4.8 to 4.4%. I think it's a solid signal to the external world that India is for fiscal prudence, India is for fiscal stability, and I think it's an excellent signal to the global investor community that while we promote development, we promote growth, and we are going to invest for the future, we will also manage our fisc very, very efficiently, prudently. And the big thing is, this is a budget for Vikasit Bharat. First thing, this budget has to be actually read along with the previous budget. We must understand these two budgets have come with a gap of 6 months. So I think that budget addressed some issues like skilling, employment. I think that was the big focus. If you look at this budget, the big focus here is 2 or 3 things which are very, very apparent. Number one is manufacturing. I mean, it's out there, up there, a national manufacturing mission, an export promotion mission. There's some things which he didn't speak, but you need to read the print and see the schemes. There is one for industrial parks. There is one for industrial housing. There are a whole host of things there. So I think manufacturing and exports is one big leg of the mission. The second one is actually agriculture. India, a lot of people don't realize, has actually more agricultural land under cultivation than any other country in the world, including the United States. And she said that very correctly. India can be the food basket of the world. And I think there's a lot of stuff there to support. I think she mentioned they've drawn inspiration from the Aspirational Districts program, 100 districts for one program, 100 districts for the other program. And I think that's a big, big takeaway. The third thing, and which is again something which people don't think about very quickly, it's the focus on cities and urban. I mean, that's almost 8 or 10 paragraphs in a speech only on cities and urban. Now, if that is not infrastructure, what it is? It is also infrastructure. And in cities, they're putting aside a 1 lakh crore urban growth challenge fund. I mean, that is for cities as growth hubs. This is not metros. This is for other infrastructure which cities need. And I think this is something which is going to be a very, very big landmark initiative. The other thing, which I don't know how many people are noticing it, the mention of a nuclear mission, a nuclear power mission, and 2 commitments to amend the Atomic Energy Act and to amend the Civil Nuclear Liability Act. This and the boost in budget to the Science and Technology Department. It's about 25,000 crores, which is going for science and technology. That's larger than the increase in allocations for many other areas. So I think these are 4 or 5 big areas in which the budget is actually focusing on. And on the supply side, one thing, the investment in human beings, I think that's big. Education, healthcare, women, children. I think there's a huge increase. If you look at this whole as a group, it's about a 45,000 crore increased allocation for all these put together. I mean, this is investment in people because they're all part of the supply chain. The demographic dividend, if it has to be exploited, if that has to be taken advantage of, you need to invest in people. And 47 looks far away. But for the child being born today,
That child is going to be the workforce of 2047. I think that investment is going in.
One of the other aspects of this budget, sir, has been a lot of focus on getting the centre and the states to work together, whether it is to do with the identification of those 50 tourist destinations where the government believes that the centre and the state should partner and work together, or on many of the other aspects that the government has also spoken on, including putting out a competitive index of states and how they are performing in the context of ease of doing business and deregulation, something that we've seen previously as well. On this center-state compact, how far does the budget take us and how effective do you believe it's likely to be in moving the needle?
I think there is a huge amount of work. I mean, if India has to be Viksit Bharat, then I said this is a budget for Viksit Bharat. There has to be lifting jointly both by the center and states. And if you see, the Urban Challenge Fund, the monies have to be spent by states, which means they have to actually come up with proposals, and the government will match it. They've said they'll give a 25% grant, and they're pushing states towards PPP and private participation. They said almost 50% of that has to come from banks, bonds, or PPP. There's the other one, the one on a couple of other missions which are there. The one on agriculture, the two missions there depend totally on state governments. The one on industrial parks, again, industrial parks have to come from state. There is one on industrial housing, again, it has to come from state. So there are a large number of initiatives there which are actually funding states, apart from the 1.5 lakh crores, which is for the long-term capex loans. This requires states to get their act going. And I think NITI also will have a role there in actually helping states projectize ideas and bringing them so that they can be funded by various ministries. So I think the center-state compact is coming through very, very strongly. Apart from, I mean, the total devolution going to states in this particular budget is about 25 lakh crores, of which only 15 lakh crores is actually Finance Commission related grant. The other 10 lakh crores is central or centrally sponsored scheme related transfers. All these require states to also get their act going. Even on the reform side, there is this mention of this committee, a high-powered committee on regulatory reforms. There's a clear mention there that the states will also have to be brought on board. I think this also has to be read with the economic survey which was produced yesterday by the CA. The clear mention, let's get government out of the way. I think that's the message there. And when we talk of government there, it is not just central government. I guess 80% of that is state government. Land, labor, electricity, utilities, water supply, roads, they're all state issues, state subjects. So I think this budget not only moves the needle forward on things like manufacturing, agriculture, etc., it also brings to the forefront that center and state has to work together, and they're putting the money to actually enable states to do what is required to be done. This is on the growth side. I'd also like to mention one thing on the tax side. This is actually addressing, if you've been reading the media for the last couple of months, general talk about, it's on the demand side, there's a lack of consumption demand, etc. I mean, putting 1 lakh crores into people's pockets, and the middle class actually have a very high propensity to spend. This money is not going to go into bank accounts or, or fixed deposit. It's going to circulate in the economy. And it'll also have a huge multiplier effect. So I actually see this addressing one major side of the demand equation. Similarly, I think the capex, I mean, it's remarkable that while there's this fiscal compression, 1 lakh crores given away in taxes, 1.5 lakh crores compression as far as fiscal deficit is concerned, you're still able to keep your capex. It's 3.1%, as good as it can be, and you also incentivize the states the 1.5 lakh crore thing. And other thing is, she didn't mention it in her budget, but you need to read the numbers. I mean, the investment in railways is being maintained. The investment in roads is being maintained. And you see the additional focus now on cities, which is also infrastructure. We don't forget that, we tend to forget that cities are as important as railways and roads. And I think this is the future. We are rapidly urbanizing, and the budget is investing in high quality urbanization.
High quality urbanization, consumption, and of course growth. The budget ticks all boxes. It's an outstanding budget. Those are the words of the NITI Aayog CEO BVR Subramaniam, and also lays down a framework for a deeper center-state compact. Mr. Subramaniam, always a pleasure. Appreciate you joining us here on a big day on CNBC TV18. Thanks very much for your insights and for your opinion this afternoon. Well, we're almost getting to the point of the market close. Prashant, Nigel Mangalam, back to you.
All right, Shireen, thank you very much for that. That's a very interesting conversation there. Markets are down 30 points. There is about, I think, 13 minutes to go as far as closing is concerned. I mean, the trends largely hold. Maybe there is a bit of moderation which has happened in prices, but it's largely consumption. And Mangalam Trend, Maruti, Tata Consumer, Eicher, Bajaj, ITC, Mahindra, Asian Paints, there is not one single infra type name there on the gaining side.
Take that point, and it's been a long time since these names were gaining as well, right? So their time, perhaps, as they say in the movies, apna time aa gaya for the consumption stocks itself. And while we speak about consumption, low-ticket urban, mass consumption itself, some of the urban mass premium consumption is doing as well too. If you're earning more than 25 lakh rupees and you're saving 1.1 lakh rupees on a annual basis on your taxes, what are you buying? Are you looking to buy some luxury watches? Look at Ethos. That stock too has been down in the doldrums from the highs and now suddenly up around 10% So not only are you eating pizzas, a 9% up move is what we're seeing on Ethos as well.
Real estate is the other sector which is doing very well. The real estate index is up more than 3%. Macrotech 6.5%, Prestige up 5%, Parsvanatha, Sobha, DLF all gaining up. So
I don't know if you save more than you drink more also, because you have United Spirits, United Breweries, both of them at the high point of the day, Mangalam. So
urban consumption, all of that doing extremely well. So what we'll do is, while all these consumption-related names are doing well, you're watching us here on CNBC TV18, but not only on the television. CNBC TV18 is the #1 business news outlet on YouTube as well, the most viewed channel on budget day among the English business news outlets. CNBC TV18 clocked more than 3.3 lakh concurrent views on YouTube. This is nearly 3 times more than our nearest competitor. CNBC TV18 remains your budget headquarters for the last 25 years. And for that, we have no one but you to thank. All you viewers, thank you for your continued support, not only on television, but on digital, and as we speak, on YouTube as well.
Over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, Deshamante matti kadoy, Deshamante manushuloy, meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive healthcare, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas, focusing on Garib, youth, Annadata, and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy, and innovation, securing energy supplies, promoting exports, and nurturing innovation. For this journey of development, our 4 powerful engines are agriculture, MSME, investments, and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
Five, four, three, two, one.
Okay, no big change on the market screen, just 40 points lower on a 23,000 near 500 kind of index. So gains largely intact, which the market has accumulated from the lows that we've seen last Monday. So this is, of course, just a couple of minutes to go before we wrap up things this Saturday afternoon. Shardul Shroff, of course, has been very patiently waiting by. Shardul, I trust you heard the Niti Aayog CEO speak with my colleague Shireen. And very interesting, forceful remarks. I mean, this is a budget for Viksit Bharat. But, that is one. But the other thing is, there was some, at the margin, not widespread, but some fear, especially after the economic survey and what we heard from the CA as well, that 7-8 years now, a corporate tax rate went down from 35% to 25%. And there was a table in the economic survey yesterday as well. Job addition has been anemic, absolutely anemic. So, organized, well-paying jobs, I mean. And that maybe the government will do something to correct that. But what they've done is, of course, lower taxes on the personal income tax side.
Correct.
On the corporate side, thankfully, nothing. You think that's an area of focus going forward?
I think the fact that corporate taxes don't go down is the manner in which the deficit is kept, intact. You have the FRBM and you have to maintain the deficit level below 5%. So not decreasing the corporate tax has the benefit of, continuity in terms of taxation. Not reducing the HNI income also has the ability of raising the revenue bucket. And I think all in all, it's a good budget.
Shardul, thank you very much for joining us. Appreciate your time here on CNBC TV18, and we'll speak again. But good conversation after a long time. Prakash is back with us to wrap things up. There's 4 minutes to go for close. Prakash, some of the moves that we're seeing is all local investors, foreigners, of course, absent today, holiday. Some of these moves on consumption, etc., will last. As Mangalam was saying, there's no counterparty in that sense today.
Absolutely. So these are just gimmicky things. You get some names, you want to kind of trade on that, and you made money on both sides today. So even if you sold, you made money. You bought, you made money. A lovely market, but
and at times in the same stock.
Absolutely, and that shows that it's so indecisive. It'll take some time because consumption is not something which will change numbers overnight. So and there's no point buying into the dying moments of the market and say, oh, this is the last day you get to buy. But consumption makes sense. So you could choose so many things out of that because everything is undervalued from a relative perspective.
So if you could, just give 3 stocks after today's budget that people should look at.
So let me give you names, which of course you could do it on Monday, but think about it.
Today.
so I was talking about tourism, medical tourism is trying to make a comeback, and Thomas Cook, for example, is one of the names that tried doing this some years back. People have more money, they'll take tours, travel. You buy Indigo, you buy ancillaries in airlines, you buy an updater services, the gig economy plays kind of support you. All these new airports, 52 new destinations, you'll need people to work and ground services and so many things. So that's the way to look at it. See which pockets of consumption are either too underinvested or underowned, and you'll be able to find a whole list in the value chain. It might not just be just prominent names, but that's what we've been doing. So mining, there's so much being talked about mining. You have AI engineering, Tejo, these are pure mining equipment guys. So, that's where a lot of capex will get directed eventually. So I'm sure we have enough to do, and we'll have to wait for 7th of Feb to really see some decisive moves, but we'll discuss more on Monday.
By the way, Vishal Mega Mart is also one of the consumption plays and affordable consumption plays, and that's up nearly about 7-8%. And NIIT, given the focus on skilling, NIIT Limited has moved up close to about 7%. And Zensar, sort of an unexplained move, but that's up nearly about 10.5%, and pretty good volumes today on that.
Right. So let's, I guess, wrap it up on that.
But I think Prakash put it nicely. Gimmicky. I think that's the word he used, right? And I think that nicely summarizes, at least not all. I mean, there is, of course, a boost. No doubt. It's just positive consumption.
In the long term, it's going to be very favorable. But right now, you just keep throwing some balls
Animal
in there.
spirits are they unleashed?
It's good if it's not only on one day. Let it build up.
No, I'm saying, does the budget unleash the animal spirits?
Not yet. No.
All right. So we'll, let Prakash hold on to his thoughts. Maybe take the Sunday off. Speak on Monday once again, as Ramdev ji said. Monday is Monday.
It's a tamed animal for now.
Unleash himself over the weekend.
Unleash himself over the weekend as well. So, let's wrap it up with the consumption stock doing extremely well. Nothing to show for on the Nifty. Just a 40-point downtick. If you looked at just the open and the close of the market, it wouldn't look like it's the budget day. But if you looked at the consumption stocks, it would look like, okay, apna time aa gaya. Is that how one would summarize the day?
Well, that's right. And if you looked at the railway stocks, you would say it was budget day because nothing came to them. And all those stocks, in fact, they went home with sharp cuts. Aircon was down close to 10%, RBNL down close to around 10%, IRFC as well. And actually, we got used to it in the last few budgets that something will come for the railways. This time around, they missed out, as Manglam said. Consumption was the top gainer. You had some of these economy-facing companies, capex, defense, all of them did sell off in today's trading session.
Just one thing, guys. Mangalam said that this did not look like a budget day. Actually, if you go by the last two budgets, this looked exactly like the budget day on the Nifty. The reason is February 2024, which is before the election, right? The budget Nifty closed down 0.1%.
That was the interim budget.
Final July 2024. Minus 0.1.
Okay, that was the first small budget.
And guess what? The change is 0.06% today. So in that sense, and I mean, go back to 2023 as well, I mean, 0.3% lower. So actually, last three budgets, there's been less than 0.5% change on the day of the budget. And actually, even intraday, the moves, I think today the intraday move is about, I don't know, 1.25%, 1.5%. But otherwise, it's been largely, maybe not even 1.5% today, but it's been very quiet on budget days for the last three, and I think now for the fourth budget as well. So I think we are done for the day. Markets ending slightly lower on a very, very kind of a tentative note, but not very much to take away one way or the other. Consumption, the clear leader, and of course the headline from the budget was the personal income tax cuts. And that too, not without drama, because as the finance minister initially announced that 4.4 fiscal deficit number, markets assumed there's not going to be too much in terms of help on the taxes front. But she saved the best for the last with that personal income tax relief, which is amounting to about 1 lakh crores or so. From all of us here, it's goodbye. Thank you very much for watching. Rima.
Well, and before we go, let's just quickly tell our viewers that CNBC TV18 is the #1 business news outlet, even on YouTube. It's the most watched channel today on Budget Day among all the English business news outlets. So CNBC TV18 has clocked in more than 3.3 lakh concurrent views on YouTube. And this is more than 40 times than our competitor. CNBC TV18 continues to remain your budget headquarters for the last 25 years. And we would like to thank all our viewers for that. Thank you.
Sir, with your permission, I rise to lay on the table a copy in English and Hindi of the Economic Survey 24-25 along with the statistical appendix. Thank you.
The House stands adjourned to meet 1 hour after the presentation of the Union Budget 2025-26 in Lok Sabha on Saturday, February 1, 2025.
For the 8th consecutive time, Finance Minister Nirmala Sitharaman will rise to present the Union Budget in a few hours from now.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. The revised estimate of the fiscal deficit is 4.8% of the GDP.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा।
ये भारत सरकार का बजट है कि बिहार सरकार का बजट है? आपने बिहार के अलावा किसी और प्रदेश का नाम सुना वित्त मंत्री जी के पूरे बजट भाषण में?
The infrastructure is not going for the rest of the country. It's only going towards Bihar because we all know that this year is the Bihar election. So basically, for essence, and Maharashtra has been ignored, and Tamil Nadu, there's not a single word for Tamil Nadu or for any other southern states.
Hello and welcome to this special budget broadcast. This budget puts more money in the hands of the middle class with income tax sweeteners, also stays the course of fiscal consolidation, but only a minor increase in capex outlay. Further, it continues to remain optimistic around divestment, but lowers targets for FY26. I'm Prashant Nair. With me, my colleagues Nigel D'Souza and Mangalam Malu. We're also joined by Amit Jeswani of Stallion Asset Private Limited and Pankaj Tibrewal of Ikagai Asset Managers. Gentlemen, great to have both of you here as well. Nigel and Mangalam, thanks very much for joining in. The story of the day, I think, arguably was FMCG consumption. So, Mangalam, just wrap it up for us. What happened and how did the market take it?
You know, the most important thing that happened in this budget was the income tax cut. And as a result of which, people have more money in their hands, which they're left with after paying lesser taxes as compared to last year. So just to quote the finance minister, no tax incidence on a person earning up to 12 lakh rupees. You save 70,000 rupees every year if you are earning more than 18 lakh rupees. And if you're earning more than 25 lakh rupees, then 1.1 lakh rupees every year is what you save as against the previous tax regime. All of that made all the consumption stocks, specifically the urban consumption stocks, a lot happier. Why is that? Because over the last few quarters, if you've seen, urban consumption has been hitting a bit of a wall. At the same time, that accounts for nearly 65% of FMCG companies' sales. We've heard from all the managements as well. So companies which benefit from a revival in urban consumption sentiment, you had the likes of Jubilant FoodWorks, Zomato, Avenue Supermarts, maybe something like a Trent, etc. All of them doing well as well. From the discretionary side, even from the staple side, the ones who have higher, salience coming in from urban India, the likes of Nestle, which gets nearly 80% of its revenue from urban India, or GCPL, which is about 70%, Britannia, Marico, all of them recovered from lows. So that was a positive. Add to all these things, the fact that these consumption stocks were under pressure for underperforming over the last couple of years, having come back to their 10-year average valuations as well, and with no incremental benefit or incremental growth coming in or attributed towards capex and railway themes, along with defense themes, which have been doing well for the last few years, maybe capital shifts towards the consumption space from here on when it comes to growth from here. So maybe that was the reason. We're going with seize the moment for this budget. Maybe it's time for consumer stocks to go ahead and seize the moment.
Okay, all right, Mangalam, thanks a lot for that. Well, let's welcome our guest, Pankaj, as well as Amit. Thanks, gentlemen, for joining in. Pankaj, let's come across to you first. I think you were hinting to be in the camp that wanted a bit of a capex push. Now we've got a consumption push and maybe a pretty decent capex outlay as well, though I think most on the street wanted a little bit more on that front. Your reading of the budget, and would you jump more into some consumption-related names now?
Good afternoon, Nigel. Our sense is that we went into the budget with very low expectation. We means the market. And there were concerns that there could be some tinkering with the capital gains tax, how the fiscal number maths will add up to. I think the FM has done an excellent job, if you ask me, in managing growth along with fiscal. And the maths we were looking at behind the fiscal and the assumption on taxation seems to be very realistic. So our sense is that there is an impetus towards growth, but this time it's from investment-led to capex, consumption-led. And I think it's very important to take directions from the government. If you remember, Government 1.0 pre-COVID, I think it was all about consumers, middle class, MSME, exports. Post-COVID, the government direction right from day one was manufacturing, infra-led growth, PLI, and government gave a huge push towards it, where 3 lakh crores became 11.5 lakh crores. Now, since June 24, we have started to see indication that this term of the government could be all about the welfare of the schemes back again. And first you saw the 12 states announcing some welfare schemes to the tune of 3 lakh crores, followed by this significant concession of 1 lakh crores in the hands of people. And if it is followed by interest rate cut, most probably in the 6th Feb credit policy, it would clearly show that government first wants to bring growth this time through consumption, which has been beaten down for the last 4 or 5 years.
And I think
market is clearly showing that maybe too early to take that call.
Right.
But I think normally these things starts to build in over a period.
And I think
my only sense is that when I look at the portfolios across the board, largely it's consumption, infra-led right now across the portfolios, because the last 4 years, the investment theme has done so well. Most of the portfolios are tilted across the board towards defense, railways, capital goods. And if that continues from a consumption perspective, I think people will have to make that shift. And that shift was clearly reflected today in the market. Maybe next few weeks and months will suggest us whether it was an inflection point and there is a theme change which is happening. I believe it could be that you could be back from value to growth again, and growth this time in consumption, not infra.
Okay, all right. You've been, over the last couple of months, we've chatted, Pankaj, talked about QSR and a few consumption names yourself. So we'll come back on specifics, more specifics in a bit. Amit, your sense for the first time in many quarters, you turned a little cautious. Does today's budget change anything? Pankaj used the word, we'll find out in hindsight whether this was a bit of an inflection point for consumption names. What did you make of it?
Prashant, it was a super budget. Like it was a time had come in markets where only 10 stocks were growing. Like if there are 100 stocks across consumer, paints, autos, etc. Point had come that only 10, 15 stocks were growing and the rest 80, 90 stocks were not growing well. And too much capital was chasing those 10 stocks. And we were also doing the same thing, to be honest. But that worked very well for us in 2024 and 2025. Of course, money left those stocks because money just wanted to leave everything, and that trade got a little disturbed. But coming back, this is a super budget. While that 12 lakh is the game changer for consumer stocks, I believe. There is some sentiment change because if you think about it, paints were growing at 0%. FMCG companies, majority of them were growing near 0%. Even the best retailers were not growing more than 20% in the country. So this is a pivot point where the capex on infra, etc., is the growth of capital outlay is now near 0% YOY. So market chases growth, and markets will keep finding newer places of growth. And looks like consumer after 2-3 years will make a comeback. It will not just be the top 10 companies. I think the entire basket, because the valuation is now not as expensive as it used to be. So hopefully we will make money on both sides. The good part, the companies who are executing in bad times will execute even better in good times, and the companies who are not executing in the good times, the bad times, will have a cyclical kind of recovery of valuation and earnings coming in. So let's see. I'm optimistic. We've had a rough January, but I think February has started on a super rocking note.
All right, February started on a super rocking note. The good part is that February started on Saturday itself. The markets were trading. We'll keep an eye out on how it pans out, when full volumes come by on Monday as well. But consumption wasn't the only thing that we were looking at in this budget itself. It was, the insurance space as well. If you look at the finance minister, she brought cheer to the insurance space as well with an announcement of hiking the FDI into the sector. But at the same time, there were worries about insurance seeing lack of growth because people opted for the new income tax as well because of the relief that came in from the finance minister on the income tax too. Yash joins in to tell us what the insurance sector takeaways from this budget have been. Yash.
Well, Mangalam, three most important takeaways. The first one, as you started with, increasing the FDI, the foreign direct investment limit in the sector, taking it to its optimum point of 100% from the current 74%. The last time when it was raised from 49 to 74, it got very little attention from foreign players in terms of bringing in the capital. But the regulator, the government, was confident that if a complete autonomy is given to foreign players, where they decide how much capital, the business directions, the policy decisions, then that capital will indeed come in. So increase in FDI was the first one, largely positive for the sector and the unlisted players more than the listed players. The second announcement, which was a dampener and which was largely expected also, was the push which will come from the government side on the new income tax regime. Remember, the new income tax regime does not give you any exemptions like the old one under ATC for life insurance and ATD for health insurance. The government said the big thing, which was essentially no tax for an income of up to 12.75 lakhs if exemption or rebate is taken. And that made the new income tax regime a lot more attractive. The fear is that if people start moving from the old tax regime to the new tax regime, then the purpose of buying insurance for tax saving gets defeated, both life and health insurance. Hence, that was the fear, and the stocks reacted to that particular news. Though HDFC Life on the channel said just 2% of their new business premium comes under ATC. For the sector, it is about 5 to 7%. The third one was taxation on ULIP. So far, ULIP premium of more than 2.5 lakhs, the returns which come in were taxed as other income, which gets computed into your income tax, and accordingly slab-wise you're taxed. But here the government has clarified that now it will be taxed as capital gains tax, which is 12.5%, which will be the lower range of tax as compared to the higher marginal rate under income tax.
Okay, all right. Thanks a lot for that, Yash. Well, Pankaj, does this sector now come under your radar? You know, insurance companies, they were all over the place today. Initially, they saw a big downtick because a lot of people will move to the new tax slab. But then we had clarifications coming in there. Vibha as well of HDFC Life did clarify only 2% to fall under that particular bracket. Your view, Pankaj, on insurance stocks?
So overall, Nigel, I think insurance companies are very well positioned. If you look at insurance, when they do well, whenever the yield curve steepens, and I think that's a time when really the insurance companies does well, because the non-par, the protection, the annuity part, they really make money in that. So my sense is that at lower levels, insurance could be a great opportunity from a 2 to 3 year perspective. And our view is that the yield curve is going to steepen from here on. And on 6th of Feb, if the RBI decides to cut rates and there's some steepening in the yield curve, probably insurance is a great play from overall. And valuations have come off over the last 3 years. Insurance as a sector has not given any return. And these are solid franchises from a medium to long-term perspective. And we ourselves are evaluating both the general as well as the life players in this space.
So Pankaj is having a look at that. Amit, does it come under your radar?
So insurance, we don't have any positions as of now. The growth's not picking up. If you look at the entire pack, the insurance pack, the growth has been mediocre for us to get in. So we've not been, we like the marketplace, the market leader, the marketplace market leader, the bazaar here. But that is also a little expensive, and markets have taken, the last January, we sold out Policy Bazaar way back, but markets are looking at valuations also very aggressively since January. So you cannot just chase growth. You want growth and reasonable prices both going forward in 2025, 2026. So we let's see. You know, we don't have any positions, or we're not even thinking in those lines. Very complex. Life insurance is a very complex business to understand. It is nobody understands embedded value. At least we don't understand embedded value, how to calculate what futures will look like, because you're taking money in now. You're insuring something that will happen 20 years in the future. It's very, very difficult to understand this
stocks
game.
basically.
It's very tough. We don't understand it very well. So we only focus on general insurance. That is easier to understand.
Okay.
But I don't see the growth rates that we need.
Right. Got it. You know, before we wrap, Pankaj, you know, it's based on one event. It's very difficult to change one's view or kind of, you know, suddenly go into something. You know, as a trader, you can do it in and out and all of that stuff. But if the game this time around, the Saransh, as they call it, out of the budget is more money in the hands of the consumer, it's figuring out where that money will go, right? Amit had some ideas. If you had to pick out one space, could it be, from a listed standpoint, we're trying to connect both. More hands in the consumer, which companies, listed space. So what would those be? One or two areas you think? Briefly, Pankaj.
So Prashant, always remember that event could be one-off, but inflection points normally come like this. And if you remember 2021, 22, when we started to get positive on the entire investment theme, we didn't know that in the next 3-4 years, the push from both global and local would be towards investment in terms of PLI, in terms of Make in India and others, and government push. probably would be the time when probably government is indicating to us that the next couple of years could be welfare for the people. So we should not ignore that direction from a portfolio composition and portfolio construction perspective. And coming to consumption, I think it's a broad sector. What we are positive on is the consumer durable segment, home building segment, not so much on FMCG, but retailing, value retailing, and companies which have executed well in the past with a strong brand franchise.
Right.
And don't forget, Prashant, that many B2B businesses today, which lie in the investment theme, are price to vision, not price to perfection also, but price to vision. And there we need to be a little now careful that there could be significant derating if growth is below expectation in terms of order inflow or the government push towards spending.
If it is indeed an inflection point, Pankaj, and I take your point completely. That's why, as they say, investing is simple, but it's not easy, right? I mean, because something has worked for very long. Or if something is changing, it's very difficult to make yourself believe that, well, this is it. But that's essentially what I guess you have to do, and you have to believe as well. Mangal, you want to make a point? Sorry?
No, I was just saying that when he said that, it's not a day that makes the market, or it's a period of time. Maybe this is the time for the consumption stock. So I guess we'll just wrap up on this.
Okay. All right. Well, we'll have to do that then. Thanks a lot, Amit, as well as Pankaj, for joining in. We've completely run out of time. We'll wrap up on this edition. We'll be back with more news and updates on the other side. Don't go anywhere.
Is near a 2-year low. Can the budget unleash measures to fire up the growth engines?
It's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth.
The new boss at Mint Street has unveiled measures to boost liquidity after the deficit hit a 15-year high. With monetary easing expected to begin this month, will the Finance Minister announce fiscal measures to bolster growth?
System liquidity is still tight and there is deficit. The system needs more liquidity.
Liquidity is very low at this point, as you know, negative, 2.5 lakh or so.
Artificial intelligence has taken stock markets by storm.
How do we make AI all pervasive?
Powered by AI. AI first.
Artificial intelligence.
Ready for AI. AI is providing some cushion to that.
But as the correction set in, investors are largely hoping for a status quo on taxes to stem the current downtrend. Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV18 Motilal Oswal Budget Headquarters.
Well, here's a fallout of the DeepSeek phenomena. The Indian IT Minister Ashwini Vaishnav making the big announcement that the Chinese large language open source model DeepSeek will be brought to Indian servers, will be brought to Indian shores so that it becomes available to Indian users. Sounds simple? Well, not quite. A lot of jargon there. What does it actually mean? Let's help you break this down to understand what really has transpired with this announcement being coming from Ashwini Vaishnav. Now, let's assume, and I'll explain that with the help of an analogy, the analogy of the humble tea, the common denominator between 2.8 billion Indian and Chinese. Now, for example, let's assume that DeepSeek is this Chinese tea in this cup of tea. Now, what's important is that this is an open source AI model. What that effectively means is that the core code, which is the heart of the model, which is the recipe of the Chinese tea, is publicly available. So what the Indian government is proposing is that we'll use this recipe of the Chinese tea and replicate it here on Indian shores, on Indian servers, and have exactly the same model here present in India for Indian users. But that's not all.
let's bear in mind, we like our masala chai, like most things in life, we like a little tadka in our life. So we'll add a little input to this. We'll add some components. We'll add some sugar. We like some sugar in our tea. We'll definitely add some ginger. We like ginger as well. And let's not forget the milk in the Indian tea. And having done that,
All right, joining us right now is Commerce Minister Piyush Goyal to speak to us about Union Budget 2025, the big push to supporting the middle class, startups, and the manufacturing sector. Mr. Goyal, how do you think this budget fares in terms of giving more consumption power back to the middle class? Because that had been a pain point over the last few quarters.
Well, it's a very transformational budget. It's balanced. Continuity is evident in the budget, but very strategic in its outlook. It has planned a vision very holistically. Now, the benefits given to the middle class. It straightaway results in money in the pocket of the middle class. India has a very rapidly growing middle class with 25 crore poor having come out of multidimensional poverty. You are rapidly seeing more and more people with increasing incomes. Their disposable income becomes much bigger, savings of up to ₹1 lakh for all those who are earning up to 25 lakh rupees. And for those who are in a job at 12,75,000 rupees salary, you have zero income tax. I think it's a very, very big message that so far the government had focused on investment-led growth. Now we will have investment-led and consumption-led growth, which is how developed economies of the world have been created. So it's the right pathway to a developed India.
Sir, there was a concern about India's growth going forward, whether there are structural problems. The CA has said that the growth in this fiscal could be between 6.4 to 6.8%. What is your view on what this budget will now do for growth revival for FY25 and FY26?
My sense is this budget and the number of elements it touches, whether it's MSMEs, whether it's farmers, whether it's the youth for creating more job opportunities, our startups, creating the right infrastructure mix, monetizing 10 lakh crores worth of assets for reinvestment into the economy, focusing on ease of doing business, the Jan Vishwas Bill 2 also coming in now, working with the states to get ease of doing business at the state level activated and incentivizing them, focusing on tourism. Now, tourism we all recognize is one of the largest job creators. When she has looked at the minute detail in which she has gone. 50 destinations chosen through a challenge route. But within that, not only will infrastructure be created, marketing will be done. You'll even look at simple things like hygiene and sanitation. Udan supplements tourism. 4 crore more tourists or travelers with 120 new destinations. So that many more airports getting activated, making it easier to reach the destination. Hotels being provided land at affordable prices so that hotels remain affordable. Homestays being given mudra loans now. I can clearly see in this Honorable Prime Minister Narendra Modi's way of working. He always thinks very comprehensively. He always thinks out of the box. And actually this budget has to be read in its entirety to understand the interlinkages, how he has connected the dots to prepare India for developed and prosperous future.
I want to speak about the focus on labor-intensive sectors such as leather and footwear. What is the kind of schemes or the policy contours that we are going to now see for support for these sectors? And do you think this is being done with the China Plus One opportunity in mind?
Well, Prime Minister Narendra Modi has always believed in the capabilities of our MSMEs. And it is not only toys and leather. Toys and leather are clearly focus areas where we have a huge amount of success story in our last few years. But he has overall given the MSME sector a big thrust. He has increased the mudra loan limits. He has increased the limits of the very definition of MSME. We are finding that the credit guarantees will be given for term loans, for modernization of these MSMEs. Exporters will be given a thrust with easier finance available. there's a focus on food processing. In a way, when demand gets a boost, particularly through the benefits given to the middle class and greater disposable incomes, when our farmers' income increases, whether it's the focus on increasing their production or productivity, cotton, pulses, even look at the detailing. Makhana is a very nutritious and high demand product. Potential is huge. The farmers who are making makhana, when their product gets processed into a packaged branded product, its value transforms itself. Just like we are seeing in tea, in coffee. Coffee, our exports went up to over $1 billion this year. So his whole idea is how farmers' income can be increased, how middle class can be getting a more disposable income, how the youth of the country can engage with technology, better skill sets. It's an effort to reach out to 140 crore Indians. Nobody should be left behind, is the mantra that Prime Minister Modi follows.
When it comes to duty, sir, we've got the new administration in the US and they have threatened tariffs. They started with, of course, Canada and Mexico. They will go to China, and the feeling is they will impose tariffs on India as well. How are you gearing up, and how is that budget? How is this budget making India tariff ready?
Please don't go by feelings expressed by a few people. We have the courage of conviction that our friendship, our relationship with the United States is time-tested. Prime Minister Narendra Modi and President Trump share very deep bonds of friendship. He knows that India is a trusted partner of the United States of America. At the same time, we are wanting to work even closer with the United States of America to expand our relationship, whether it's on bringing back illegal immigrants, whether it's on making sure that American goods get a fair tariff regime in India, which does not hurt their business interests, and simultaneously India
stakeholders and interest of education and health has been prioritized. When we're talking about education, from a child in a daycare center, portion for women, lactating mothers, till the level of getting skilling done, and also for artificial intelligence and digital reading material for students and in school and colleges. Every aspect of education and bringing in that dimension which is so critical for health. Daycare, cancer centers, and making sure more medical seats are available. These are kind of things with which I'm trying to highlight. The approach in this budget has been pointed on areas which definitely need immediate intervention, outlays, and action along with the states. So Vikasit Bharat is not just being described. I've given you also what we mean by Vikasit Bharat, or what is it that we expect to achieve for Vikasit Bharat. So this budget actually has given you several things on which you can understand how this economy is being planned to take forward a route towards Vikasit Bharat. Secretaries have joined me. All of them would also come in to explain or answer and give clarity and so on. But one thing which I certainly would like to highlight is responding to the voice of the people, which is what Prime Minister Modi is known for in his administration. It's a very responsive government. And as a result, the income tax simplification, which I announced in July, is already completed in its works, and we shall bring the bill in the next week. So the income tax simplification, about which in July budget I have gone in detail to say, the work is completed within 6 months is what I said. Within 6 months, we've brought the bill. It'll be coming into the parliament next week. So if we are talking of reform, inclusive of taxation, the work is done. This budget also speaks about rationalization in customs. Tariffs are being brought down, tariffs are being simplified, and also the basket which consisted of so many different tariffs for so many different commodities are now reduced. 8 were taken off earlier, 8 has been taken off now. So whatever remains now, 7 I think remains, and that is all about India's tariff picture. So the usual narrative which goes on saying, is India being too heavy on tariffs? No, you find that we've drastically reduced and also simplified. So this budget has so many things for all of us to talk about. The more important thing about agriculture, which performed very well during COVID and which has contributed to India's food security. The proposals which are mentioned in this budget actually talk about everything to do with beads to bazaar, literally from the stage of seeds, hybrid seeds, resilient, climate resilient seeds, seeds which can give greater output, seeds which are going to be high yielding, all this together to the final point of India becoming the world's food basket. That's the definition I put in when I was talking about Vikasit Bharat. So we are making sure that India's agriculture gets the support across the board, whether it is on seeds, whether it is for skilling the farmers, whether it is rural prosperity, whether it is going to have agriculture and allied industries being set up in rural areas, and whether it is going to be farmers getting better and more loan with interest subvention, not just farmers, fishermen, and also dairy, meaning animal husbandry. So the picture for rural development and the picture for supporting agriculture is across the board, and that has been narrated. The second thing which I would want to highlight is the continued emphasis that we're giving since vote on account budget, July budget, and now on the MSMEs, whether it is giving them sovereign guaranteed loan, whether it is support during COVID, whether the definition being changed now for better, more inclusive growth in MSMEs, access to bank credit. So MSMEs have also been given greater emphasis. Together with this, I'd like to highlight the point that energy security has had greater attention in this budget. We've highlighted in July budget how even pump storage will have greater attention. Solar and wind and renewable energy has also been taking consistently good importance in our budgets. This time we are talking about the small modular reactors. I've also announced that there shall be 2 amendments, one to the Atomic Energy Act and the other one for the civil liability. All of this is going to help us attain energy security. Insurance sector's FDI limits have been enhanced. That is another important announcement. I'll end my opening statement with 2 things. There is no reduction in the public spending on capital expenditure. Let's put that up front. We continue to place emphasis on the multiplier effect that capital expenditure done by government has shown, has sustained us. We continue on that. And with all this, our fiscal prudence has aligned itself to the glide path that we announced in 2020-21. So we've kept ourselves in alignment. Fiscal prudence has been maintained. And the next year, coming years, estimate is also been given. Well under 4.5 is what we had said earlier. We are also projecting the same. So this is just as an opening statement. There's a lot more to say, but as you all ask questions, so shall we answer. Thank you.
Thank you, ma'am. 225. 225. Mic, please.
Ma'am, this is Shrimi Chaudhary from NDTV Profit. I just wanted to understand, ma'am, here. Ma'am, you said the new income tax bill will come next week. Will that be in the form of draft, and where you are also going to take stakeholder comments on that?
Yes, as a bill, any bill goes to the standing committee, and the standing committee will, of course, consult with so many stakeholders. And then it will come back to us, and if necessary, any more amendments, if need to be brought in, we'll bring it in and take it forward in the House.
So do we expect implementation in this in the fiscal year in FY26?
Do you expect what?
Do we expect the implementation of?
Well, let it get passed. I hope it will get passed without much of a difficulty, but it is only after its passing.
Sure. Thank you.
35. Front.
Ma'am, Timsi Jaipuria, this side from CNBC TV18. As you said, this is a very responsive government, which is why government decided to give these tax rebates. But given the structure that you have announced, ma'am, up to 12 lakh is the rebate. Any reason why this rebate has been hiked from 7 to 12 lakh? Is it that the incomes or salaries were not growing up to the mark, which is why government thought that this rebate needs to be given? And also, how do you make up for this 1 lakh crore of revenue loss? Will it not impact the budget estimates? Where will you get this money from?
Tipsy, I think the first question is, you said that this, when the incomes are not growing, this is an income tax. Only when there is an income, then we are talking of the tax. So income has to grow to the level to discuss about the tax. Now, why from 7 to 12 lakh? It is something like, it was earlier 2.2 lakhs. When 2014, it became 2.5 lakh, nobody is going to pay tax. Then there was a 2019 that, we said 5 lakhs, nobody is going to pay tax. Then we said it was raised to 7 lakhs. And now it's being raised to 12 lakhs. So this is a perception that the government feels that, on the average 1 lakh per month, if you have, then you need not pay tax, which means that, we are doing it in two ways. One is we are reducing the slab rates. We are expanding the slabs. If you would have noticed, the slabs are now 0 to 4, 4 to the uniform slabs, and there is a gradualism. There was a thing when we had earlier 20%, then it was jumping to 30%. Now it is 20, we have introduced 25 also. So it's the gradual thing which has been done. Now this benefits every one of the taxpayers, because whatever benefits which has come from the slabs gets transmitted across. So therefore everyone gets a benefit. Now the second part, FM decided that, well, some people should get a little more benefit than merely slab rate reduction would have given. And so therefore an extra rebate. So slab rate reduction for everyone, and extra rebate for 7 lakhs were already getting it, not 7 to 5 lakhs more people have been added. So this is the philosophy behind it. And as you said, why you do it, I think we expect that all that money which they gave, it comes back to the economy in either consumption, savings, or investments, in whatever way they choose to do.
I just want to add to that. If you compare what we've done today with what prevailed in 2014 under the Congress government, what we are, most often the narrative is we should put money back in the hands of the people. I want to please give this comparison for your consideration. If you compare it with the 2014 tax rates under the Congress, for somebody who's earning 8 lakhs, nearly 1 lakh more money is in their pockets today because of the amendments that we brought in. Meaning, 1 lakh income tax in 2014 is 0 income tax now. So that money is going back to the people in their hands for those who are earning 8 lakhs. For those earning 12 lakhs, 2 lakh was the income tax in 2014 versus today 0, which is proposed. Meaning nearly 2 lakh more money in the pockets of people who are earning 12 lakh. All right, did I stop it there? As Finance Secretary rightly said, across the board, everybody is getting benefit because the rates have also been brought down. Not just the rebates being given to up to 12 lakhs. Rates for everybody is being brought down. As a result, take somebody who earns 24 lakhs in a year. The income tax on them in 2014 was 5.6 lakhs, 2014. For them, now it is only 3 lakhs. The rate change has benefited somebody who earns 24 lakh as well. So 2.6 lakh rupees more in the pocket of people who are earning 24 lakh. So it is not just those who are up to 12 lakh because they are not paying any tax at all, because rebate is given to make up for the tax amount which they have to pay. It is not just up to 12 lakh. Even for others, benefit is accruing, and compared to what it was in 14, that much amount of money is going back to those respective money earners. Just compare it with 24 tax rates, which is prevailing now and what is being proposed. I would like to draw the comparison. 8 lakh people, meaning those who are earning 8 lakhs. 30,000 rupees more is being put back into their pockets, meaning they would be paying 30,000 in the prevailing tax, 8 lakh salaried wale. Now they pay 0 in the new proposal. Similarly, 12 lakh salary or income wale would have 80,000 rupees tax to pay in the current prevailing taxation rates. They would have 80,000 rupees now go back to their pockets. They don't have to pay that tax. Go to the 24 lakh and compare with the present rates. Present prevailing rate, they have to pay 4.1 lakh rupees as tax. We are saying now they will have 1.10 lakh in their pockets, which they don't have to pay as tax. So we have put good substantial amounts into the pockets of people who deserve to get that. And I would want that to be highlighted compared to what prevailed in 14 and what prevails just this year.
3. Yeah, 3 number.
Ma'am, many congratulations. Something that has been quoted to you as well as the Prime Minister and yesterday the Chief Economic Advisor hinted, in terms of disinvestment and where you should not get into, government. You yourself have been talking from 2020, 21, and subsequently, government should be in less spaces. Has it been a strategy? Because I know you're committed to it, but last budget you didn't refer to it. This budget you have not referred to it. The target still remains there. Is there any impetus that you're going to do towards what has already been announced by the budget? For example, bank privatization of banks and others. That's one. And the second because that was unanswered, you're making it simpler, the income tax, and bringing a thing. Does this mean that you can now not necessarily all the time you can do it through a schedule or an executive order if you want to give some relief to a common man in the new income tax bill that you bring in?
No, giving relief any time will have to go to the parliament, because if we are giving fiscal relief to people, it has to have approval from the parliament.
So
but what the tax simplification really means is the complication in the language, the circuitous way in which they were explaining things, and adding too many exemptions. You will realize that when we brought in the new tax regime, we didn't want the old tax regime imitated or copied. In that, there are several exemptions given in the old regime. In the new, we didn't want to give any because we wanted a simple, straightforward tax regime in which the rates can be brought down. That's what we've done even now. So the act itself had to be simplified. The attempt now is that.
And on the disinvestment and...
No, all that will continue. There won't be a relenting on any of this.
On disinvestment, if I can add, you see, the last time July also the similar questions were asked. We have actually since then a value creation strategy, which was actually well explained at that time also. There is no disinvestment target per se. Disinvestment and dividend are both looked at together because both are money and money is fungible. And it has got 5 elements. The first element is that we are saying CPSC's performance. The second is we say that we should have communication of performance. The third we say that the capex of the CPSC, which is important, as you know, in terms of accelerating growth. The fourth is the consistent dividend policy. And the fifth is there is a calibrated disinvestment strategy. And the disinvestment also is there. The listing is a part of disinvestment itself. So if you really look at it, both dividend and disinvestment is about 80 to 90,000 crore per annum are being raised, but in a manner which are beneficial to the minority shareholders who are there in all our listed companies.
65, backside.
Good afternoon, ma'am. This is Ruchi Bhatia from Bloomberg News. I have a question for the Revenue Secretary and a question for you. If the Revenue Secretary can give us details on the benefits, the number of people who will benefit from the slab, from the rebates going up from 7 lakhs to 12 lakhs. And the question for you, Madam Finance Minister, a lot of people say that while the absolute number for CAPEX has gone up, the pace of spending has gone down as compared to a few years ago. Is it telling of the institutional capacity in terms of how much CAPEX push can the government really do? And secondly, as far as a lot of analysts do say that the multiplier that CAPEX has is a lot more than the multiplier in the economy than that tax cuts have. What would you, say to like some of those concerns as well?
Well, 1 crore people will not benefit between the 7 lakh and 12 lakhs.
Meaning 1 crore more people will pay no tax. On the CAPEX, I think there are two things playing out. One, of course, this particular year has had the elections happening, and because of that, both central government and state governments were catching up with investments, public spending on investments only from the second and the third quarter, so it showed. It's equally true that when fundamental requirements are taken care of, when you're bringing in additional overhead, there is a pace at which those additions happen. So it's not as if there is no thirst for capital expenditure, but now it'll be at a pace in which you can build on each one of the developments that you've done prior. So it'll continue. There are some departments which will need more. There are others who would probably reach a plateau, but expenditure will have to continue even in them. So the heads where the capital expenditure will happen will vary, but expenditure will happen in building assets.
121.
No, CAPEX is also continuing. I have not foregone CAPEX to give for revenue expenditure or consumption expenditure. So both continue. Ajay.
Look at what the overall numbers are. Even in the coming year, the next year, effective capital expenditure, including what Government of India provides the state for their capital expenditure, is 4.3% of the GDP, one of the highest. It's not just what Government of India departments spend, it is the total money which goes for the capital expenditure. And if you look at that compared with this year's RE, there will be 20% increase. If you look B to B, still there will be a 10% increase. And it is not a capacity issue. It is a new sectors coming up. For example, if you notice, urban sector, the allocations are increasing. That's one area which requires a renewed focus.
121.
On the CAPEX, because this point can come up later also. So one is the CAPEX that we give directly, that is we do a central government directly. Other is that grants that we give to the state governments, for the state governments to do CAPEX, for example, for Pradhan Mantri Gram Sadak Yojana, for example, Pradhan Mantri Awas Yojana, and so on and so forth. So if you also include the grants and aid for creation of capital assets, the total amount has gone up to 15.48 crores in the budget estimate for the next year, which is more than 15% increase over the current year's RE. So that is a substantial increase, whereas you consider that the overall expenditure, that is revenue plus capital, has grown by around 7% in the next financial year as compared to this year's RE. So this is almost twice the aggregate growth in the expenditure.
Yes. I would like to also add that on top of this 15 lakh crore capex, which is 11.2 there, and the extra money which goes into revenue but goes in capital building at the hand of the states, the CPSC, the Central Public Sector Enterprises, add about 4 lakh crore as capex from their own resources. So that's also the capex which goes in, and that is not counted here.
Mike on.
Tarun Sharma from Z Business. मैम मेरे दो सवाल हैं। एक मैम आपने इंश्योरेंस की जो एफडीआई लिमिट है वो 74 से 100% करी है, तो क्या मैम जो इंश्योरेंस अमेंडमेंट बिल था उसकी जो बाकी रिकमेंडेशन है उसको रिजेक्ट किया गया है, सिर्फ इसी को एक्सेप्ट किया है 74 से 100% का? दूसरा मैम मूडीज ने कहा है कि जो पब्लिक डेट है स्टेट और सेंट्रल का वो अभी भी 80% है, इस वजह से हम रेटिंग अपग्रेड इस बजट के अनाउंसमेंट के हिसाब से नहीं कर सकते। तो डू यू थिंक इज देयर कंसर्न फॉर द ऑन द public debt?
Insurance? Yeah. See, now, presently the insurance is 74%. Now, fundamentally, whether it's 74% or 100%, the materially doesn't matter. But what actually matters is the psychological feeling that they can actually own the company 100%. Along with this FDI, we're also going to, FM also announced that we are going to simplify certain procedures and rules that we frame, which are including the key management personnel, person who can be chairman of the company, and person who can be the CEO and board of directors, and also repatriation of dividends. All those are part of this, the proposed reforms that has been announced by the FM today.
And sir, what about the other recommendation on the draft insurance amendment bill? Sir?
That's what we are actually bringing. The draft insurance bill is the one FM has announced, but the main point she has mentioned that 100% FDI, including simplification of existing rules for FDI investors.
The draft bill is also coming.
Is coming.
Yes, and then the public debt, ma'am, on the public.
Serial number 2. Finance Minister has also announced, this answer complete his question, the roadmap for fiscal consolidation by the center. And please have a look at the FRBM statement, which carries the different scenarios. And over a period of next 6 years, how that will be brought down. Similar one, WACT has to be done through the state governments as well. So it is a process which is on.
Number 2. हेलो नमस्कार मैम, मैं आलोक प्रियदर्शी हूँ CNBC आवाज से। मैम मेरा सवाल है कि मिडिल क्लास के लिए काफी बड़ी राहत है, 12 लाख तक जो टैक्स छूट दी गई है। इसमें आपने बजट स्पीच में कहा जो कैपिटल गेन से लोग कमाई करेंगे उसको इसमें शामिल नहीं किया गया, उस पर नॉर्मली टैक्स देना पड़ेगा जो स्लैब के रेट से है। तो ज्यादातर लोग आजकल मार्केट में इन्वेस्ट करते हैं, उनको लॉन्ग टर्म इन्वेस्टमेंट होती है, उनको कैपिटल गेन्स होते हैं कई तरह से, उनको बाहर रखने का, उनको केप्ट असाइड रखने का क्या रीजन है, क्या उसके पीछे वजह बताएं?
मिनिस्टर सेक्रेटरी उसके ऊपर ज्यादा विस्तार से बोलेंगे। बाहर रखने वाली चीज नहीं है, इनकम का कैलकुलेशन कभी भी वैसे ही होता है, उसमें कैपिटल गेन्स का जोड़ते नहीं है। मैं स्पष्टता के लिए उसको जोड़ रखा है उधर सेंटेंस पढ़ने के समय। ये नया मेरा पद्धति नहीं है कि इसको अलग रखो उसको अलग। इनकम कैलकुलेशन इन जनरल is done without the capital gains. You want to explain it, please?
कैपिटल गेन्स टैक्स जो है वो हमेशा से रेट से अलग है, नॉर्मल इनकम से अलग है। यदि नॉर्मल इनकम में होता, शामिल होता, तो यदि 30% के ब्रैकेट में कोई होता तो उसके कैपिटल गेन्स में 30% टैक्स लगता, तो वो क्या मान्य होता? तो कैपिटल गेन्स को एक अलग टैक्स की व्यवस्था की गई है जो कि कम है। वो इसलिए की गई है कि रिस्क उसमें है और उसमें लोग रिटर्न करते हैं कैपिटल मार्केट को बढ़ावा देने के लिए, तो उसमें 12.5% हमने टैक्स लगाया, तो वो एक अलग रखा जाता है। उसमें एक अलग एग्जेम्पशन लिमिट भी है। यदि वो एक साल में कैपिटल गेन्स आपको इज इट 1.25 लाख 1.25 लाख यदि हो तो वो एग्जेम्प्ट भी होता है, तो और यदि शॉर्ट टर्म हो तो वो 20% होता है, तो वो एक व्यवस्था अलग है। और नॉर्मल इनकम की व्यवस्था है जो कि स्लैब रेट और उससे काउंट होती है, तो इसलिए वो अलग ही है। कंफ्यूजन ना हो इसलिए वित्त मंत्री जी ने स्पष्ट उसको कर दिया था स्पीच में, क्योंकि ये कंफ्यूजन की संभावना थी कि सब लोग ये समझेंगे, तो उसको स्पष्ट किया गया।
46 पीछे बैक साइड एक करके। Hello ma'am, Harsh Kumar from Business Standard newspaper. Ma'am, since government has decided to move ahead with a comprehensive asset monetization plan, so what are the new changes from the previous one, and if you can give some broader aspects of it in detail?
See, as we are aware that till the last year, the first program which was launched in 2021 achievements have been of the order of about 90%, which is a good progress. Based on that success is the next leap, almost double the amount which are coming up. And there are newer asset classes will also be come up. For example, transmission assets, and not just of the Government of India. Government of India doesn't own, say, power corporation, power transmission corporation, but state government's assets are also there. So they will do the monetization, and you will hear very soon that entire plan will be out.
Sir, can we, in future, can we get a separate number of asset monetization and disinvestment?
See, this money, what the intent is, there's already an investment or other the assets are there, which may be owned by Government of India, which may be owned by, say, NHAI, or they may be owned by one of the PSUs. They disinvest, not disinvest, they monetize that asset and use that money to build a fresh or a new project and a new asset, plow back that money back into the economy. So these are not necessarily money coming to Consolidated Fund of India. Very rarely the money comes in. NHI doesn't invest, money remains with them, they build another road by using that money.
13. Front.
Hi, ma'am. Good afternoon. I am Kriti. I'm from Informist Media. So right now you just said that your fiscal prudence has finally aligned with your glide path that you had announced in FY21. This year you have given a new roadmap. So mentioned debt to GDP roadmap. You aim to bring down your debt to GDP ratio to 49 to 51% by FY31, considering the nominal GDP would be in the range of 10 to 11. So based on that, and you said that you will peg your fiscal deficit in a way that it goes on to bring down your debt to GDP ratio. So is there a rough estimation of what kind of fiscal deficit you may have by FY31? And secondly, on 31, when you aim to bring down your debt to GDP ratio. Secondly, on funding of fiscal deficit for the next fiscal year, you have brought down the borrowing from small savings from considerably low. It's 16% low from last year. Is there any reason for the limited optimism? Earlier, it used to finance 25% of your deficit. Now it's going to finance 22% of your deficit. So if you could just elaborate on if there is any reason for that. Thank you.
First of all, that what is going to be the fiscal deficit in nth year from now? The path is very clear that debt to GDP ratio will be on a declining path, depending upon what the growth rate in the economies are, what kind of a stimulus measure or further consolidation measures would be needed. And the roadmap does envisages three scenarios: mild, moderate, and high level of consolidation. So do your math there, that the range is coming up. In the best case scenario, the highest growth rate and highest level consolidation can go as low as 47.5%. Very low growth rate, etc., it comes to 52. What the goal is taken is 50 plus minus 1%. And that's showing that physical response to needs of the economy. So that is the goal. But overall trend has to be declining trend. And just see the record. 2021, Finance Minister announced will come down to 4.5 next year. This year we are 4.8, next year is 4.4. So it is a track record. That's what we follow. Your next question?
Small saving, borrowing from small savings.
Here the interest rate, if you notice in the last 2 to 2.5 years, are being set in a manner so that there's neither an incentive nor a disincentive to come to small savings. These are the numbers where we see the trend, and based on the trend we project it. What is being overall is being monitored and watched or said is the overall fiscal deficit, overall borrowings. If more is coming in small savings, less from the market. If less is coming from the small savings, more will be from the market. So our assessment numbers are slightly lesser than this year. And to that extent, market borrowings we have indicated, which will be slightly less than the current year numbers, marginally lower are there. But if there were to be more inflow of small savings, to that extent, market borrowings will go down. And as you are aware, we do set the calendar every half year.
51.
Hi, ma'am. This is Vikas from The Hindu. First of all, you've left us with very few questions after that announcement on the direct taxes front. And you mentioned that there is a 1 lakh crore, revenue foregone from that move, which is obviously going to help boost consumption and demand and private investment in turn. I wanted to get a sense of the mathematics behind the overall fiscal math that we worked out for next year, because despite this tax relief, we are looking at a direct income tax as receipts as a part of gross tax receipts are likely to rise to 33.7% as per the revenue receipts plan, and which is the highest ever, and marks a significant increase over the 24-25 income tax receipts. So I wanted to understand what's what gives, how do you work this out? Because on one hand we are giving away significant relief. Where do we expect the
I
gains
hope
from?
you're not suggesting we shouldn't have done this. Are you? I hope you're not suggesting that we shouldn't have done this income tax, giving money back to people through rebates and other ways.
No, I'm just curious where we expect the buoyancy coming from.
That's fine. All right. It was answered at that time. Anyway.
Okay, let me just see. We are talking about personal income tax, taxes on income, and we had 19.7% growth in 22-23. We have 25.4% in actual terms, and 24-25, 23-24, we had 25%, and 24-25, if you take the RE figures, growth is likely to be 20%. And what we have proposed for 25-26 is a growth of 14.4%. So we have moderated. I mean, we have been growing 20% almost on this plan, and we have made it 14%. Now coming to buoyancy, our buoyancy was in, for the taxes on income was 2.65 in 23-24. And 24-25 expected buoyancy is 2. And the buoyancy which has been assumed for 25-26 is 1.42. So you would see that we have assumed a moderate buoyancy looking into the sacrifice of revenue which has been done. So we have done our math. Thank you.
9.
Third row. Good evening, ma'am. Considering the government's measure to put more... Sorry, this is Chetan from Business Today. Considering that the government's measure to put in more money into the hands of the public, are you trying to mitigate the impact of a possible Trump tariff trade wars from the US? Or are you relying more on domestic production to ensure that Indians have a shield from the US trade wars if they happen to be so?
Well, I don't think we've gone that far to justify this income tax rate reduction. We've responded to the voice of the people and also made our own assessments, and therefore we've given this. And I thought there was an allegation also that we didn't respond to what may come through the US administration's tariff, whatever, decisions. Well, I don't think these two are connected, at least in the way in which we like to believe it. You may want to give a different dimension, but no, we have not done it with that intent.
64 at the back.
मैडम नमस्कार, मैं महावीर सिंह बोल रहा हूँ, फ्रीलांसिंग करता हूँ। आपने इनकम टैक्स में बड़ी राहत दी है, हम तो 10 लाख की उम्मीद कर रहे थे, आपने 12 लाख कर दिया एकदम। और मुझे लगता है कि क्या सरकार इनकम टैक्स रिजीम से हटकर एक्सपेंडिचर टैक्स रिजीम की तरफ जा रही है? जो आप इनकम टैक्स में आपने कहा कि इस राहत से 1 करोड़ लोग इससे बाहर हो जाएंगे और इसमें कम ग्रोथ होगी, और दूसरी तरफ आपका जो टैक्स रिसीट है वो बढ़ता जा रहा है, पूरे बजट का आकार बढ़ रहा है, तो सरकार क्या एक्सपेंडिचर टैक्स की तरफ ज्यादा झुकाव इसका दिख रहा है?
ये सिर्फ आने वाले साल के, मतलब अभी अप्रैल 1 से शुरू होने वाले साल के टैक्स प्रपोजल्स है। आप पिछले साल का रेवेन्यू को देख करके इससे ये कनेक्शन मत निकालिए। हम जनता के लिए, मिडिल क्लास के लिए राहत दिलाने के लिए प्रधानमंत्री जी के आदेश के अनुसार रेट रिडक्शन किया है, उतना ही है।
47.
Just to add that point, to give you a data point, direct taxes are supposed to increase by 12.7% next year. Indirect tax, which is on the, say when people buy goods and services, is expected to increase by 8%. So that should answer your question.
Yes.
हमारी सेंट्रल अमाउंट शामिल है.
एक इसी पॉइंट पे और यदि हम देखें डायरेक्ट टैक्स और इनडायरेक्ट टैक्स का रेशियो, तो वर्तमान साल में आरई में ये 1.39 है. तो डायरेक्ट टैक्स लगभग 139% है इनडायरेक्ट टैक्स का. अगले साल ये 145% है. तो जो आप कह रहे हैं उसका उल्टा है, डायरेक्ट टैक्सेस पे अधिक अगले साल राशि प्राप्त होगी एज कम्पेयर टू इनडायरेक्ट टैक्स.
और यदि हम देखा जाए बॉयंसी जो है वो इनडायरेक्ट टैक्सेस में 0.82 है, क्योंकि कस्टम्स जो है वो कोई अभी हमारे लिए एक रेवेन्यू का साधन नहीं है, वो एक बॉर्डर मेजर्स है. और बहुत समय में हमने ड्यूटी रिड्यूस भी की हैं, क्योंकि बहुत ज़्यादा हाई टैरिफ लगाने से भी उसके ठीक परिणाम नहीं. तो ये भी नहीं है. और CGST और सेस में हमारा जो बॉयंसी है वो सिर्फ 1.08 है. तो आप देखेंगे कि वो उसमें कोई एक्स्ट्रा हमारा करने का विचार नहीं है.
Ma'am, Prakash Predashi from ET now. Yeah. The KCC limit has been enhanced to 5 lakh. So any assessment on how this decision will boost rural consumption? Secondly, ma'am, the budget document mentions something about sharing transaction details of crypto assets. If you could elaborate.
Sharing transaction details of
Crypto assets.
Okay. Nagaraj, you want to say on the KCC? Increase in the KCC.
Yeah. This
Let me respond to the question on the KCC. This is to enable those farmers who are doing commercial cropping, they require more more crop loans are required. It will facilitate them, and government will provide the interest subvention for them up to limit of 5 lakhs. It is not first to assist the farmer. It is not a measure to boost rural consumption. That is not the intent. Intent is farmer needed more crop loans. It is to facilitate that. That is the purpose.
And 1 lakh it's been decided long time ago. High time it was changed.
The KCC loans are given at the 7% rate of interest. It's already subsidized by the government at 1.5%. Now, if the prompt repayment is there, there is another 3% to the farmer. The effective rate of interest on KCC loans is only 4%. Now, with the current announcement by the FM, there will be almost about 26 crore additional budgetary impact for this KCC loans.
45.
जहाँ तक क्रिप्टो का सवाल है, अभी हम क्रिप्टो पे टैक्स लगा रहे हैं. Although it's not a regulated entity, जैसे ब्लैक मनी में भी टैक्स लगता है, तो उसी तरह से क्रिप्टो में भी टैक्स लगता है. नहीं, मतलब रेगुलेशन ना होते हुए भी इट इज टैक्सेबल. उसमें OECD G20 के अंडर जो हमारा फ्रेमवर्क एग्रीमेंट है, उसमें 2027 से ये निश्चित किया है कि सब जो उसके सेक्रेटरीज हैं वो उसमें इंफॉर्मेशन शेयर करेंगे. तो उसके लिए टैक्स लॉ में ये व्यवस्था की जा रही है कि हम वो इंफॉर्मेशन गैदर करने का फ्रेमवर्क, जो रूल्स हमको बनाने हैं, वो हम कर लें.
Ma'am, Meghna Mittal from Money Control. The union budget has announced a big income tax relief in the new income tax regime.
Where's Meghna?
The budget has announced a big relief in the income tax. So in the new income tax regime, so how many taxpayers have moved to this new income tax regime? And does this also mean that are we phasing out finally the old tax regime?
75% जो हैं, 75% have already moved to the new tax regime under the individual category.
No, if we are phasing out, I would have said it, na?
The scheme is available, but we expect that almost everyone will shift now.
224.
Good evening, ma'am. Shishir from Hindu Business Line. One of the popular scheme has been sovereign gold bond scheme. We have not seen any of the issue during the current fiscal, and we are not getting any mention for the next fiscal. Does this mean that there is a curtain to this scheme?
Well, yes, Ajay. Yes, in a way, but Ajay can give you the detail. Yes.
See, these are the decisions which are taken. What the purpose is? One, of course, is to raise borrowings from the market uh, for the purpose of financing the budget, and at some point of time, whether this asset class is to be supported or not. But the conditions of the recent past of the experience has been that this has been rather a fairly high cost of borrowings for the government. As a result, for the last several quarters, government has not chosen to follow that path. As and when a formal decision is there, you will get to know.
Please go on.
223, left side. We'll take two more questions
Hello, hi.
after this.
Ruchika Chakravanshi from Business Standard. Just two things. One, if you could elaborate on the BIT that you've said that it will be made investor friendly. So will it be in the line with what we have with the UAE? And one, there is an increase in the corporate tax revenues also that have been projected in the FY26 budget. So what is the reason for you to, why are you expecting like a revival in corporate tax, which has been a bit of concern?
Well, on the BIT, I think I've stated the reason why we want to revamp it to make it more investor friendly. Yes, I can understand you quoting UAE and asking whether it is going to be in line with that. UAE was a bit more than, it was 2016 plus. It was more than the 2016 version of the BIT. But there is no particular template that I'm adhering to. We want to make it lots more robust and lots more investor friendly.
125.
Ma'am, good afternoon. Karishma from Business Today. Congratulations to you and everybody. Ma'am, Manrega has again, it's seen a stagnant allocation in the last 2 years, despite that this year's FY25's utilization has already peaked until December. Do you expect a mid-year revision? And ma'am, a quick clarification on crypto. When is the DA-led crypto paper likely to be released?
See, on Manrega, I think every year the same question is asked and every year we answer the same question. It is a demand-driven program. If as a result of increased demand, a state or another state, a third state wants money because their demand has to be met, the RE shows the numbers and we increase it. But just because of that, it doesn't mean that my BE will have to be on the enhanced note. Every year, the numbers, in fact, every crop season, post the crop season, the numbers vary. So as a demand-driven program, we'll certainly respond to it as and when the numbers come. On the crypto, when is the DA paper likely to come? You'll get to know when it comes out.
This is last 6 at the back. Ma'am, I'm Banikinga Patnaik from the Economic Times. In your speech, you have said that there would be a light touch regulatory framework and that a committee will be set up to review all non-financial sector rules and regulations. So, ma'am, is there, any possibility that it will also include financial sector regulations?
But even as I read the speech, there were two different things. One for the non-financial and another for the financial. The financial is still being looked through the FSDC, whereas the non-financial is where we have appointed or we are asking for an appointment of a high-level committee which will look at the regulations, particularly for compliance, for inspection, for certification. There are ever so many overlaps, friction points, pain points. So to sort that out, our approach is this: one, through the FSDC for the financial, and for the non-financial, several of them which are non-financial, the high-level committee.
Ma'am, again, in the nuclear energy space, there is an announcement that there could be more private participation sought. So is there any particular frame in mind that, how we are going to do it, or any incentives or something of that?
No, what I've announced at the moment is what stands, and the respective departments will go into the details and they'll come out after the year commences.
Thank you, ma'am. Thank you for that.
product, which of course is a humble masala chai, is a humble cutting chai. So why are we doing all of this? Why is Ashwini Vaishnav doing all of this? Well, the long and short is, number one, let's not forget the obvious out of the way, which is the masala chai tastes a lot better. But having addressed with the obvious, the other two key components why the Indian government is doing is number one, all the components that we added, the sugar, the ginger, the milk, what that essentially represents are tweaks that Indian engineers will be able to do on Indian servers to this DeepSeek model. Now, why would we want to do that? But let's bear in mind there were niggles with DeepSeek when it initially came out. It wouldn't accurately answer questions about, say, the 1962 war or the status of Arunachal Pradesh. So this masala chai, with all these components, represents tweaks that the Indian engineers will be able to do on the Indian servers so that it becomes slightly more comprehensive. But the second and perhaps a larger concern that the government has is that the government doesn't want you sipping tea from the Chinese cup of tea, as that will leave your imprint. And by your imprint, I mean your data with the Chinese servers. What the Indian government is essentially saying, let it come here and have a cup of tea from the Indian cup of tea, the Indian server, so that your imprint, your data stays safe within Indian shores. So this chai pa chacha is the long and short of why the Indian government is bringing DeepSeek on Indian servers to Indian shores.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at this time on CNBC TV18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. To get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of
Hello and welcome to CNBC TV18, India's budget headquarters, as we decode what Budget 2025 has delivered. Finance Minister Nirmala Sitharaman presenting her 8th consecutive budget, and it's been a record-breaking budget for many reasons, not just because it is her 8th, but also because she has delivered on the promise of providing relief to the middle class. We had gone into the budget with the focus on the 3 C's, capex, consumption, and consolidation. And the budget has managed to deliver on each one, but consumption clearly has been prioritized in Budget 2025. Joining us now is the top brass of FICCI, Harshvardhan Agarwal, Anant Goenka, Shubhrakanta Panda, and Nena Lal Kidwai. Nena, gentlemen, appreciate you joining us here on CNBC TV18. Harsh, let me start by asking you, as I pointed out, prioritizing consumption, giving in tax relief, much more than perhaps what was expected and anticipated. On balance, your big headline from Budget 2025.
Thank you, Shireen, for having us with you. Yes, I think, the tax relief up to no tax till 12 lakh, that's a very welcoming step, from the finance minister. Yes, it has been the expectation from the industry as well as, our recommendation from FICCI to the government that, yes, we should give some relief on tax for the middle class. But yes, we were not expecting, to the level of 12 lakhs. So it's a very welcoming move, and certainly it will help the overall consumption.
It will help overall consumption. That's the hope, and that is what the budget promises to deliver on. But Anant, let's talk about capex, and perhaps it is short of industry's expectations. But as I've been pointing out, the government has been signaling the fact that capex has perhaps peaked at that 11-12 lakh crore rupee number, coming in at 11.21 lakh crore rupees. Both on capex as well as consumption, the dual power of what that could mean for growth.
Yes, we hope for about a 15% increase on the 11.11 lakh crore investment. That didn't happen. But I'd still say that there are a lot of other indications that signify continued investment in the longer term. 100 gigawatts of nuclear power over the next 20 plus years. I think that is no small number that will result in a lot more investment in power transmission, distribution, and other investments that will come in. The UDAN scheme, where you're talking about regional connectivity, more airports, I think that's another big announcement. Jal Jeevan Yojana, I think that's another one. So across the board, there are underlying signals of continued investment in capex for the coming year. Yes, about 10%, 15% lower than what we expected.
Yes, certainly lower on that front, but more perhaps made up for or offset by the boost as far as tax measures are concerned to drive consumption. But Nena, let me come to you now with what the budget has delivered and what you believe this could do as far as accelerating growth is concerned. The budget pegs nominal GDP growth at 10.1%. What do you believe that this could do in terms of amplifying growth momentum from here?
I think what you've heard in terms of consumption and demand is a big amplifier. CapEx itself is a big amplifier. There was very clear mention of the MSME sectors and continued focus on that, more so on the labor-intensive MSMEs, special mention of footwear, leather, toys, service sectors like tourism, because employment generation is not just employment generation because it provides jobs, but because it will be the accelerator through demand and consumption. So for me, these are very important aspects. I would just add on the point of infrastructure. almost a relief that the funding plans for the Jal Jeevan Mission and Swachh Bharat Mission continue to see focus, because these are very critical urban deliverables for health and also for the way we keep our rivers clean. And all the sectors, I was just seeing the numbers and the increases then, whether it's the National Ganga Plan by 13%, River Basin Management increase of 70%, Jal Jeevan Mission by 198%, Swachh Bharat 145% increases. So the success government has had in the implementation of these projects is giving them confidence to be able to spend further, because the absorptive capacity of these sectors has demonstrated that they are able to spend this in a meaningful way.
Well, let me welcome Vijay Shankar onto the program as well. Vijay, let's talk about manufacturing, the National Manufacturing Mission being announced. Of course, details awaited on the operationalization, the focus on labor-intensive sectors like leather, footwear, toys, specific mention there of making India a global hub for toys. Even on the exports front, of course, work in progress that will identify sectors and measures that are needed to amp up exports. But on balance, as far as Make in India 3.0 is concerned, what does the budget deliver on?
Budget has delivered a lot on the operational front, Shireen. I think, you spoke about exports and, the export promotion mission between the Finance Ministry and the Commerce Ministry, as well as the Bharat Trade Net, allowing people, rationalization of rates across TCS and TDS. There are a lot of operational improvements which I think really improve the daily work of an exporter who's meaning to do more and crack open new export markets. Including the announcement by the FM on the fact that on transfer pricing you don't keep provisional assessments open for beyond 3 years. I think these are very major steps in relieving the lives of a daily businessman from very many hassles that he has to undergo today. I think there's a huge focus on manufacturing. I think, as Anand said earlier, the focus on the nuclear sector is, apart from the labor-intensive sectors that you spoke about, the focus on the nuclear energy is big. I'd like to also draw your attention to the focus on the shipbuilding and the shipping sector. Extending the tonnage tax relief to inland ships is a big benefit, as they want to focus more on inland water transportation. Focus on import relief for equipment in the shipbuilding sector. Again, I think the marine sector has got huge potential in India. We have just a very small portion of the world trade today as far as ships go, hardly 1 or 2%. And I think the Finance Minister has focused a lot on that sector.
Yes, he certainly has focused on some of those sectors. But let me get Shubhrakant into the conversation as well. Shubhrakant, of course, plenty on the tax front, the direct tax code, the simplification, etc. Taking that forward as far as both TCS, TDS is concerned. Even on the customs duty side, significant changes being announced. On balance, your big headline from Budget 2025.
Well, Shireen, I think the real takeaway from this budget has been the Finance Minister delivering on our request, and I think everybody had made the point about putting money into people's hands, and I think she's done it in spectacular fashion, because 1 lakh crores, is no mean amount, and that will find its way into the economy, that will find its way into consumption, and provide a much needed impetus to the growth momentum. But I think the common thread for me, which stood out through the budget presentation, was a focus on reforms. In fact, the FM specifically referred to reforms as the fuel of growth. And in this context, I think, talking about strengthening the rules-based approach to a trust-based approach, I think is what will pay a lot of dividend going ahead. And in that context, the measures like the Jan Vishwas bill and many other recommendations that we have made have found its way into the budget. So I think money in people's hand is important. It is going to flow into into the economy going ahead, and the focus on reforms to me are the big takeaways from this budget. Of course, many other aspects. In addition to the infrastructure outlay, etc., the funds for creative redevelopment of cities, I believe, is very significant, because as we grow as an economy to cross 5 trillion and more, Our cities are going to get larger. They need to be better managed. They need to be, more, easier to live in. So I think, we are really, seeing the building blocks of a real modern India being put into place.
Okay, Mr. Kanabar, you're perhaps going to be the busiest of our panel this afternoon, sir. I'm sure the phones are ringing off the hook, trying to understand the many changes that have come in, not just for personal income tax, but also, the simplification related to TDS, TCS, safe harbor rules, the GIFT City, and so on and so forth. What would you say were the key highlights as far as the tax part of this budget was concerned? What would you rate this budget on the tax front?
So before I come to just a humorous comment to say that if the new direct taxes bill, as it is proposed to be introduced after a week, is as simple as she makes out, then maybe I'll have to look for another job. So, but that's a separate matter altogether. But having said that, lots and lots of changes and lots of very welcome changes, Shirin, because if you look at it, most of the changes, for example, you go back and say that your price determination for transfer pricing is not for 1 year, but for 3 years. That's very, very welcome. Similarly, if you go back and say that you have a presence in India, but that is only for the purpose of exports, that will not constitute a taxable presence. Again, very, very welcome. Then again, since the sunset provisions being extended for startups, etc., by 5 years, most of the provisions of the GIFT City being extended by 5 years, again, all very, very welcome. The extension of GIFT City to leasing of shipping, again, very, very welcome. So huge number of changes. There are some small changes which are a cause of concern. There is, for example, a retrospective amendment on a Supreme Court judgment in the case of safari retreats. I won't go into all of them. But overall, I would say from a tax perspective, a great attempt to simplify and provide a roadmap for the next 5 years rather than deal with a year at a time, which I think is very, very welcome.
Let's talk about what this can mean now as far as the immediate term is concerned for consumption. And Harsh, we'd started to see a pickup as far as rural was concerned. Urban was still feeling the pinch after what has been announced today by way of tax relief. How immediate do we expect the change to be, the pickup to be? Are we still talking at least a few quarters out?
Shane, I believe, because this has the potential to bring the money in the hand of the consumers. But yes, it might not happen, immediately from next month. I would say maybe, at least we need to wait for another month, another quarter or so before we see the impact of this on the consumption. But apart from this step of the tax reduction, there are many other areas, which has the potential to improve the consumption, the things that she has done for the rural, the agriculture. So it's a very inclusive budget, where, again, if the income at the farm level, at the agriculture level increases, so that also has the potential to boost the consumption. These things also, if the consumption increases, it will help in improving the private investment, which we all are talking about, it's not growing or it's not happening as per the expectation. So I think this is a big move and this has the potential to impact in many ways in the economy.
Yes, Anant, going back to the changes, and we've also seen, even as far as the auto sector is concerned, specific changes. In fact, the customs duties on CBUs has been cut across cars, and I'm given to understand across two-wheelers as well. Specifically from the auto sector's point of view, anything, and of course, lots there on the clean energy transition, batteries, and so on and so forth. Anything there in specific that you liked?
Yeah, I think there was a boost towards electrification. So there was a fair amount of mention on a battery, on rare minerals, and making that more accessible for battery manufacturing and storage. Recycling of battery is likely to get a fair amount of boost over time, and general mention of clean tech across the board. Besides that, I would say there was not much else. We are seeing fairly positive headwinds today on the two-wheeler sector and on the farm sector, positive tailwinds on SUVs. I think it is the CV and passenger segment that we hope to see increase, but not much mention on the budget, largely on the auto sector, except for a thrust on making EVs more real.
Yes, and there is, of course, an allocation there as far as the PM e-Vahan scheme, etc. is concerned. But Naina, now the budget is done. All eyes shift to the MPC and whether we will see a rate cut being delivered by the MPC. But, two questions there. One, do you expect a rate cut? Two, between the budget and a rate cut, do you really expect a pickup as far as private capex is concerned, which is the ask of the government? And my second question, with the changes that have been brought in as far as the new tax regime is concerned, do you anticipate that we'll now shift, whatever was remaining on the old tax side will now shift and it'll be the sunsetting on the old tax regime? Because the insurance companies, for instance, reacting negatively to that, because the tax breaks don't exist on the new tax regime side.
So I think, Shireen, it's a journey. The direction is right. Are we ever happy with what we get? No, we always want more. Does private sector capex go up just because demand and consumption is addressed to some extent through the changes in this budget? Not in itself. So the issues in terms of challenges of ease of doing business, the way trade might develop, even while we look through thrust exports with all the advantages of presenting and being part of a global supply chain with the China +1 type of strategy, is happening at a time where tariffs are going up, certainly from one of our biggest trading partners, being the US. So there are headwinds in trade and exports, which may in fact get in the way of our own thrust in exports. So we can only do what we can do, putting domestic consumption, job creation at the local level, domestic tourism, etc., is in our hands. And even while we push to be part of that export chain. I just think if I can come in on finance and related areas where there's been some stress, as you well know, in microfinance. And I'm glad to see that got mentioned in this budget with the Grameen credit scores framework for SAG members being looked at, because we really don't want to get into the situation we had many years ago in microfinance, or indeed in personal loans, where the credit data does not allow us to capture multiple loans by the same individual. So focus on that, focus on revamping the KYC registry. These are all going to be helpful in terms of the financial infrastructure that we need to help that growth and consumption. And I think if we can also look at what the advantages on the mergers and acquisitions, FDI and insurance bring, these are significant for those industries specifically and should not be forgotten.
Yes, point well taken there, Naina. And of course, just continuing with that, the measures that have been undertaken for MSMEs, including the change in classification, credit guarantee enhancement. Shubhrikant, what does all of that bode as far as the MSME sector is concerned?
So, Shireen, as far as the MSME sector is concerned, I think there's a lot of focus on that, and rightly so, because MSMEs are the backbone of any economy, and India is obviously not an exception, but is perhaps even more so in our case here. So something that we have been advocating for, which is an increase in the threshold of the definition of MSME, so increase in the threshold pertaining to investments and turnover, that has been granted, as well as a higher limit for the credit guarantees. So all of that will help, bring more money into SMEs, make credit available. But that apart, I think the general focus in terms of, even the export promotion mission, where it's not just the commerce and the finance ministries, but also the MSME ministry, which comes into play, I think is important. We are in a situation where, domestically speaking, our fundamentals are very strong. We have the benefit of a unified domestic market, but unquestionably there are external headwinds, and that is something that cannot be ignored. And in that context, I think MSMEs need hand-holding, and this budget does have plenty on offer in terms of hand-holding and MSMEs. and see that they continue to play an integral role in India's growth story, thereby making growth more broad-based, more inclusive, and also with a positive impact on jobs. Because as you know, I think the most important outcome of supporting MSMEs is a boost to job creation, especially when a lot has been talked about the labor